Good morning and welcome. This is NDTV Profit. My name is Alex Matthew and you're watching All You Need to Know. Like the name suggests, we try to get you up to speed with everything that you need to know before the start of your day. Let's start with the headlines. A new record in the land of the rising sun. Japan's Nikkei crosses the 40,000 mark, and US futures indicate a muted start to the week after benchmarks close at record highs. Prime Minister Modi unveils 2047 vision document for a developed India. 1 lakh crore budget has also been set out for future technologies. Indian benchmarks close at record highs on special Saturday session. The charts are pointing to a bullish trend. The gift Nifty as well is indicating a positive start to the week. The OPEC Plus extends oil production cuts by 4 months and output will be cut by a total of 2 million barrels per day. India will become a major exporter of semiconductors, says Ashwini Vaishnav in an exclusive interview with NDTV Profit. Let's begin with a check on the global markets. Asian markets are buzzing as Japan's Nikkei 225 has crossed the 40,000 mark. But US futures are lower at the start of the week, indicating a bit of a muted start. That's after they ended the day or ended Friday at record highs. Crude is in focus at the start of the week. OPEC Plus has extended its oil supply cuts to the middle of the year in a bid to avert a global surplus and to shore up prices. The curbs, which on paper total roughly 2 million barrels a day, will remain in place until the end of June, according to statements from members such as Saudi Arabia, which accounts for half of the pledged reduction, and certain others. Russia has promised to strengthen its roles by focusing more on cuts to production than exports. These latest output curbs, which deepen reductions that were made last year, will be returned gradually, subject to market conditions after the second quarter, as per the participating countries, which said this in statements over the weekend. Now, ample supplies have kept international oil prices more or less at that $80 per barrel mark or around that range, even as the conflict in West Asia has disrupted regional shipping in the region. As of this morning, Brent was trading very close to the $84 to the barrel mark. In more international news, Egypt on Sunday hosted envoys for talks on a ceasefire between Israel and Hamas. The latest diplomatic effort is underway as Gaza officials have in fact reported more deadly bombardment in the nearly 5-month-old war. A senior Hamas official told the AFP that a delegation from the Palestinian group would discuss with mediators a proposal for a 6-week truce after US officials said that Israel had broadly accepted its terms. Now let's continue to focus on crude oil, because that really is going to be what the market perhaps looks at the start of the week. And Vandana Hari of Vanda Insights is joining us to give us some perspective on that this morning. Vandana, thanks so much for taking the time and for speaking to us this morning. First, of course, could you give us a sense of what you made of the latest announcement by the OPEC Plus? Consensus seems to have been built. Was that something that you were expecting?
Good morning. So absolutely, I think the market had baked in a rollover. OPEC didn't really have too many options. The 2.2 million barrels per day of cuts, had they removed them, it would have sent crude prices spiraling down. And I would say there's at least $6 to $7 per barrel of a risk premium on account of the Gaza crisis. So should a ceasefire there come into fruition, we could have seen crude going towards $70 a barrel. And, that's really the pain point for OPEC Plus. It wouldn't want to see that. So there wasn't any option. I think the market will all remain focused on the fact that OPEC is making these decisions for very short periods at a time, which is quite a departure from the past. When it would announce cuts, especially, it would announce them for an entire year in advance. Now we are seeing them being rolled over from quarter to quarter.
Does that make it harder for the research community and for watchers of crude oil to really predict the direction that it's heading?
Great question. There's a great deal of uncertainty, unpredictability, and a wide divergence in the community of analysts. And, that includes analysts that work for OPEC, the International Energy Agency, the US Energy Information Administration, wide divergence on the outlook, overall outlook, supply-demand balances through the end of this year, and especially focused on demand growth. So if you just look at all the analyst expectations or predictions out there, it's a range in a range of 1 million barrel per day annual growth, which would be, I would call that very, very modest, to as much as 2.2. And, on the very optimistic side, of course, is OPEC. So that's another intriguing factor for the market, that OPEC, on the one hand, is very bullish on demand growth, putting it at 2.2 million barrels per day this year. And at the same time, it appears very cautious and careful and almost fearful of prices going down, which is resulting in these cuts.
Interesting. I want to try and break this down, Vandana, into two parts so that my viewers get a sense. And bear in mind, of course, that they don't watch this market on a daily basis. So I'm going to try and break this down on the demand side pulls and on the supply side as well. We've kind of spoken about supply side, but on the demand side, what are the inventory levels in places like the US and also the China factor tell you about the path going forward? Of course, knowing that it's a little uncertain right now.
Yeah, it's, as you quite rightly point out, quite a complex market, a lot of factors to take into account. If you look at the US inventories on a very, very short-term basis, so let's say just from January, US inventories have actually been rising. And, we're talking of crude here. Because US refining out throughput has been very low, some because of unforeseen outages at refineries, because of the cold snap and so on in Jan and Feb, some because this is the traditional maintenance season for refineries. But if you take a slightly longer term view and zoom out a little bit into overall OECD inventories, which is the most transparent and most closely watched by the markets, OECD inventories have actually declined through the end of last year and are expected to decline through the first first quarter of this year. I think the market is more worried about what happens to supply-demand balance and inventories going out into the remaining 3 quarters of this year. And that's where, as I mentioned, the market is very, very divided on whether it's going to be a supply deficit and result in a little bit of a pull out of inventories. But the majority view right now appears to be that it will be a surplus and lead more oil flowing into inventories, which is bearish for the market.
Finally, what role would US producers play in keeping the prices capped to a certain extent? As a layperson watching the market, I think the expectation is that at higher levels you have US producers that come in and supply more. Is that the right understanding to have?
Yeah, absolutely. When you look at the supply scene, you wouldn't be too wrong if you are not a specialist to focus pretty much on what's happening in the US, to some extent in Canada, places like Guyana, Brazil, which are all increasing production. US production jumped up by nearly 1 million barrels per day last year. It took a lot of people by surprise, including some of the shale producers in the US. This year, the jump is not going to be that big, but keep in mind that US production has now reached, not only recovered from the hit of COVID, but reached all-time highs of around 13 million barrels per day. That's 13% of global production. And of course, it's totally dependent on if the economics work, if the prices work for the shale producers, and at current levels, they definitely do, they will continue producing. So as I said, not that much of a jump expected, probably 200,000 to 300,000 barrels per day year-on-year growth. But the US, yes, it is putting a lot of additional oil into the market, which is, obviously something that OPEC Plus needs to keep an eye on and respond to in the form of cuts if it wants to keep a certain floor or maybe even prop prices up to a certain desired level. Okay,
last quick question, Vandana. Based on everything that we've spoken about so far and your own expectations, what is the range that you expect for Brent?
I'm quite conservative, compared to, I suppose, some of the more bullish voices you hear in the market. I think, once this geopolitical fear premium is gone, and I do believe it'll be a short-term, probably, arrangement, but there will be a ceasefire. And one way or another, look, this is the election year in the US. The US will do everything it can, and it does have a great deal of power in this Middle East crisis. It'll do everything it can in its power to keep prices low at the pump. So I am expecting high 70s, around 80 as an average for this year.
Thank you so much, Vandana, for joining in and giving us that perspective.
Thank you.
All right, let's turn to the Indian equity markets. And you had a special trading session over the weekend, and that's also something to bear in mind. And Agam is here to give you the latest news from the F&O space. Agam, good morning. Record highs over the weekend, not something that we speak about every day, but then we've had 2 weekend sessions in the recent past.
Sure.
What are you taking into the new week?
Right, on expected lines, the volumes weren't very high because we just had 2 hours of trading. That said, we are on a very strong base at the moment, considering with the indices closed at a life high, with the Nifty now inching towards the mark of 22,500. And at the moment, there is some sort of an expectation that there could be some amount of consolidation, maybe even about a profit booking. The question really is, when does that happen? Because it's very, very hard to time such markets, especially when markets are seeing so much strength. But that said, as far as Saturday goes, we did see a little bit of unwinding in open interest to the tune of around 1.5%. A lot of the data and the factors that we are presenting today may not have a significant bearing to how trade could pan out. That's only because, well, it was a truncated session as well. Well, moving on to the Bank Nifty as well, not too much change in the underlying or, for that matter, the open interest. Where are we looking at when it comes to the options market? Have things changed substantially there? Let's pull that out as well and see where things are changing as far as the options market goes. So there you have it. So we did see a little bit of unwinding in puts, naturally, because of the Nifty moving higher, and that is this is indicative of the kind of move that we see in this 22,000 call. What about the overall open interest? Well, we continue to see a base building of sorts around the 22,000 mark, because now it is also the one with the max OI, that's the put here. And on the higher end, we see the max OI and calls shift from 22,500 to all the way up to 22,800. So we can keep an eye on these levels for the Nifty, so it's moving into this week. And as far as stocks go, well, longs across, we did see a lot of strength in the broader markets. And SAIL, NALCO, IEX, Havells, as well as Canara Bank, all of them looking at advances. And in terms of stocks which are seeing unwinding, I reckon that there won't be too much. Sure, there was ICICI Lombard and Godrej Consumer, which to see about a short covering. And otherwise, Metropolis, Coromandel, and Nestle looking at just about a little bit of longs and winding coming through. Overall, Alex, we're watching out for the indices, but perhaps we could expect some consolidation as we move this week.
Thanks so much, Agam, for bringing us those details. Now, NDTV has reported, quoting sources, that Prime Minister Narendra Modi over the weekend presented a Vision India document for 2047, saying that planning for Viksit Bharat, or developed India, by then is a priority. At a meeting of the Council of Ministers, he said that the plan hinges on empowering citizens and creating a sustainable economy. The 25-year plan envisions India as a developed nation, providing leadership to the world in technology and innovation. Some of the key highlights from that meeting were that 2,700 meetings were undertaken across ministries between the 21st of December, or rather December 2021 and Jan 2024. The government examined as many as 450 recommendations and consulted 15 stakeholders. Viksit Bharat seminars will be included in the agenda of every department of the government. And finally, 1 lakh crore of a budget has been set aside for future technologies going forward. Now, it's time for a very quick break. And before we slip into that break, though, take a look at this. It's a slice of a conversation that my colleague Tamanna had with Union Minister Ashwini Vaishnav, and he's sharing his insight into India's push towards becoming a global semiconductor hub. Listen in.
This is a 20-year journey. This is not a 1-year or 2-year program. Creating a new industry in a country, correct? So our Prime Minister has given us a clear target that we should prepare a roadmap for 20 years. So the way we have structured this entire thing is get all the technologies, develop the technologies, start the R&D process, then move on to designing complete chipset, manufacturing them in India and exporting them, then come to advanced research. It's a very properly laid out 20-year program on which we are working, and we have a very robust team of technical experts. Some of the best global experts are working with us. They are the ones who are evaluating everything. They are the ones who are giving us the right advice. They are the ones who are structuring the entire journey. And these are really very well-renowned names in the semiconductor industry, and luckily, and this is something very interesting.
Hello and welcome to NDTV Profit. Today we will talk about tattoos and the worth of this market. The history of tattoos in India can be traced back to prehistoric times when tribal people were captivated by drawings on stone or wood walls. Their attempt to replicate these figures through needles gave birth to the practice of inking skin. Over the course of time, tattoos were embraced by tribals as a mark of bravery, war, religious beliefs, customs, marital status, protection from the male gaze, and so on and so forth. Today, in 2024, tattoos have become a means to express thoughts, individuality, personal experiences, and sentimental designs. The industry is estimated to generate over 20,000 crore rupees per year. What is driving this growth? One of the key drivers behind the growth of the tattoo market is the rising demand for customized and unique designs. Improved technological equipment for making advanced, safer, and painless tattoos have boosted the market. The laser technology for removal or modification of tattoos have also added to the surge. Increased exposure and promotion of tattoo designs on social media have led to widespread influence of tattoo culture on the youth. Take a look at these figures now. As per Fortune Business Insights, the global tattoo market is projected to grow from $2.04 billion in 2023 to $3.93 billion by 2030 at a compound annual growth rate of 9.87%. This is a sharp rise from 3.8% year-on-year growth between 2017 and 2022. As per Custom Market Insights, the diamond jewelry market is expected to grow at a compound annual growth rate of 5.5% by 2032, while the luxury jewelry market at a rate of 8.9%, but the tattoo market is estimated to grow at 9.5%. Is the tattoo business lucrative? According to an article by Opportunity India, tattoo kits are now easily available for less than rupees.
Welcome back. You're watching All You Need to Know. It's time now to turn to the stocks that you should watch out for before the start of trade and the stocks in the news. Let's bring in Anushi at the start to give you the stocks on her list. Morning, Anushi. What do you have for us today?
Hey, morning, Alex. So I'll start off with MOIL, which is in focus on back of its business update. So about 15% growth in its production for the month of Feb. While if you look at the 9-month till the whole February scenario, about 37% growth over here. Similarly, even sales clocking about 32% growth up to Feb 24. While for the month of Feb itself, the sales were up about 18% year on year. Moving on to a whole list of real estate stocks over here, which are in focus. Firstly is the Signature Global, which has recorded about 3,000 crore of sales for its Deluxe DXP premium residential project in Gurugram. So along with this, it received an oversubscription about 5.4x for the units it has held out for sale. Moving on to Godrej Properties, the company has agreed to develop a township project on 62-acre parcel in North Bengaluru. This has a estimated booking value of up to 5,000 crore, and the first phase of this is expected to launch in the FY25 period. Brigade Enterprise similarly has launched a El Dorado residential project in Bengaluru with a revenue potential of about 380 crore over year. This project is spread over 0.5 million square feet, which is a part of a larger project which is of a total 6.1 million square feet of land. And lastly, I just want you to keep an eye out for NTPC as well, after the company has approved rupees 17,200 crore of investment for its Singrauli thermal project. So these are some of the key stocks that you should be watching out for today.
Got it. Thanks so much, Anushi, for getting us those details. There's more, in fact, to focus in on, and Varsha has got a new list to talk about. Varsha, what's on your list? Morning.
Good morning, Alex. So let's start with Patel Engineering, wherein a company in collaboration with its joint venture partner gets LOA, letter of acceptance from Telangana government for contract of rupees 525 crore. Now this contract is for RCC projection wall project, and company share, since it's JV, company share in contract stands at 268 crore. Then we have PSP projects, wherein they've received new work orders for rupees 386 crore, out of which 268 is for construction and maintenance order for Gujarat Science City, and 118 crore order is for construction of commercial building at Gift City. Total order inflow till date is almost 3,000 crores. Also, company has emerged as lowest bidder for construction of fintech building for Gujarat International Finance, for which project value is 333 crore, and this project needs to be completed within 30 months. Then we have SJVN. We do have SJVN, where wholly owned subsidiary of the company SJVN Green has got an 200 megawatt Gujarat solar park project. The project is around worth rupees 1100 crores. Yeah.
Got it. Thanks so much, Varsha, for getting us those details. Now, over the weekend, you saw most of the auto companies wrap up the sales reporting for the month of February, and we've got Harsh joining in to give you some perspective on the auto pack. Harsh, morning. What are you picking up?
Well, yes, Alex, let me first start off with some of the laggards. CV was a laggard in this month, especially on the MHCV side. There was a bit of tepidness, and that was reflecting in the numbers. There you go. With regard to Ashok Leyland, Tata Motors, overall CV volumes were lower. When it comes to two-wheelers, though, a good set of numbers by both TVS as well as Bajaj Auto. Eicher Motors not so good. Some pressure on Eicher Motors on the back of good competition coming in that segment. In terms of where M&M's PV numbers were concerned, especially on the SUV side of things, very strong numbers clocked in by M&M. So that seems to be on an uptrend. Maruti also decentish set declared around a 15% odd growth in terms of PV units. Let me quickly, though, move on, try and see what Citi is looking at in terms of some of these numbers. You're looking at what they're suggesting is Ashok Leyland, Tata Motors numbers were down. Escorts, M&M, tractor sales also slightly lower. I missed that point, but yes, tractor sales were lower as well, and therefore Escorts and M&M was slightly lower. Maruti is their top pick for Citi. They prefer Endurance Tech, which is a supplier of major two-wheeler OEMs. Demand momentum is expected to sustain in the PV segment. They have seen good performance from Maruti. Tata Motors also 20% growth odd, and you're also seeing very solid growth from M&M and Maruti. What you're seeing on the MHCV as well as the tractor side, continued weakness given the back of agri demand, which has been tepid. Ashok Leyland as well as Tata Motors on the CV side of things, domestic volume was down. So those are largely the trends which are playing out, Alex.
Got it. Thanks so much, Harsh, for getting us those details. Sticking with brokerage views, you've got Citi that has maintained a positive view on telecom, and we've also got MK that has raised the target for chalet hotels. Mahima is joining in with the details. Mahima, what can you tell us? Morning.
Morning, Alex. So firstly, I'll pick up Citi on telecom, where they've covered three different companies: Vodafone Idea, Indus Tower and Bharti Airtel. They've said that for Indus Tower, they've reiterated near-term positive view with a target price of 320 rupees. And for Bharti Airtel, they've maintained a medium positive view with a target price of 1305. Now for Bharti Airtel, they're saying that it hopes to achieve around rupees 300 of ARPU by March 25, which can indicate a certain price and tariff hikes. Then for Indus Towers, they've said that it is particularly well placed and it can benefit in the short term. But for Vodafone Idea, they've said that one thing that is good about the equity fundraising of 20,000 crore is that they've given timelines, which is good, which is a good positive view about them. Also, a favorable outcome for the AGR case with SC could be a positive for Vodafone if it fructifies. And lastly, we have MK on Chalet, which reiterates ad rating and raises its target price to 825. So overall, this is what the brokerages are saying about telecom and Chalet.
Got it. Thanks so much, Mahima, for bringing us those details. That brings us to the end of this particular edition of All You Need to Know. Up next is India Market Open, so do stay tuned. This is NDTV Profit.
completed 50 years in India. PM Modi will attend the Silver Jubilee celebrations of the Gujarat Cooperative Milk Marketing Federation, the owner of Amul. At one point of time or the other, we've all grown up with Amul butter or milk for sure. The famous Amul girl created in 1967 is family. We all recognize her. But as the brand grows 50 years old today, do you remember the full form of Amul? It is Anand Milk Union Limited. From producing 250 litres of milk per day since the time Amul was formed back in the mid-90s to today, where Amul has over 36 lakh dairy farmers and produces nearly 300 lakh litres of milk per day, the brand has had a long journey. The story goes way back in time. In the 1940s, dairy farmers were worried. The middlemen exploited their ways of profitable income, and a poor milk production system made their living difficult. Tribhuvan Das Patel and Verghese Kurian identified these issues and helped in the formation of the first milk union called Kaira District Cooperative Milk Producers Union in 1946. The cooperative model gave farmers direct ownership of the dairy industry. The union helped them process, market and sell milk and milk products without the interruption of intermediaries. And it was in 1955 that this union chose a brand name for itself called Amul, which means priceless in Sanskrit. And then, in 1973, Amul Dairy, along with 16 other district cooperatives, formed the Gujarat Cooperative Milk Marketing Federation, which has now completed 50 years in India. Amul also started India's white revolution that made our country the world's biggest maker of milk and milk products. The brand follows an umbrella marketing technique which has helped GCMMF prevent association clashes and keep an open door for the patrons to coordinate in creating items. As per a report by Statista, the annual sales turnover of Amul from 2011 to 2023 has consistently risen, recording about 55,000 crore rupees of turnover in 2022-2023 alone. And did you know, Amul has also held a Guinness World Record for having the longest continuous run of any advertising campaign that has ever taken place anywhere in the universe. Amul Doodh Pita Hai India and Utterly Butterly Delicious will always strike a chord. Let us know which famous advertising phrases of Amul do you remember.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam.
Hello and welcome. You're watching India Market Open. It looks like we're setting ourselves up for an exciting week. Weekend trading was great, guys. We made 22,400. It was a touch and go, but nevertheless, I wouldn't be surprised if you get an opening above those on back of strong global cues as well. So lots of action without too much action.
I mean, you can't ask for a better combination of factors, at least as far as the Monday morning goes. Global cues are fantastic. Saturday's truncated trading session, Neeraj, you and Samina were here, were amazing. So, you know, you have a great setup.
Yeah, and just vindicates the buy on dips theory that everybody's talking about.
Yeah.
Every dip getting
a little bit of a
into.
hiccup last week, and now suddenly we are back in the green.
I mean, I don't even know if it was buy on dips as far as Wall Street is concerned. I mean, there is...
I mean, India.
India,
yeah.
Definitely. But overall, if I look at the US and I look at Japan, just unbelievable what's happening there. Let me start with the global cues as well, and the US markets first. Now, there seems to be a thought process solidifying that let's stop getting obsessed with when the Fed will cut rates and bet and put our focus on tech stocks and the AI boom. That's exactly what we saw happening in Friday's trade on Wall Street. The Nasdaq has closed at an all-time high, about 2% up. And of course, it's not just NVIDIA. All your mega caps are really pushing this bull run. In fact, all indices did fairly well. The Dow was slightly down, but the S&P 500 also managed to close above 5,100 for the first time. The Nasdaq hit an all-time high mark and then retraced. So you had the Dow, the Nasdaq doing pretty well. Dow futures are slightly in the red. But just for perspective, think about it this way. NVIDIA has gone up, the stock price has gone up 260% in a year. And more is being expected. On the bonds front, so it was a huge week of data, of economic data for the US economy and markets, and that has been digested. Bonds are not doing too badly. They dipped below the 4.2% mark, but they're back up because the cues coming in from that economic data are not pointing to a rate cut anytime soon. So there's some bit of concern over there. Crude is going to be the big story, and no massive jump up. But yes, the fact that OPEC Plus, as was being expected, has extended their production cut. So their 2 million barrels a day production cut, which they had in Q1, they're going to increase it to the end of June. That has pushed up crude prices a tad. NYMEX also above $80. Brent is above 83, nearly $84 at one point. But yeah, look at Asia. All the focus over there. And no stopping Nikkei once again. It smashed the 40,000 mark. Easy breezy. Last I checked, all of Asia was up in the green, at least the major indices. We can pull that up and look at what's happening again. So, okay, Hang Seng and Shanghai have seen a bit of a dip, but Nikkei definitely looking positive. Let's pull up the implied open as well while we're at it and see how we're set up. Completely flat. And you probably saw that in the volumes. I'm just going to quickly go through the DI-FI volumes, knowing that this was a massively truncated Saturday trading session, but nevertheless, you had some activity. In all of Feb, though, FPIs have turned buyers versus January. So about 1,500 odd crores of buys in equities have also come in. They will probably, if I reckon, increase as we get closer to the elections, and that's something we're going to be talking about later.
Most certainly, yeah. Looking forward to that on the editor's cut as well. So by the way, so Asia, I mean, Kospi also is above 0.5%. So Korea is making a comeback. Japan is doing extremely well. So that whole market is doing great. And just I'm leaving aside what happened on Saturday, to be honest, but just look at what happened on Friday and the kind of candles that you saw in Friday's session, and just that if you were a technical chartist, and I'm not, but if you just map what happened on Friday versus what's happened in the preceding week and the small scares that we had, Friday just took out everything that could have a bear could have thought was ammo, so to say. And really a resounding victory for the bulls in Friday's session. And that sentiment of dip buying and the follow-on thrust continues. I would reckon that would be the case. And in fact, Sikanaran writes about it. I'll bring it up in a bit. When I look at, or what I look at more closely is what the open interest data is suggesting. And 22,400 now has a very large call open interest. Now remember what happened in Friday's session, aside of everything else, was that 22,200 and 22,300. Those strikes saw a fair degree of short covering as well. If the thrust continues into our markets during the course of the day, and if there is some bit of short covering today, tomorrow, day after, whenever, then that could actually add further fuel to the fire for some more upside. So watch out. This strike is important because there's fairly large call open interest stated at 22,400. So that's to be kept in mind. And the other thing, that while we talk about global cues, DXY has just started to weaken a little bit. I was reading a couple of global notes which spoke about the possibilities of this further happening. And if indeed the dollar index weakens further, and if indeed rupee strengthens, maybe there's a further thrust to the index as well. And based on all of this and the last week trading patterns, you can't take your eyes off three things. Metals, strong move the whole of last week. And at some point of time on editor's cut this week, viewers, we will try and talk about metals. So metals and real estate, based on the trading patterns of the last week, arguably are the strongest sectors to watch out for. But before we talk anything else, just thought, a bit of a shameless plug here, but frankly, what Dr. Sikanaran writes on NDTVProfit.com every weekend is worth reading. I'm taking a small cue from his note over this weekend because it is pertinent he mentions that the thrust to all-time highs has a high probability of a continuation ahead. The small caveat is for the time cycle on Monday to be crossed. So let's assume Monday goes across unhindered, in which case CK says that the supportive evidences by way of momentum and sentiment favored sectors should enable us to hit new highs at 23,200. This is talking about the current cycle, not the year. So watch out. There is some bit of momentum, and that momentum may well continue, guys. The bulls, I can easily tell you, you can tell me, we can tell everybody, the bulls aren't complaining.
Yeah.
Well, they aren't complaining for sure, and the NSE seems to be adding more and more of those bulls. In fact, just quickly highlight data for you. Unique registered investors on the NSE has now surpassed the 9 crore mark, with the latest 1 crore additions taking place in just 5 months. And this is the latest data that we have in. The investor base has more than jumped threefold in the last 5 years, facilitated by rapid growth in digitization. So participation is only moving up, and that's very obvious from the SIP numbers that we see coming into the markets month on month, but crossing the 9 crore mark on the NSE. So it's bulls in full-fledged at this time for Indian markets. Lots of stocks that we'll be tracking. There'll be some that have reacted already in terms of trade on Saturday, but I wouldn't put it past counters like an Aurobindo to see a further reaction this morning as well. But let's take you through the stocks that came out on the weekend that we are tracking this morning. MOIL, it's been a fantastic February for MOIL. They've achieved their best ever monthly sales, coming in at 1.51 lakh ton of manganese ore, which is the highest ever. It's high by 15% year on year. The stock was up 2.7% on Saturday, but remember, volumes were light, so you could see a follow-on reaction into today's trade as well. Production was up 38%. Coming in at 15.84 lakh crores in up to Feb 24. So this one will be an interesting one, a reaction more than likely on the counter in early hours of trade. Info Edge, a little bit of back and forth on Info Edge. Fortunately for them, they reacted to the bad news from Friday on Saturday itself. They will be reacting positively to some good news this morning. Just to take you through what happened over the last few days, Google had delisted 5 of Info Edge's apps, the flagship Naukri app, Naukri Recruiter, Naukri Gulf, 99 Acres, and Shiksha. This morning, we believe Naukri Job Seeker, Naukri Gulf Job Search, and 99 Acres have been reinstated on Google Play. Management has indicated that they're working closely with Google to reinstate Naukri Recruiter and Shiksha as well. Markets will be pleased. Investors will give this news a thumbs up. The counter will see a positive up move in trade this morning. Well, real estate is also buzzing. Godrej Properties kickstarts its township development of 62 acres land parcel in North Bangalore. Remember, this is not their home market, so it's interesting to see how the expansion is underway geographically for counters like Godrej Properties. And this is a big one. We believe the township project is estimated to have a booking value of about 5,000 odd crores, and they will be launching the first phase of development in FY25, which means, of course, after the next quarter. But a big announcement, sentimentally a huge positive. So those are the 3 on my radar this morning, and I'm also quickly going to mention Aurobindo Pharma. This one's important because they've got approval for a drug that's come through, and this one will see a reaction in trade. Aurobindo was up 5% on Saturday, again on light volumes, but Finglo mid capsules are indicated to treat patients with relapsing forms of multiple sclerosis. The addressable market size of this, and that's why you will see a good reaction on the counter this morning, is $447 million for the first 12 months ending Jan 2024. The stock's up about 130%. It's up 30% itself in the past 1 month, and hence this one also becomes important, guys. It's a big drug and a big market.
And the US data that has come out on Friday was very, very strong as well. So generic makers are in a bit of a role, really.
So pharma is in focus. I just wanted to add to the Info Edge stock and the bigger story there that Samina was talking about. Yes, relief for Info Edge, but not for all Indian apps. So there is a statement by the IAMAI, which is the association, saying that there are a host of apps which have still found themselves locked out of Google Play and the Google Play Store. And this is going to be a big issue for the whole space, because if you're not on Google, do you really even exist if you're not on the Play Store from an Indian market perspective? In terms of market share, they're extremely dominant. They want to increase their charges. Apps have been saying, no, please don't. That's the crux of the story. So interesting one to watch out for. Just a set of stocks that are on my list today, definitely auto stocks. So a lot of their numbers came out on Friday. Maruti after market hours probably saw some reaction on Saturday as well. But the City note caught my eye because Feb has not been half bad at all, especially for a Tata Motors and M&M as well. M&M has seen 40% increase in sales year on year. Great numbers over there. The comeback of the two-wheelers continues to be strong. And as far as the City note is concerned, they have marked Maruti as their top sector pick. Although if I look at it just purely from the Feb sales numbers, those were up 9% year on year. So not fantabulous.
Better than the 6%. Better than the 6% estimate.
Improvement, and you can never discount a Maruti at the end of the day.
Yeah.
The kind of base they have in the Indian passenger vehicle market is untouchable. But anyway, Citi says it's their top pick. They prefer Endurance Technologies as a supplier to major two-wheeler OEMs. As a pick. They say that demand momentum will sustain in passenger vehicles as for Maruti, M&M, Tata Motors. In MHCV and tractors, there's a bit of an issue. So when I talk about M&M, while their SUV segment is doing well, tractors is a bit of a pain point, and it's going to continue to be so for some time. Ashok Leyland, Tata Motors CV overall domestic was down 6% and 4%. Escorts and M&M tractors will see the agri-stress. So the agri-stress story overall will continue, but TVS, Bajaj Auto, all of them had pretty decent numbers. So the auto
was
space
also up quite sharply in the month of Feb. So 20% gain on
Yes.
Hero MotoCorp.
Yes,
Could be something you want to track as well. May not see follow-up buying, but who's to tell with this market sentiment?
No, I find the auto numbers very interesting overall because it's also reflecting what's happening in the economy. And we've all been going on and on about the GDP data, fantastic top-line numbers. Remember, your agri sector has actually done relatively poorly. So that pain point continues. The question is whether services and manufacturing can really make up. So that's the auto story. NTPC is the other one. So the news per se is that 17,200 crore rupee investment has been approved for the Singrauli thermal project. But today is also going to be important because there is an event where Prime Minister Modi is going to sort of kick off projects of NTPC worth about 30,000 crore rupees. Now, this is a theme that you need to look out for in the run-up to the elections, the focus on big infra projects, on energy, on the power sector. And in that space, SJVN is definitely a very interesting play. They've had a host of tie-ups in the last couple of months with different governments, including Jammu and Kashmir, etc. So now they have gotten the nod for a 200 megawatt solar park project in Gujarat. This is with the Gujarat Urja Vikas Nigam. So that's the local body. It's worth about 1,100 crore rupees. So SJVN, generally, I just want to pull up the one-year chart as well, has just been a very interesting play. The question is, in terms of valuations, how much more it has to give. Yeah, last 12 months is 272%. So not shabby at all. SJVN, an interesting one as well. But a lot more on your list.
Yeah, so apparently just a word, I think Sajid, our colleague, has just mentioned that Maruti is putting out a warning that passenger vehicle inventory has risen to 30 days now. It's difficult to push dispatches until retail sales pick up. So the month of March could be interesting. It's the year end. Typically, we see some of these retail sales pick up as well. So watch out for that one. But set of stocks on my radar, the Adani Group stocks firmly out there. The group has started the sale of the first dollar bond since the Hindenburg episode. I believe Adani Green is at the mix of this all, but watch out for the sentiment on the group stocks if indeed this becomes successful. So certainly a set of stocks to watch out for in the session today. Keep a keen eye out for Adani Enterprises and Adani Green in particular, but I dare say some of the others too. Standard disclosure, of course, the Adani Group owns NDTV and you're watching NDTV Profit. So that's the first thing. Watch out for the Adani Group stocks. Watch out for Signature Global. We were talking about Godrej Properties and a large one, that profit sharing agreement that Godrej Properties had. Signature Global is the other one. That's a large one for Signature Global because they've recorded 3,600 crores worth of sales for a premium housing residential project in Gurugram. Now, it's got oversubscribed. The EOI got oversubscribed about 5.4 times. So this is interesting. I would reckon that this could move the needle a little bit for Signature Global. So watch out for this one as well, in addition to Godrej Properties and Brigade as the 2 or 3 stocks in the real estate space. Maybe that's why also real estate could be in focus today. Watch out for this one. Watch out for Indus Towers. Now, this has had a really good run in the last few weeks. The last 2 weeks, arguably from the telecom pack, you have to argue that Indus Towers has been the best performer. Now, the news, look at that, a 1 month, 22% returns. Now, Citi says that their bull case argument for Indus Towers is actually a target of $380 to $400. They are saying that the short-term risk reward remains favorable for the stock. The base case of 320, which Citi has in its official note, does not assume a successful Vodafone fundraise. They say that if Vodafone is able to successfully complete the fundraise, and if they repay Indus Towers fully, then the target multiple would be 7.5 to 8 times, which means the target price moves to 380 to 400. Watch out for Indus Towers too. Could be a very interesting stock in focus today. There are a clutch of others, but I'm guessing you guys have some more.
I just want to add to the Vodafone story, because we had an exclusive interview with Ashwini Vaishnav on Friday evening, and it was on semiconductors, but I did sneak in a couple of questions on Vodafone. And while the minister said, I cannot talk about a listed entity, he said that India has at least 8 funds that have evinced and shown interest in investing in the telecom sector. And we'll play that bite out in a bit, because I followed up by asking, can we assume that at least one of them is Vodafone? And he can't say, but all he said is that we will do whatever it takes to encourage investment in the sector. So he didn't say no, nothing's coming into Vodafone. He said that there are 8 funds out there, which is why one can understand the enthusiasm and the bet that something is going to change there, even as the fundraise carries on.
Yeah, but even though that's not reflected in the stock activity, so maybe this actually
Indus.
could be oh yes, it could help Indus. But yeah, he didn't say no, and I think that's what's most important. 2 more stocks worth a mention. APJ Hotels. It's a new listing. It listed at a massive premium, remember, a couple of weeks ago. It was also up 8% recently on a couple of big funds buying into this one. The reason this one is being brought up this morning is they're going to be reporting their earnings. It's the first time that after listing, they are going to be reporting earnings. So it'll be interesting to see how they do and what the markets makes of it. Along with that, talking about recent listings, you've got stabilizers producer Platinum Industries and electric vehicle charging solutions provider Exicom Telesystems that will be listing on the exchanges tomorrow. Both of them are trading at a massive premium and they were very well subscribed. So watch out for these 2 listings in tomorrow's trade. You also have about 7 IPOs that will be opening for subscription starting today. We'll of course talk about that through the day, but I think that's pretty much what I have on the radar this morning.
Just 2 quick stocks. Godrej Ambuja Exports has commissioned 120 TPD liquid glucose facility, so that could be interesting, viewers, so keep an eye out for that. And a small stock that I don't know anything. I virtually don't know anything about Virtuoso Electronics. I don't know if either of you do. But the reason why it caught my attention is because of an exchange notification that they have said they're going to do an investor meet with SBI Mutual Fund and ICICI Pru. It's a 550 crore market cap company. And SBI Mutual Fund is meeting them. Maybe, just maybe, the stock might see a reaction. If it does, viewers should know why. But standard disclaimer, we do not know anything about the company, so just keep that in mind.
I think even more standard disclaimer, before you make any investments, it's always great to go and
research
at the company. But yeah, definitely want to put on your radar. All right, what are the big factors in the market pre-election season is definitely one of them. And just an important development last night that we're focusing on very quickly, because NDTV has reported, quoting sources, that at a meeting of the Council of Ministers over this weekend, Prime Minister Modi presented a Vision India document for 2047, saying planning for a Viksit Bharat by then is a priority. So now what are sort of these steps laid down towards a Viksit Bharat by 2047? Vasudha Venugopal joins in with the key highlights from the meeting. Good morning, Vasudha.
Good morning, Tamanna. So yesterday, the meeting was very sort of critical because, it just comes days before the elections get announced. And the Prime Minister has interestingly spoken about this 1 lakh crore, fund in the budget for futuristic technologies. He has spoken about countries facing, this challenge of aging population. He's talked about how Viksit Bharat, the plan for it is a priority for him, and how, the government has been working on this since December 2021. And the next budget that gets presented in June, July, very confidently is that the government is coming back back to power, that will have a glimpse and actually a roadmap for Viksit Bharat. To the ministers, he specifically told them to be careful in their, in their speeches, not to get into controversies, and more importantly, be careful about AI, deepfakes, and also ensure that schemes and, welfare schemes and governance work that the government is doing actually reaches to people. But this Viksit Bharat thing, he specifically talked about how this needs to be part of all governmental agenda, how business bodies and even media needs to talk, create a dialogue on this so that India becomes a leader in not just thought, technology, and also innovation. He has specifically talked about also sustainable economy. So some key focus areas there, but it was also one of the most critical meetings coming before elections. In one ways, nudging the bureaucracy and also ministers that this is just continuity in progress, and the contest that everyone is expecting in the election is not going to happen. It's just going to be a formality. So we'll just keep doing our work. That's the big messaging out there in the PM's almost 8-hour-long meeting that happened with bureaucrats and ministers yesterday.
Thanks, Vasudha. Thanks for bringing us these details. Viksit Bharat targets for 2047. Well, we are a number of years that we have to look forward to, 2030, 2047 and more. Yeah. No, I most certainly will. I just hope you guys give me company.
No, we'll be there.
That's morbid.
No, not at all. It's optimistic.
Yeah, no. It's about, I think, the next generation having an even better time. So
no, the current generation.
Yeah, please, Tamanna.
Okay. Yeah.
This is also
current generation. Okay, let's go across to Alex. He's the judge and the jury. And Alex, we talked about the current generation right now, but what are we talking on editor's cut is the more interesting piece.
Hey guys, I'm just a couple of years younger than you, so chances are that I'm going to give you company wherever you go. Let's hope that we're talking about this in 2047 as well. But having said that, let's jump straight into the editor's cut, which, as you know, gets into the details of the top stories. And, we've got a couple of really juicy stories to talk about at the start of the new week. The first one has to do with elections. And look, we're just a couple of months away from the general elections, and understandably, market is going to be focusing on all of that. But over the weekend, you see significant updates from the BJP, Tamanna, that's talking about, I would think, no room for complacency in the kind of list that they're lining up for the general elections. We'll start with that, of course. And there's also another report that has come in from Indus Valley annual report, which has been published by Bloom Ventures, which is talking about some key trends. And I think it rhymes, if you can call it that, with what we've been speaking about for the last few weeks, with a couple of very key insights. But let's start with the big story.
All right, so let's first tell our viewers what happened, Alex. Over the weekend, the BJP released its first list of candidates of 195 names for the 2024 elections. Now, why is this noteworthy? For one, there is a trend that we've seen from the last set of elections, even the ones in December, where the BJP no longer waits for the dates of the elections to be announced. It's a first mover advantage kind of strategy where you come out with your first list right away. Of these 195 candidates, because the seats are very clear, what is the big takeaway? There is a very clear direction to rejig, to close all the gaps and not to spare underperformers at all. I would say with clinical precision, sitting MPs who the party feels will not really, win or have reduced winnability have been axed. So when the Prime Minister has set 370 seats for the BJP, 400 for the alliance in this election, how will that actually happen? You're getting glimpses into that first set of strategy. So out of these 195, 33 MPs have been replaced. That's 17%. Yeah. There are 34 ministers and minister of states. That means you're getting your top brass to really take responsibility for pushing this forward. Compare it to a company where, your top managerial team has to put in the grunt work and make sure they actually bring the results.
That's a beautiful analogy, right, Tamanna? It seems like this is being, and we've heard this analogy in the past as well. It's being treated as a company where the chief executive officer is saying, look, you've not performed up to the standards. Your track record is shown. Please make way.
So 33 have been cut. Prominent names over the weekend. Some of you all may have seen these announcements on social media saying that I have requested to step away from active politics. Step away, quote unquote, that's how politics works. Senior leaders, you give them a face saver and they can exit with some dignity. But very clearly, if you've not performed as per expectations, you've been axed. Look at Delhi. 6 seats have been announced, 5 of them are new candidates. And very prominent leaders have gone. The timing is also important because you have to look at it from the point of view of right now the India alliance is stitching up its seat sharing agreements. They've just frozen on their Delhi plan. And then you have this list coming out. So you're not giving them first mover advantage. You're making sure they react to you. And you sort of set the stage. Prime Minister Modi is going to fight the election from Varanasi again, 3rd term. Significant, you keep the focus on Uttar Pradesh. Remember, last time he fought from 2 seats, Vadodara as well. Will there be a 2nd seat? Will it be in the southern part of the country where you want to shore up your cadre, because that's a weak link for the BJP in the bigger picture. So some of these insights are important. Also the ability to on the fly fix problems. So there was a candidate from Asansol, Pawan Singh. He's a singer. Yeah, he's a Bhojpuri singer. Soon after his name was announced, there was a lot of trolling and he was being, attacked by the opposition because lyrics of his songs are seen as not very respectful to women. He stepped down a few hours later, said, I'm so sorry, I don't want to do this. Obviously may have been and presumably been nudged to. So if I were to tell you what is the key takeaway from this, it's only the first set. Remember, no candidates from Maharashtra or Karnataka, 2 very major states where the BJP has perhaps will need to formulate a strategy more carefully. They're not the strongest states for the BJP. They're crucial, but they have a strong opposition in both states. So they're going to take some time to formulate that strategy. But big takeaway, no space for those who are not going to win.
And no complacency.
No complacency, no mercy. The top brass, the ministers have to come in and, throw their weight around. They really have to make sure that they bring to the table what they need to. And moreover, even the caste equation, just the last thing that I'll wrap up, because in Indian politics it becomes important. So between OBCs, SCs and STs, that's 52% of this first list of 195 candidates. Fair representation to women as well. So all of these equations will be kept in mind. This is going to be a precision strike planning kind of strategy.
And absolutely, and I'm sure that we'll get a lot more analysis and insight before we get to the elections as well in just 100%. A couple of months. And so you should watch this space is the basic point. But let's jump into the second conversation, because a few very key insights from that report, Neeraj, and some of them have to do with the growing tax base buoyancy, which is not nearly as much as certain other countries, but then playing on the whole consumption angle, right, which is going up.
Yeah, so, it's interesting, and I'll make this quick. So Bloom Ventures publishes this note every year for the last 3 years, and there are just insights here. I mean, the people can make their own investing decisions based on these, but I thought some of the numbers were interesting. So just putting this into perspective, the question key remains, are premiumization and gross capital formation creating sectors plays the right way to play for the next few? So that's the key thing. Now, it's of course published by Bloom Ventures, so standard disclaimer that we're borrowing the note from them. So they start with the tax to GDP piece, and they talk about whether a change in this tax to GDP will lead to capex. So the narrative is that hitherto corporates have found it difficult to invest in capex because they haven't had the NPAs scarred them. Then there's underutilization, etc., and they haven't done it, and therefore the government has to do it. Now, has the government done it in the recent past? Yes, they have. Now, can the government really step up? That will depend on tax buoyancy, and therefore they bring this whole tax to GDP piece, and they highlight how India, relative to some of the other countries, is way lower. India is at 17.7 tax to GDP in 2022-23, US at 24, UK at 33, China at 21. So India is way lower. Even 1% difference out here is a large number. So if there is tax buoyancy, therefore, can there be substantial capex by the government? I think the answer to that is an unequivocal yes, because we've seen some glimpses of that. Now, the question only is, will the private sector now come in? So I think they mention that massively, that is part one. They also go on to mention that how the tax base has shifted from what used to be the traditional sources to individuals. But only a handful of individuals are now paying the largest sources of tax. Mihir Vora on the budget day brought this out, that how you and me, and that's the taxpayers, are essentially the largest chunk of tax revenues for the country.
Yes. So this has been an endemic problem in India.
Yep.
Too few of us pay tax, and the ones who are paying tax are constantly crying, what are we getting for it?
And we're paying a bulk of the tax. Even those taxpayers, there is a small portion of those taxpayers that are paying a bulk of it.
Yeah, I mean, you and Tamanna might feature in that list. I don't get paid as much, but be that as it may, 1/5 of those taxpayers pay 4/5 of the income tax. So that's a telling statistic. In China, it's 10%. In the USA, it's 43%, right? So that's quite telling. So will this change what happens? And will this change, therefore, the quick segue is to consumption.
Sure.
Will this change consumption pattern? Because at 60%, consumption has the highest share of India's GDP.
Correct.
Now, they make very important observations how it's changing. SUV market share, 50% from 7%, explains your M&M comment, by the way, in the morning on trade setup. Credit card holders in October 23 at 95 million versus 47 million. And surprise, it took me by surprise. Apple FY24
70,000 crore
sales will be more than HUL
70,000 crore. It's a news report.
So quite stunning, right?
Because in terms of value, of course, I mean the ticket price of each item. So
and the increase in production.
But it's a telling statistic, right?
No doubt. But just a small point here. Yeah. Before we wrap up, on the taxpayer side, I know I'm sticking my neck out here, but a large number of taxpayers are not salaried, and so the amount of tax, and this is something that has been pointed out by several finance ministers in the past, perhaps that gets fixed. And if that gets fixed, then the buoyancy goes up, the tax contribution goes up.
I would dare say it will get fixed in the next 5-year term, presuming that whichever party comes into play. But I think it will get fixed in some measure whatsoever. But just the last interesting piece is on capital markets and venture capital. Now, capital markets is known, so I won't get too much. Samina spoke about the trade setup. But the venture capital space is a bit interesting data. I thought it was a bit disappointing, really, because they say that the venture capital market, 1/4 of its size in 2021. So that is disappointing. Yes. Dropped to pre-2017 levels, and only 2 unicorns in 2023 versus
so 23 was a bad year for startups.
One would have hoped that
but it's going to recover if you go by. So I had spoke to John Chambers last week, and his prophecies year on year are looked forward to. One of his top 4 prophecies are that this is the year that venture capital recovers. That's also what he does now. So maybe it might not be a bad year.
All right. Well, I guess that's not a conclusive end to this conversation, but I kind of think that it sets the context for several months to come and years to come, in fact. That brings us to the end of this particular edition of the Editor's Cut. But before we end, take a look at a slice of conversation that Tamanna had with Ashwini Vaishnav. They're speaking about a number of things. Among them, of course, this is what Tamanna was alluding to earlier, the conversation about Vodafone India. He doesn't speak about it in so many words, but listen into what he had to say.
I prefer never to comment on any company which is listed as a matter of policy because of the responsibility, the position of responsibility that I hold at this point of time. But what I can tell you is, after the reforms that were done in telecom sector by our Prime Minister and getting most of the legacy issues behind us now and getting a new Telecom Act in place, at least 8 large investment funds have met me so far, and they want to explore investments in telecom sector in India because the market size is very large, the technological acceptance is very high, our digital India, our India stack basically is so widespread, and that is the gateway to, telecom is the gateway to digital India. So combined all these factors, the investor interest in India is huge. So we will see a lot of investments, we will see a lot of innovations, we'll see new business models coming up, we'll see new technical advances coming up in the coming years.
Co-presented by Patanjali Honey, world's best Patanjali Honey, 100% proven on more than 100 parameters of purity.
Hello. Good morning, ma'am. I'm speaking from XYZ company. Are you looking for a job or a job change? Have you been receiving unwanted calls from spam numbers? Are you tired of being offered new jobs, insurance schemes, or free health checkups? Well, today we will look at an interesting survey report by local circles on pesky calls that received 60,000 responses. Most unwanted calls are related to financial services, 54%, and real estate, 22%. In fact, the report has taken names. 40% mobile subscribers have identified Bajaj Finance as a top offender, HDFC Group as the second biggest pesky caller. The report reveals that 60% of people received 3 or more spam calls on an average day every day, and 92% of people registered on the Do Not Disturb list still get pesky calls. So is being listed on DND working? Clearly not. But the report also recorded a minute relief, as per which 6% people don't get any such phone calls. This relief comes after the TRAI directive to banks, insurance companies, and other commercial entities. TRAI is the Telecom Regulatory Authority of India. In fact, the Department of Consumer Affairs has constituted a committee comprising members of different regulatory authorities, telemarketing companies, and cellular industry to draft the guidelines to address the issue of pesky calls. So yes, pesky calls are still a worry, but there is a little relief too. Can you ignore them though? Toll-free numbers are identifiable, so institutions have found a new way. According to the report, calls from different mobile phone numbers that seem to belong to companies or brands have risen from 29% in February 2023 to 36% now. And look at the change in trend. Real estate selling has risen from 18% last year to 22% now. However, job offerings have decreased from 10% to 4%, and in the case of those selling financial services,
Welcome back. You're watching India Market Open. A quick check on Gift Nifty, implied Nifty this morning. It's expected to be a flat to higher start, but remember it's strong global cues, and 22,500 is what we have on the Gift Nifty, but a start about 22,400 is what we're looking at. Agam is standing by with more on the F&O piece. Agam, over to you. What is the setup looking like? Pretty solid this morning.
It is. In fact, Samina, we've seen a lot of strength, and I'm going to very quickly go through the cues that we've seen last Saturday, and of course, life highs, and we haven't seen too much change in open interest as far as the Nifty futures go. It's the same for the Bank Nifty as well. In fact, the Bank Nifty was flat, and we didn't see we saw very little change in OI there as well. In terms of the options market and how things are panning out, at least as far as the change in the options market, we saw the 22,000 put see the most amount of unwinding coming through, and naturally, based on that, in terms of change in overall distribution, let's pull that up as well and see how things go. And that's where we are seeing now about an 800-point range between 22,000 on the lower end and 22,800 on the higher end as far as the Nifty is concerned. Very quickly, going through stocks as well, let's talk about that. We have longs in SAIL, NALCO, IEX, Havells, and Canara Bank. And in terms of stocks which are seeing unwinding, we have about a short covering for Goldfish Consumers and ICICI Lombard. Let's not forget Metropolis, Coromandel, and Nestle also looking at a bout of longs unwinding. The question is that considering the Nifty is at a life high, where do we go from here? Well, let's get in an expert here. We have Akshay Bhagwat of GM Financial who's joining us on the show. Akshay, good morning. Thanks so much for joining in. Let's start with your view on the benchmarks. How are you trading them? Do you think that it's now time to perhaps get some caution in, or do you ride the trend?
Good morning, Agam. Well, a very strong start, fabulous start for the March series, and the first day just dictates the way the March series might head for. So the support is 22,000. That's the base which clearly the benchmark Nifty has set. And even if you look at the options data for the Nifty index, a lot of put writing has been set up at the levels of 22,000 for the current weekly expiry. The call writers are slowly shifting to higher strikes, where majority of the open interest interest is at the 23,000. So clearly the texture of the market is very strong. You have an OIPCR at 1.32, which just signals the kind of put writing which is heavily positioned at the levels of 22,000. So I believe 22,500 is the immediate stopover for the Nifty. The view stands very strong, and I would my recommendation would be to continue to hold or build long positions on the Nifty with a stop loss below 22,000. Moving on to the bank index. Bank index was stronger, but as it closed on Saturday, it has closed at a temporary trading resistance. 47,500 is a short-term resistance. This might act as an intraday resistance if the market kind of sees some bit of minor profit taking. But if this resistance is overcome, then all-time high is where the Bank Nifty is heading for. So slowly the situation is that Bank Nifty is setting up for regaining its lost glory, moving to its all-time high levels. So even on slight dips, Bank Nifty should be added on the buy side. 46,500 is a very strong support, and all-time high would be the target I would keep on the Bank Nifty index.
All right. Akshay, so what stocks are you, well, perhaps deploying strategies on this week?
A couple of stocks, both on the buy side, have an option strategy on Kotak Bank. If you look at the chart, Kotak Bank has seen a very strong basing at 1680 levels, and long additions are being prominent for the March series. My sense is it may rebound strongly from the current zone, for which I am positioning a bull call spread where you go for buying a 1720 call at a premium of 42 to 44 odd rupees and sell a deep OTM call of 1800 strike, where this is a fixed loss or a fixed risk strategy. It's a positive view on Kotak Bank with a target of around 1800, which I maintain for the March series. Your profit potential roughly is around 10,500 with a risk of around 5,800. The second trade here is Coal India. Here I have a vanilla buy call. I believe Coal India has set its base at 430, and you may see a momentum regain in day trades itself. So the recommendation is to go for vanilla call buying in Coal India of the strike of 450 at the money strike at 17 to 16 odd rupees where it closed on Saturday. The target would be 25, extended target would be 29 with a stop loss of 12 rupees on the option premium.
Okay, so bull call spread as far as Kotak Mahindra Bank goes, and a call buying as far as Coal India is concerned, but both on the positive, riding on the trend that we have seen in the markets. And well, on that note, going to take a moment to thank Akshay for joining us and taking us through his views in the markets, as well as providing us with a couple of trading ideas. And with that, it's back over to Neeraj.
Thanks, Agam, for that. So those are some option strategies, and you log in every day at 8:30. You get two option strategies in case options is your thing. Now, just before we get in, one more management phone, and IEX is important because the stock was very active in the truncated session. Because remember what's happened is that Ministry of Power has ordered surplus power to be sold on exchanges. Effectively, if distribution companies fail to sell their daily requirement of electricity by 9 a.m. Or schedule a quantity lower, then the surplus should be sold on the exchanges. Presumably, this should be positive for IEX. Let's get in Mr. Satyanarayan Goel, Chairman and Managing Director at IEX, for a short conversation on this. Mr. Goel, thanks so much for taking the time out. Can you explain what's happened by the Ministry of, as per the order of the Ministry of Power, and how constructive could this be for power exchanges?
Good morning, Neeraj.
Very good morning, sir.
Let me tell you for one thing, that this initiative of Ministry of Power for selling this URS power in the day-ahead market of the exchange is a very, very excellent initiative for deepening the electricity market in the country.
Sure, sir.
And I'm sure this will increase sell-side liquidity and availability of power at very competitive price to the distribution companies. So today, at any given point of time, we have today in the country almost about 150,000 megawatt capacity, which is on interstate generation under the PPA. And on an average, almost about 8 to 10,000 megawatt capacity remains unutilized because of the variation in demand and supply across the country. Now, this capacity will be available for sale on the exchange platform. And this will lead to competitive price discovery. And I'm sure this will also help in improving volumes on the exchange platform.
Okay. Is there any estimate, Mr. Goel? I know the actual numbers may differ, but any broad brush estimate of what quantum of power is available like this to be sold on exchanges like yours?
As I told you, that almost about 8 to 10,000 megawatt capacity remains unutilized. So that power should be available on the exchange platform. But at what price that will be available, and it all depends on that. So it will be very difficult to estimate what will be the impact of that in the increase in volume.
But I believe, I'm sorry for cutting you in, but I believe that the decision was that the price bid for the surplus power is capped at 120% of the variable cost or thereabouts, right?
Yeah, but then variable cost is different for the different stations depending on the location of those stations.
Got it, sir. Okay.
So, but I'm sure that this is going to have definitely a positive impact on the volumes on the exchange.
Got it. Mr. Goel, just wondering, so your volume growth numbers have looked solid thus far. I believe the estimates were about 15%. I think you've guided to 15% in FY24. Correct me if I'm wrong. Does this change that materially if 15% for FY24 or even for FY25? Does it enhance from the earlier believed 18-19% volume growth for IEX?
Yeah, I mean, we are expecting now that for FY25 we should have a volume growth of almost about 20%.
20%. And not something too immediately for FY24, I presume, because it's just happened and we are all in March.
Yeah, it is just for a month.
So therefore, it will be a small uptick for this thing. Okay, just one last question, Mr. Goel. What's the latest on this market coupling thing? I mean, is there some update that is there that we've missed? Any view that you have on this and what it could do for IEX as well?
No, CRC has already issued an order on this. And they have said that let the pilot study be done to assess whether there is any benefit of market coupling or not.
Okay.
They have issued that order and NLDC will be doing that study. It is going to take a lot of time to do that because software development also needs to be done. And thereafter, the simulation results will be done. So it's going to take a lot of time. Okay. And thereafter, CRC will take a view whether the coupling is required or not. I think this is a very long-drawn process.
Long-drawn process.
It may take a couple of years.
Couple of years. So until then, there is no conversation around this. Okay, great. Mr. Goel, thank you so much for explaining this to us. Much appreciate your time. Thanks for being with us today.
Thank you. Thank you.
That's IEX was up 5%. Clearly, for FY25, a small uptick. The earlier believed volume growth numbers were 19%, now maybe 20%. So maybe not as dramatic, but certainly a positive. But I think the other important thing, market coupling is such an overhang per se. He's saying that the way things are going right now, a pilot study maybe 2 years out. So until then, no fears. So I think this should maybe lift another small near-term overhang on IEX, not the long-term one.
Okay, so maybe positive in the short term, but you know, a ton of action expected this Monday morning in the markets after a superb close on Friday, a pretty decent truncated session on Saturday, and of course great global cues as well. So let's begin with Sudeep Shah's view. He's Deputy VP Head of Tech and Derivatives Research at SBI Cap Securities. Sudeep, very good morning to you. Hope you're doing well. Let's first take a look at what you make of the indices, the Nifty and the Bank Nifty. Are we looking now at the next levels of 22,500, I'm sorry, very, very comfortably?
Good morning. I feel the way markets have, in the last 3 days, the kind of momentum that we have seen in the markets, like almost from the lows of 21,860, we have moved to 22,400. Now, remember, the entire month of February was a lackluster month. We were trading in a tight range of around 700, 750 points for the entire month. And post that, now this is a breakout from the momentum perspective also. So I feel the way markets have moved in the last 3 days gives enough signals. And add to that the strength in the large caps as compared to the mid caps. So now a lot of sectors are participating. Banking has come back with a bang. So I feel this setup looks pretty strong and pretty robust. And the way I look at it, I feel that from the current levels, now on 22,150, 22,200 will act as a support. And on the upside, we could see levels of 22,550 and 22,650 also in the coming 5 to 6 sessions. More than Nifty, I am more comfortable and I feel more confident with Bank Nifty. The way Bank Nifty has bounced back now, the Bank Nifty has managed to close above its intermediate swing high of February, which was 47,360. It has closed closer to that zone, but the way the setup on the charts looks, I feel from the current levels, 46,800, 46,900 could act as a strong support until this is guarded. Levels of 48,000 could be witnessed. And key ingredients in Bank Nifty, which could make this possible, would be the PSU banks, ICICI Bank, as well as Axis Bank. HDFC Bank, if it supports, I feel Bank Nifty has more legs to go, but at least ICICI Bank and Axis Bank is what we are more positive on with respect to Bank Nifty. And one interesting statistics that we have seen for the month of March is, like especially in the election years now, 2009, 2014, 2019, all these three instances, we have seen Nifty as well as Bank Nifty closing in green. And especially for Nifty, if you see the average gains for all these three March months, especially in the election years, has been in the range of 7 to 8%. So I feel that...
Right. Sudeep, just very quickly, what are your top stock recommendations this morning? Trade specific, stock specific?
Yeah, stock specific, since we are bullish on banking, the top pick would be ICICI Bank here. After a consolidation in the last 30-35 days between 1,000 1,060, last week we have seen a breakout above this consolidation zone, and the breakout is backed with volume. So all the daily, weekly and monthly charts, if you see, the structure is quite robust, quite bullish, and we have seen at the money put writing in 1,060, 1,070 and 1,080 strikes. So we feel that from the current levels, ICICI Bank is a good buy with 1,060 as a stop loss and 1,130 as a target on the upside. The next pick that we have is Titan. Now, after a consolidation in the last 14 to 15 sessions between 35.50 and 37.20, we've seen a breakout in Titan with volumes. The long-term charts as well as the medium-term charts are strong, and this is a strong reversal on the short-term charts. So I feel from the current levels, Titan could do well from here, and 3,700 could act as a good stop loss. And on the upside, we could see a fresh high on Titan above 3,900, 3,950 levels.
So Titan and ICICI Bank, those are the top trades coming in from Sudeep, but it's going to be autos that are in focus, and it's Maruti on top recall this morning. Well, talking about the future demand outlook for the auto space, my colleague Vinay caught up with the company's senior executive officer, Shashank Srivastava. Here's what he had to say.
As far as the future demand is concerned, it is expected that it will be in low single digits for next year. Next year demand projection across OEMs is around 43, just about 43 lakhs, that is 4.3 million plus, and against 4.2 million of this year, which is now expected. Really, it will depend on how the economy grows, how the monsoons are, how the inflation goes, interest rate, and so on and so forth. But early indications, if you look at February, the demand early indicators are basically inquiries and bookings, and that has been like 1 or 2% in case of February. So I think going forward, you could just see a plateauing also because of the large base effect that comes into force from Q2 of next year.
Well, that's Shashank Srivastava talking about the outlook for Maruti going ahead. But keeping it with autos, Harsh also joins us with what brokerages are making on the Feb auto sales. Harsh, CV still struggling, but two-wheelers looking good, I believe.
Well, yes, absolutely, Samina. That is currently the trend. Two-wheelers doing quite well. Four-wheelers also lagging the two-wheeler demand a little bit is the kind of trend we're seeing. The sustained domestic demand, but exports have also contributed significantly to at least the February numbers, which is aiding that pack. CVs, on the other hand, remain weak. Tractors remain weak as well, given the way agri is performing, and therefore you've seen almost a double-digit decline in tractor volumes. Now, in terms of what MK prefers, just a couple of brokerages very quickly prefers the two-wheelers on a relative basis, prefers TVS, and within the auto Ang space prefers something like a JK Tires, a Precall or a Motherson Sumi. Quickly moving on to what Citi is seeing in terms of the numbers. They rate Maruti as their top pick. They prefer something like an endurance tech, and they believe that demand momentum is set to sustain, especially in PV. Maruti, M&M, Tata Motors, overall volumes quite strong, and they're expecting a positive reaction of that. They're seeing MHCV and tractors with continued weakness. Ashok Leyland, Tata Motors CV, overall domestic looks a little tepid to them. That's broadly the overall coverage.
Right, thank you for that, Harsh. They're laying out what we've seen in terms of Feb auto sales. Couple of notes out this morning, one from Citi, one from Nomura. And definitely, as far as Citi is concerned, Maruti is the top pick. Endurance Technology is in terms of, the OEM auto anchor play. In terms of two-wheelers, Sudeep, what do you like the best right now? Sudeep, I think you're on mute.
Yeah. So looking at the overall two-wheeler space now, within the three stocks, Bajaj Auto, Hero Moto and TVS Motors, we like TVS Motors a bit more compared to the other two stocks because Bajaj Auto has already moved too fast and too swift in the last few months. So the comfort there in terms of risk reward is not much. But the TVS Motors, the way this stock has moved from a long-term perspective, it is already on an uptrend. But last 3 months, the stock has consolidated between 1950 and 2150. And in the last two sessions, we have seen a breakout above that consolidation zone and with volumes and a rise in open interest. So I feel the top pick within the two-wheeler space would be TVS Motors. And we feel from the current levels, this stock could head higher up to 2400, 2450 levels. And if someone is holding it, can trail it with a stop loss of 2170 on the downside.
Right. Sudeep, stay with us. We'll quickly slip into a break. We'll come back, continue our conversation and talk more stocks. So stay tuned for more on the other side.
Electoral bonds have been deemed unconstitutional by the 5-judge Supreme Court bench headed by Chief Justice D.Y. Chandrachud. They were first introduced in 2018. An electoral bond is a means to fund a political party in India while maintaining anonymity. These bonds are available in multiple denominations ranging from 1,000 rupees to 1 crore in specified branches of the State Bank of India. This was introduced in the system to maintain transparency in political funding via a banking network and reduce black money. But on the flip side of this intention, questions have been raised on the basis of an important fundamental right of democracy. That's right to information. Is it constitutionally right to keep the source of political funding discreet? Why shouldn't the public know who is funding how much money to different political parties? As per the findings of Political Party Watch, a program under Association for Democratic Reforms, 28,030 electoral bonds worth rupees 16,618 crore were sold between March 2018 and January 2024. The Supreme Court's unanimous decision follows a petition filed in September 2017 challenging the Finance Act 2017, which introduced the electoral bond scheme for the purpose of electoral funding. The Act has also removed the previous...
Just a couple of minutes to go before we see the first pre-open rates ticking in. It's looking like you're set perhaps for a muted opening. at least as far as the implied open goes, just about 18 points up. But the fact is that you're holding on. You're holding on despite a pretty decent run-up that we've seen, at least in the last 2 trading sessions, I would say, and Friday was rock and roll. Sudeep, I just want to get your view on, an SJVN, an NTPC in the power space. Is there anything that is on top of mind right now for you from a charts perspective?
Yeah. So if you see NTPC compared to SJVN and NTPC, I feel NTPC is much strongly placed on the charts because of the sustained uptrend that the stock has witnessed in the last 4 or 5 months, and whenever in the last 1 month intermediate corrections have been there in mid caps and these CPSE names, NTPC has not broken down, and in fact it's moving towards a fresh life high now. So the relative outperformance is there in NTPC, and it is sustaining above its short-term moving averages, which is the 10 as well as 20-day exponential moving average. And if you just check the rollovers that has recently happened, NTPC within the power space had the highest rollovers. So I feel from the current levels, NTPC is well placed to make a new high from here, and could be bought with a stop loss of 332 on the downside, and the stock could make fresh highs and move up to levels of 365 to 375 in the next couple of weeks.
Deep, we've just had monthly numbers from Angel One, and those look pretty promising. On the charts, quick one, how does Angel One look at current levels?
See, the numbers have been promising, just seen the data in the morning, but the way the charts are put, I feel in the last 3 to 4 months, in fact, starting January, like there's some kind of a pattern which is developed from November. The stock has moved from 2800, 2900 to 3800, and it's now back to this zone of 2800. So there's a bit of selling pressure that we have witnessed, and even in the month of February, in mid-February, there was this rise to 3400. The stock could not sustain there, and we have even breached the previous swing lows of January, which was around 2900, 2880. So I feel till the time the stock is below 3050 now, which is the 20-day exponential moving average, the trend could be firmly on the downside, and we could see some levels up to 2650, 2630 on the downside in terms of Angel One.
Okay, watch out. So Angel One updates out there on your screen. Month on month is flattish, YOY looks very good. We were talking about power, and that is what we'll invoke Devin Choksi's conversation in Devin Choksi's conversation as well, because there are a lot of changes. One, the monthly data numbers are looking solid even now for power consumption. So that's part one. Part two, IEX has this change about the surplus power being sold, and apparently the government is mulling getting reverse bidding back into the process, and that could potentially be capping out some gains for maybe some of the generation companies. Is that the case? I think it'll be interesting to see. But before we get in Varsha to talk about the reverse bidding piece, let's get in Devin Choksi to talk about the surplus power sale and what it could mean for power exchanges. Devin, good morning. Thanks for joining in. I'm starting off with the micro straight away. But can I ask you, have you looked at, the perplexing story of IEX, an exchange which has just not been able to gain the kind of attention and valuation that some of the others have? And here's a development which leads to some more volume growth possibilities. Did you get a chance to look at that announcement? Are you constructive on IEX?
Hi, Neeraj. Good morning. Well, I think there is no question of not remaining positive about this particular exchange and its prospects. I believe that the vertical in which they have started with promise is yet to flag off in a significant way. And probably some of the moves which you were just mentioning about at this point of time would possibly be the starter. So certainly we'll have a long way to go. Given the situation that you have got power generation happening from multiple sources, and given the situation that the users would be in a position to offload, some part of the generations, or even for that matter, the larger part of the generations through the exchange platform, that possibility is probably, going to become real going forward. As we see multiple sources at which the generation takes place, and probably this is where we are likely to see the newer set of reforms also coming into the area of distribution of power. So in my viewpoint, I think we are likely to see the further demand on this exchange for the transactions going forward. However, I think as we talk at this point of time, the things have remained quite subdued comparatively compared to expectation. Even though the future remains positive, I think at present, probably I think the things are not shaping up as much as I think one would have imagined in the past.
You know, the other aspect of power is wind energy, because the Ministry of Power has apparently decided, apparently, I use the term very carefully, apparently decided to bring back reverse bidding as wind tariffs rose in auctions. Varsha joins in to explain what this means for different companies within this ecosystem. Varsha, good morning.
Good morning, Neeraj. So as you rightly said, these wind companies, renewable wind companies will be in focus today. Now, if you see, according to some media reports, reverse bidding is going to come back as wind tariffs rise in auctions. Now, Ministry has sent letters to these agencies. Now, this is on the back of undersubscription and higher tariff discovery in recent wind bids. Also, now, just to give a context, there are two types of bidding. One is reverse and the other one is closed bidding. Under the reverse auction method, bidders continue to bid against each other after the initial bids are opened until a bid tariff goes unchallenged by a counter bid. Now, incidentally, the minister had given up the reverse auction method at the beginning of the financial year only because the method was not delivering results in terms of wind capacity installations. Also, the method did bring down tariff from 3.46 kilowatt per hour to 2.44, but company had a lot of inventory that they sold off the inventory at very low prices, which led to poor capacity installation. Now, after the reverse auction was given up and the closed bidding system was adopted, the tariff did rose. Now, NDTV Profit in Q2 FY24 did speak to Inox Wind regarding this reverse bidding process, wherein he said that now the government has a target of 140 gigawatt from wind power, so it shouldn't affect this year as much.
Got it, Varsha. So effectively, does it impact Suzlon and Inox Wind? Does it impact some power generators? Who does it impact the most? Very quickly.
Yes. So Inox Wind, then we do have Sangvi Movers, which did saw pressure on Saturday itself.
Okay.
Almost 2% stock was down.
Okay, so those companies effectively, Varsha, thanks for that. Viewers, what Varsha is saying is that the original equipment suppliers, Inox Wind, Suzlon, etc., could get impacted. Sangvi Movers is a transport for these, and therefore that might get sentimentally impacted. Deven, have you had a chance to think about this, the reverse bidding coming into play, and how would it impact different components within the ecosystem?
No, Neeraj, I would like to take some time to, I think, study the entire impact and then.
No, completely understandable. Understandable. Sudeep, just one quick thing. These stocks are finding resistances. Suzlon at circa 47, 48, Inox at circa 600. Could there be downsides here? Sudeep?
Neeraj, if you see Suzlon, it is finding resistance at this 46, 47 levels, but the way it had moved in the last 6 months, say from 14 levels to 50 levels, so it's kind of a time-bound correction, time-wise correction rather than a price-wise correction. That is the reason it is facing resistance at higher levels. But on the downside, in terms of Suzlon, I see 40 as an important support. Till the time the stock is holding 40, it is still okay. And I guess the stock could consolidate a bit more in this range between 40 and 46. And if you see Inox Wind, even that stock has had a fabulous run since November or even October, from 198 to almost highs of 648. So post that, there's some kind of a consolidation or minor profit booking that we are witnessing. And I feel support zone of 550, 560 would be very crucial, because that was an intermediate peak in the month of January, in the first week of January. So I guess that price point of 535, 540 zone would act as a strong support from a medium-term perspective going in for the next few weeks. So till the time the stock is above 540, I feel there's no case for worrying in this stock.
Deven, Adani Group stocks, they were all quite active on Saturday's trade day, and they finally kicked off that first dollar bond sale post the Heidenberg episode early last year. Adani Port also reported numbers for Feb, so port volumes look pretty good. I believe there's a 30% jump. that we are seeing for Adani Ports in terms of cargo volumes. How are you playing some of these counters? Sentimentally, lots of positive news flow with numbers largely looking better than expected. Would you buy any of these counters? And if yes, which ones would those be from the pack?
Yeah, good morning, Samin. Well, I think Adani Port, as you mentioned, is likely to see the larger amount of volume growth, largely because of the fact that in the previous year, number of ports which they have acquired, I think they have got into the integration and probably they have started generating or contributing to the volume numbers into the main company Adani Port. So to an extent, I think the numbers may not be strictly comparable because I think these are the new acquisitions which have started playing its role and the volume numbers are catching up. The beauty part of this entire business that this company has done is they have very well integrated the eastern and the western ports through the logistics systems in a way, which is basically giving them a distinct advantage with their customers. Cargo, whichever port it comes to, I think inland transfer can happen because of the internal port arrangements that they have. So that is something which I believe is going to be extraordinarily strong, not only for the capacity utilization alone, but also from the point of view of generating better yield, better per ton realization, as far as I think the cargo handling is concerned on the port. So we certainly remain bullish about the prospects of Adani Ports. I think that is one thing very clearly given. In case of Adani Enterprise too, I think the businesses which are now getting stronger are the ones which airport businesses which is getting stronger, the road business which is getting stronger, and the possibility of I think these businesses getting demerged and monetization taking place could be real going forward in next 1.5, 2 years time at the best. So from a perspective of looking at I think the entire group per se, we feel that I think they have probably started generating significant amount of cash in each of the business verticals, each of the business companies that they're talking about. And the net debt has also come down to 2.25 so as a to the EBITDA. So that as a result of which I think they are far better off compared to what they were at 1.5 year time before. So maybe I think this is the reason for which we are seeing the opportunity. Selective stocks remain favorite as far as I think the portfolio building is concerned from Adani.
Yeah. Devin bhai, good morning. Tamanna here. Just wanted to get your sense of the PSU play. I would say ex-PSU bank play right now. Even this morning, we've been speaking about an SJVN and an NTPC, NHPC, all of them doing fairly decently in the pre-open session at least. And the big news flow perhaps over the next few days is going to be a slew of announcements. NTPC, for example, is going to see announcements worth 30,000 crore rupees just today. Do you think any of these are worth investing in at this interim, or would you wait for a few weeks?
So, good morning, Dhawan. Well, I think all companies in the PSU space, be it in the defense, be it in mining, they look, I think, relatively more promising. And I would think that I think they have got a huge road ahead as far as I think the opportunity is concerned. However, I think in the last many quarters that you have seen, the results haven't been catching up with the promises that these companies are making. So as a result of which, I think the investors are probably wanting to see the number, consistent number, sustainable basis. They are not forthcoming, and that is a miss as far as I think these companies are concerned. No doubt, I think they are given the underlying strength. They are re-rated at this point of time in the market. Also from the point of view that market is catching up on some of the value buy opportunities. In my viewpoint, I think PSU companies remain extremely potential. They need to show the sustainable earnings going forward. Maybe a small component of the portfolio can be built in the corrective downside, which we are currently experiencing. And that could be possibly giving you an opportunity to study this business further as every quarter goes by and see how exactly one can add further weight thereafter. But yes, I think that the downside should be minimal, and probably I think stability should be seen in many of the PSU company stocks price now.
A very quick trade call on OMCs with the movement on crude in early trade. Do we have an opportunity to trade OMCs today on the charts?
See, looking at the charts in terms of BPCL, HPCL, if you see all these stocks, I feel BPCL is better placed now. The stock from higher levels has corrected also from 680 to 600 and 603 levels and has taken support at the 20-day exponential moving average. And this zone has not been breached decisively post November 2023. So I feel from the current levels till 603, 605 levels hold, we could eye at a fresh up move from the current levels in oil marketing companies up to 640, 645 levels on the upside.
Quick call, Sudeep, on just a couple of minutes to go for pre-open. What would be your top pick this morning?
See, apart from the morning calls that we have discussed, I feel one stock that could do well is Grasim. Grasim post the announcement of entering into the paints business last week. We have seen a good breakout on the upside from 2100 levels. It has broken out, has even rallied further in the last two sessions. So I feel Grasim would be my top pick from the current levels also, and could be bought with 2200 stop loss on the downside and a 2350 target on the upside.
Okay, 2350 maybe on Grasim. So that's aside of the morning calls that were given, this is one more call that has come in from Sudeep. Stay on, gentlemen. We just marked the market open. Remember, we'll start off maybe about 20-25 odd points. So a flattish start, not quite the extension of momentum, but let's see how it pans out during the course of the week. And I think specific pockets of strength, if indeed banks participate, a couple of notes out there on HDFC Bank today. So that could be interesting. But here are the first trades this morning. 31 points for the Nifty. Bring up the Bank Nifty and see if that is also a quarter of a percentage point. Yep. So, but no, actually flattish, 0.14%. So no big rara moves there. Mid caps about 1/4%. Small caps about 1/4%. So a bit of a consolidation, if you will, after what was a very strong move on Friday. I'm ignoring Saturday per se, except for some specific stocks that may have moved. Get the index up, index movers on the screen and see what's moving. So NTPC on course, or rather with reason, is moving. Adani Port had very strong monthly data. 33% growth, if I'm not wrong, for February. No surprise, that stock is amongst the top draws. Sun Pharma continues to move higher. There is strength in Maruti yet again, so 0.86% higher for that one too. Hero MotoCorp, after that 1.5% uptick on Saturday, is up another 0.5%, as is Bajaj Auto. So that's the set of stocks which are moving. There's more green than red on the screen. What is losing out? The steel stocks. I think there is a downgrade today from CLSA on each of these, saying that they have rallied about 11-12%. YTD valuations may be slightly stretched. Don't quite know that, but the stocks are certainly down today. So watch out for these two. This is on back of a brokerage note. So effectively, steel stocks correcting a little bit. I would reckon that JSPL and others also may have gone down. We'll get to them in a moment. But steel correcting today. NTPC really ripping it on the charts, and some others are giving it company. That's the index, Tamanna.
Yeah, absolutely. 22,400 seems to be a comfortable position for the markets in early trade. Not too many massive movements in the broader markets. And stock-specific news, I just want to pull up a Gujarat Gas. Gujarat Gas, of course, has a Morgan Stanley note on it. They've maintained an overweight with a target price of 579. They already past that target weight, but Gujarat Gas definitely one of the movers to see because of the sort of glut that you're seeing midterm in the international gas prices as well. The other one is Biocon. Biocon has had a slew of news in the last couple of sessions, and even now they have settled a pact with Bayer and Regeneron for a drug called Yesafili. This is for macular degeneration in the elderly. They have sorted all of their patent issues over there, and that stock with mild gains, I would say, this morning. Apart from that, I think let's take a look at Signature Global, a stock that Neeraj had picked in his trade setup. They've had a good sort of boost. It's not a very large real estate company, but they've had a good set of sales. 3,600 crore sales, about 1,100 flats that they've sold in one project in Gurugram. That stock showing some signs of life this morning. SJVN is the other one that we've been talking about. A project of 1,100 crore rupees in Gujarat, and that stock about 2.5% one up in trade. HAL is the last one on my list this morning, and there's a Morgan Stanley note with a price target of 3,129. Again, fairly tepid. So we're seeing an overall positive move, but Not too many fireworks, I would say, Samina, unless you've spotted something fantabulous.
It just depends on what our definition of fireworks is this morning. But I think Neeraj picked up a stock which we weren't sure about. Virtuso, pull that up one up. It's hit upper circuit. It's actually up 5% this morning. So we will get more details, understand the company better, try and connect with the management. It's off the day's high point, but still trading with a pretty solid gain, nearly 3% higher on a day when the markets are trading fairly subdued. Tata Investment Corp, now this one has been on the loose in the last few days. Another morning of 5%. It pulled in 5% on Saturday, it did 5% on Friday. It's up 20% in the last 5 days on back of the Tata Group getting an approval for 2 semiconductor units. Since the news broke out, the counter, which is Tata Investment Corp, has gained 20% in the last 5 trading days. So looking good again this morning for the stock. You've got Gujarat Ambuja, if we can pull that one up. Godrej Properties, I talked about that being a big project launch in North Bangalore. The stock is up 2.5%, doing quite well. 5,000 crores of top line is what's expected from this unit. Of course, it's a partnership, but the counter reacting well to that news flow. 2.7% higher is what we have. Angel One, if I can pull that one up to see if those Feb sales have any impact on the stock. Month on month, it was quiet. Year on year, it was good, but the market's not seeming too pleased. The stock trades the cut of 0.7%. You've got Data Patterns, Info Edge up 2.5-3%. Mankind Pharma, Godrej Properties already mentioned, Nazara Tech up 2%, Rallis, Mututsu. Gains are all over the place. There's no trend as such that's emerging in terms of the smaller micro or mid or small cap names. On the sell side, you've got Westlife that's seeing a cut, TV18 seeing some profits off the table. Insurance players also taking a breather. Suzlon is down and out. So would, if we can pull up Sanghi as well to see whether there's a reaction on the reverse bidding on the counter. Sanghi Motors down another 5% this morning. So that pressure continues onto some of these players. Apart from that, nothing else too exciting, guys. It's a different sort of a morning.
Yeah, just a couple of stocks. Remember this news bits the last week about how a Dubai-based entity has been caught in the PMLA piece, and a couple of stocks which have been the talk of that are down today. So I'm putting 2 and 2 together here. Gensol Engineering is down 10%. I think there is that stock is certainly, and Segachi is down about 15-16% amongst others. So keep an eye out for some of those stocks which get caught in some of these crossfires. Clearly some pressure on those names. Okay, let's get in opening thoughts. Sudeep, first 5-6 minutes of trade, anything that has caught your eye? Sudeep, you're on mute.
Yeah, so see, post opening, while we are seeing banking also strengthening further, ICICI Bank, Axis Bank looking good. But one stock that has clearly caught my eye is NTPC, and that we have been discussing since morning also. And the stock is now sustaining above this 348, 349 levels. And I feel from the current levels, NTPC could further strengthen from here and possibly move up to 365, 370 levels that we have discussed earlier in the show. So I feel from the current levels, NTPC should be still looked at on any dip.
Deven, the recency of the up move that we've seen in stocks like Geo Financial, are you still constructive there, or would you now think of taking some money off the table?
So, Neeraj, I think this particular company looks, I think, extremely convincing to me. In all the 4 verticals in which they are likely to start their journey, be it NBFC vertical, AMC vertical, or insurance vertical, or the wealth product distribution vertical, each of these 4 verticals in which they are expected to start their journey in this financial year, current 24-25, I feel that I think this company has a lot to offer going forward. On one side, they have got a customer base within the group. On the other side, they have got the technology platform which allows them to extend the reach to the last mile. On the most important part in the business, I think where you require the capital in the financial business, they have a solid net worth of more than 1,40,000 crore. I think, and the best of the partners to work with as far as I think the collaboration is concerned. be it BlackRock in the AMC, or even for that matter, some leading names which are tossing around for the insurance business. I believe that I think this company will have relatively much stronger play to operate on going forward. So this current price surge, I think, doesn't mean much. Maybe some correction in the price once again gives you an opportunity to buy into. This company looks set for, I think, next 5 to 10 years of a solid journey. So one would stay invested in this business.
You know, another sector that I just want to pull up is real estate, only for the kind of consistency that this space has been showing. The index has hit a 52-week high as well. Let's pull up the winners in this pack today. When we look at, the real estate space, we talked about a Signature, but even if you look at a DLF, a Sobha, all of them are doing not too badly. Sudeep, I'm going to come to you here over what you see with a little more potential on the charts.
Yeah. See, out of all these real estate names that we have discussed, I guess Shobha as well as DLF, they both are looking very good on the charts. And if you see Shobha, the developer specifically, there has been this consolidation breakout that has happened 4 or 5 sessions back above 1520, and since then the stock has not looked back. So from the current levels, also I feel that the stock could do well from here, and one can look into this particular stock with 1600 as a stop loss on the downside, and probably this momentum could extend up to 1720, 1740 on the upside.
Godrej Property is also doing fairly well over there at 3%. But Samina, you were pointing out
I think Tata Investments. Devane, you've got an eye on this one. 20% up move in the last few days on back of that semiconductor unit approval. It's been happening upper circuit every single day. If there's an opportunity, do you think tactically this becomes a good investment? Devane, that question was for you.
Sorry, Samaya. I think I missed that question.
No, I was asking you if you've been tracking Tata Investment on back of the approval for the semiconductor unit. The stock is already up 20% in the last few days. Further upside, tactically, could this be one you'd add to your portfolio, recommend it?
Not really. I think, frankly speaking, I think we go with more of the investing company of Tata Investment. And I think that is where we feel more comfortable, be it in Tata Consumers, I think where we feel more comfortable about continuing with our investment, or even for the matter, I think the other businesses recently launched Tata Technologies, which is part of Tata Motors as well. I think so we probably, I think, look at, I think, some of these operating companies which are part of the investment books of the ultimate parent group. We find them, I think, more interesting to buy into the portfolio.
What would you invest in, Devane, for the semiconductor play? Because the Tata semiconductor pitch is actually massive. It's a 90,000 crore plus project, plus of the 3 new semiconductor plants that have been announced last week. The Tatas are the only one who are going to be involved in the fabbing portion of it, which is the toughest, the most cutting edge. What would be the play in terms of an investment that you can make?
Well, as I understand, I think, and study the industry, I feel that first 3 to 5 years, I think for most of these companies are going to be the challenging years, largely because of the fact that on the one side, you have got a significantly large amount of capex to incur. On the other side, I think the output against that capex is not going to be very smart in the beginning periods, definitely for sure. And to a greater extent, I think one will have to see the success of these companies based on how exactly they bring down the cost of production and store the margins up. So all in all put together, I think this is going to be a play which is at least 2 years from now, I think, not immediately. And we probably keep an eye on this industry, how it pans out, how it rolls out the business plan. As of now, I think the larger focus remains on the green hydrogen part of the activity, where probably the entire ecosystem is coming into play in the financial year 24-25 and thereafter. So we believe that I think that will be our first focus area. We'll probably play more renewables at this point of time, and then probably look at the fab business which you talk about.
Right. Well, thank you, Sudeep. Thank you, Devane. Great having both of you on the show. The markets are holding steady. It's not a runaway rally on the street, but 22,400 is being respected for now. We'll take a break. We'll come back. We'll talk to the management of Kaynes Technology, try and understand how business is looking. They are also awaiting approval from the government on the semiconductor unit. More on the other side.
The farmers' protests have been making headlines. Indian farmers have demands such as legal guarantee on MSP, pension and debt waiver, no hike in electricity tariff, reinstatement of Land Acquisition Act 2013 and more. But while the protest becomes important from the point of view of elections and politics, it's not just India that has its farmers agitated. The streets of Spain, Belgium, Hungary and Poland have been roaring with protests by farmers too. Around 1,400 tractors took part in a protest in Poland and roads were blocked across the country. What do they have a problem with? Rising production costs, falling sale price, stringent regulations. They say that the European Union is not doing enough to stop cheap imports from Ukraine, which is affecting the demand for local produce. They are also not happy with the European Union's Green Deal that's designed to zero out pollution by 2050 because it limits the use of pesticides, which in turn affects yield. In Greece, farmers have demanded lower electricity prices, tax-free diesel and subsidized animal feed. In France, farmers have been fighting for improved pay and protection from foreign competition. The French government offered 400 million euros, that's $436 million, in various measures in reciprocation to their problems over low earnings, heavy regulation, and unfair competition from abroad. In Germany, farmers are against the government's decision to phase out tax concessions on agricultural diesel. Their argument is that this will lead them to bankruptcy. In Romania, the protests stem from anger about low prices for produce, rising costs, imports of cheap foodstuffs, and constraints imposed by the European Union's drive to fight climate change. In the United Kingdom, farmers are struggling to keep up with weather changes and war-related supply chain disruptions. The whole of Europe seems to have the agricultural sector in pain as climate change becomes a central focus and production prices increase. And no, it doesn't end there. As per Down to Earth, since 2023, farmers have protested in 67% of countries in South America region for a variety of reasons, such as wanting better export exchange rates and reduced taxes amid an extended economic downturn and Argentina's devastating drought, which have severely damaged crops and agricultural output. And look at this data. Farmers' protests have happened in 12 countries in Africa, 11 countries in Asia, 24 countries in Europe, 8 countries in North and Central America, and 2 countries in Oceania in just a year's time. So let's boil down all this worry to 5 main reasons, India included. Pricing of produce, delayed compensation or subsidy, unfair effects of climate change, policies and regulations, import and export.
Welcome back. You're watching India Market Open. It's a flat day of trade on the street, but one stock that's been quite a street favorite, not just today, but in the last couple of months has been Kaynes Tech. With so much happening and being such a diversified player, now of course awaiting the approval for its semiconductor unit. We have with us Jairam Sampath, Whole-Time Director and CFO at Kaynes Technology, joining in. Good morning, Mr. Sampath. Thank you very much for joining us. Sir, your company, of course, is commendable to say the least. Operationally well run, your expansion, the Digicom recent acquisition you did in the US. There's a lot happening, but let's start with the most newsy point, which is where I believe the approval for your semiconductor unit has still not come through. If you can help me understand the reason, I'm calling it a delay because there were a few announcements for other companies that happened over the last few days. Yours didn't come through. Give me a sense of timeline of when it's expected and any details, milestones that need to be completed from your end before the ministry goes ahead and allows this or, approves it rather.
Anyway, thank you. Good morning. So what happened last week, towards the end of the last week, they had announced large projects approvals, and that heralded the beginning of a slew of announcements the government is supposed to make. Obviously, one can expect that large projects will be announced first, because they have probably gone into more details and they've been kind of working with them earlier. As far as we are concerned, all the data that's required from our company side has been given, and it's in the final stages, and any time approvals could come through. I'm very happy to note that already government has taken the few steps that's required to start announcing these, especially these semiconductor subsidy projects. And we expect it anytime.
Any indication, Mr. Sampath, from the ministry in terms of timeline? Could it be a few weeks? Could it be a few days, a couple of quarters? Just anything would be useful.
It is more like a few days.
Oh, lovely. Okay.
Yeah.
Okay. My next question to you is for the semiconductor unit. Any collaborations that you have? I do believe there are a couple of partners as well. If you can bring us up to speed about that, and what sort of arrangement do you have with them? Is it profit sharing? Is it annual fees? Give me a sense of the deal. And also talk about the, the addressable market size that we can expect. I know it's a few years out, but nevertheless.
Sure. So that's an excellent question. The reason why our company got into OSAT and also the high-density interconnection PC board fabrication is that we want to become an integrated EMS player. And we think that in over the next 5 to 10 years, there'll be technology shifts and so on, necessitating the simple EMS players to do currently assembly and some little plastics molding and some fabrication, metal fabrication, to also have capabilities in semiconductor assembly, that is OSAT, as well as fabrication of high-density interconnection board. That's simply because the entire electronics footprint is shrinking with improvements and so on. Having said that, our company has always thought about what happens to future. Of course, at this point in time, there are government subsidies and there's a lot of encouraging, let's say, environmental push available in the country. Yeah, it's also balanced with challenges of not having an ecosystem, etc. So we went and actually acquired 3 different technology partners, one from Malaysia, one from Taiwan, another one from Japan. The idea is to get a little bit of, let's say, ahead of the curve in terms of understanding in different areas. We start with, of course, low to medium range of OSAT, and then we go quickly into slightly more advanced, and finally, our destination is to be an advanced OSAT company, just like any company in Taiwan would be. So we always believe that at this point in time, given the government's excellent track record in terms of pushing high-tech industries and so on, I think the right thing to do today is to aim to be among the top in terms of leading-edge technologies in the world, rather than take something which is older technology and try to struggle with it. So we have put that into our plan, and as far as the work with the government is concerned, it's very heartening to note that government has played the role of a catalyst, and they have augmented our plan. They've got a very nice set of experts who know about these processes much better, and they have helped us to even improve the plan a little bit.
Right, sir.
Talking about company being profitable even post the subsidy regime.
Right. Sir, sorry, I just want to try and get to very basic questions in. Tell me, what is the addressable market size over here, and when will this become revenue accretive? It usually takes 3 to 4 years. I believe you're working against time and aiming to have the facility up and running within 2 years. Confirm that timeline from the day the approval comes in, and what is the sort of contribution you expect on revenue and margins here?
Oh, sure. So in terms of addressable market, this is a global market. Global market of semiconductors is the addressable market. So obviously we ours will be a smaller kind of, let's say, capacity compared to all the global players that are there. And we will be actually, all of it will be exports actually to begin with. And we think that the total investment in the project originally contemplated was 3,000 crores. Now it's going to about 4,000 crores totally. This is the total capex, of which the company has already raised funds for our share of the investment, and remaining is going to be funded through various subsidy schemes of the state and the central governments. And we think that first 2 years will be the pre-op years, pre-operating years, where we don't expect significant revenues, but more to do with working to begin with a proof of concept and then to work with all our clients to get approvals, because this will be the first time that an Indian OSAT company will actually produce semiconductor chips. And so all these global clients will have to approve it in terms of reliability and all of that. So we expect first 2 years to be spent in establishment of capacities and approvals. Right. Somewhere during the second half of FY26, we start getting revenue.
Mr. Sampath, Tamanna here, just wanted to understand that this project, and of course, hopefully you will get your permission soon, where does it lie in the value chain? Is it going to be an assembly? Is it going to be fabbing? And what is the kind of investments that you need to make, of course, apart from whatever the PLI scheme provides?
Yes. Yeah. So this, in the entire electronics value chain, of course, there are semiconductor companies who design these semiconductors. And then there are foundries and front-end fabs who manufacture what is known as a wafer die. Okay? So we are recipient of this wafer die. These are circular discs of wafers which come in. And then we take this and then we convert this into a integrated circuit, which can be placed on a PC board. So there are different stages in this. And these can be simple, these can be complex wafer dies. So this is also known as semiconductor assembly. And contrast that with the EMS assembly, when many of these semiconductors, when they are taken and assembled onto a PC board, that's called the electronic board assembly or PCB assembly.
So understood. So this is going to be an assembly sort of part of the value chain. I just want to understand in terms of revenue contribution. Of course, the automobile sector is the lion's share right now, and I know the semiconductor piece is through a subsidiary which is part of Kaynes Technology. I just want to understand what the structure is going to look like going forward. Is this going to be a larger contribution to your revenue, or will the auto sector, of course, be the lion's share?
Yeah, if you were to fast forward another 4 or 5 years hence, let's say FY28, we have more than about 20-25% of revenues through the newer streams of business, such as semiconductor assembly or OSAT, as well as the PC board. So perhaps it will remain the similar way. And this business is sensitive towards capital. It's quite capital intensive. How much of investment you make, that is the kind of growth that you can get. So the way we have configured our business is that after 4 years, we should be able to generate cash flows rich enough to afford reinvestment into this business and then add capacities. So I would say that this would probably grow similar to our existing businesses are growing at this point in time, let's say compounded annual growth rate of about 40 to 50%. And this growth will start with a kind of a offset. Sometime in FY28, you will start seeing some good revenues, 80% utilization, etc. Post that, it is completely dependent on how much more investment we do, because these are high asset intensive industries. And for X amount of, let's say, investment, you get X amount of sales, almost 1 to 1.5 times is the kind of ratio. So we think that going forward, let's say, fast forward to FY30, when we will have all of these 4,000 crores of total capex yielding revenues. So revenue could be about 4,000 crores in just this stream alone in FY30. And we can say that, at least from the EBITDA perspective, maybe 20% of this would be EBITDA. So yeah, we would have about 500 crores of investment possibilities from FY31 onwards. And so that's how additional investments will be made, and that's how additional revenue growth will be made.
All right. Thank you, Mr. Sampath, for joining us and giving us a sense of, this new foray. Of course, the timelines also matter, and whether you will have more announcements in the next few days is crucial. Remember, once election dates are announced, and if there is no clearance before that, it might push it down the road. So that's one factor definitely to look out for. We'll take a very short break, but our run of exclusives continues on NDTV Profit. On the other side, do watch this conversation with Coal Secretary Amrit Lal Meena, talking about India's preparedness in the thermal power sector and more.
Co-presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
Hello and welcome to NDTV Profit. Today we will talk about tattoos and the worth of this market. The history of tattoos in India can be traced back to prehistoric times when tribal people were captivated by drawings on stone or wood walls. Their attempt to replicate these figures through needles gave birth to the practice of inking skin. Over the course of time, tattoos were embraced by tribals as a mark of bravery, war, religious beliefs, customs, marital status, protection from the male gaze, and so on and so forth. Today, in 2024, tattoos have become a means to express thoughts, individuality, personal experiences, and sentimental designs. The industry is estimated to generate over 20,000 crore rupees per year. What is driving this growth? One of the key drivers behind the growth of the tattoo market is the rising demand for customized and unique designs. Improved technological equipment for making advanced, safer, and painless tattoos have boosted the market. The laser technology for removal or modification of tattoos have also added to the surge. Increased exposure and promotion of tattoo designs on social media have led to widespread influence of tattoo culture on the youth. Take a look at these figures now. As per Fortune Business Insights, the global tattoo market is projected to grow from $2.04 billion in 2023 to $3.93 billion by 2030 at a compound annual growth rate of 9.87%. This is a sharp rise from 3.8% year-on-year growth between 2017 and 2022. As per Custom Market Insights, the diamond jewelry market is expected to grow at a compound annual growth rate of 5.5% by
Well, power demand in the months of Jan and February is up 5% YOY despite a higher base. Coal stocks are at record high levels to prepare for what could be a grueling summer as well. To talk about all of these preparedness and the demand ahead, Coal Secretary Mr. Amrit Lal Meena is with us. And of course, we weave in the resurgent importance of the coal sector. Meena ji, thank you so much for talking to us. I would love to understand from you, sir. It is now well understood that India's growth cannot be fueled by renewables alone, and conventional power becomes a very important source if we want to track the kind of GDP growth targets that have been laid out and that are desirable. So I would love to understand from you, how do you think about the preparedness of the country on the thermal power side and the availability of resources, namely coal, to be able to meet the demand that might come up?
Ministry of Power has long-term plans. So Ministry of Coal is fully aligned with the requirement of the coal for the thermal power. As per the estimation, we are ready with the roadmap to supply coal for the new capacity that is coming up for new thermal power plant. This year, our production is about 11% higher over last year, the enhanced base of last year. It is likely to touch about 1 billion ton. We have plans for the year 2030 by that time our production will go up to about 1.4 to 1.5 billion ton. So whatever is requirement of the power sector for meeting the thermal plants need, we will be able to meet that. That is our plan. This year, at the end of thermal power plant, our stock is more than 41 million ton, and the total stock is more than 127 million ton at the moment, and it is on rising trend. We hope to have higher stock by the end of March, so that the requirement of the summer and also the next monsoon is taken care of. I am very happy to share with you that now, because of the close coordination and augmentation of the railway rakes, about 6% extra rakes have been made available during this year. So the supplies to power plants is at higher scale, and we are hopeful that in times to come, we will be able to supply adequate coal to meet the demand of the thermal power plants.
For the last few years, admittedly, the addition of thermal power capacity was not at the highest. I mean, people were tilted towards renewables. I think that is now starting to change a little bit. Do you reckon that all that you outlined to us right now as well will be enough, both in terms of availability of coal and the supply chain issues not being there, to meet the enhanced demand, let's say not in 2024, but maybe starting mid-2025, sir?
Yeah, see, Ministry of Power has plans to create additional 80 gigawatt of the thermal power capacity by 2030.
Right.
And all power plants which are proposed to come up, for them the long-term coal linkage Ministry of Coal is agreeing to as and when the proposals are received. And we are confident that adequate coal will be ensured for all those new capacities which are likely to come up. I will also like to apprise you that now the railway infrastructure augmentation is taking place. Many of the new lines, third line, fourth line are coming up. The Eastern Dedicated Freight Corridor is already operational. The average speed, which used to be 15 km per hour from Dadri to Sonnagar section, is now about 45 km per hour. So all this has added, and we have long-term plan for infrastructure augmentation by having new railway lines from the coal-producing areas. And also the Ministry of Coal is having the first mile connectivity projects which help in faster loading and eco-friendly transportation from mine to the loading point. So on all front, work is happening, and I am quite sure that neither logistic constraint would be there, nor the production constraint would be there. There would be adequate coal for the requirement of the thermal power.
Got it. Just one follow-up question on that availability. And I believe coal stocks at power plants are currently at circa 15 days, maybe the highest that we've seen in the nearly 3.5 years. So I believe we are well prepared for the current summer. I was just trying to wonder what could happen once in 2025 and maybe some of the power plants come to the fore. But the added part of my question, sir, is how would the mining process between what Coal India does and the preparedness for Coal India and the permissions thereof versus the non-Coal India private sector coal mining shape up over the course of the next, let's say, 3 to 5 years?
See, first, I would like to tell you that the stock as of today is sufficient for 19 days, not 15 days.
Okay.
It is 19 days requirement worth of coal is available at the thermal power plant. As regards the clearance regime is concerned, see now with the operationalization of captive and commercial mines, more than 50 are already under production, and another more than 50 are under different stages of seeking the clearances. So now the regime of clearances is very well established, both at the level of the state governments and also at the level of central ministries. So in most of the cases, the auction holders and the PSUs are getting clearances broadly within the stipulated time frame. And we have very strong coordination and monitoring mechanism by which every monthly basis, every state issues are discussed and timelines are fixed for resolution. And clearances, delay in clearances are not really now an issue in operationalization of coal mines. The system and processes are very well laid down, and whomsoever is taking coal mines in auction, they are able to have the coal mines operationalized generally within the stipulated timeline.
Okay, so in some sense, sir, you're saying that while demand will not be an issue for sure, God willing, the economy grows at a faster clip and demand will not be an issue, but supply side issues, for example, will not hamper, let's say, Coal India's ambitious targets, right? There are beliefs of 85 million, 850 million in FY25, 1.25 billion by in the next 3-4 years, or 4 years, if you will, for Coal India. Supply side issues and supply side bottleneck constraints will not be an issue when it comes to meeting these targets.
Certainly not, because Coal India has long-term plans. They have planned to augment the capacity of existing mines. They have plans to open up new mines, and there is complete detailed micro planning. This year, the target of Coal India is 780 million ton. Last year, Coal India achieved 703 million ton. So they will be broadly touching 780 million ton this year. Next year's target would be around 840 million tons. So Coal India will achieve. And then we have a long-term plan for next 3 years and the 5 years. So there is complete detailed micro planning for each and every coal field. And I'm sure there will not be any uncertainty as far as the contribution from CIL is concerned.
Okay, I believe 1.25 billion tons in 3 years. Is that a correct assessment?
See, there are year-wise projections for 24-25, 25-26, and then up to 29-30. Year-wise assessment is there. There are figures. It can be shared separately, but whatever is the requirement of the economy, we have plans of the production. See, whatever coal reserves is available in country, we are aiming that the country need not import that form of coal. But whatever coal is not available, like the coking coal and the high-grade thermal coal, that will continue, of course, to be imported. This year, you might have seen that the share of imported coal in the total consumption basket has gone down. We come to the blending coal for the thermal power plant, there is dip of about 36% in first 10 months of this year. And this trend is continuing and will continue.
You have mentioned yourself that the coal and lignite gasification projects are important. I believe you've done some roadshows. What has been the response to that? And what would the impact of something like this be if it is as successful as you hope it to be?
After meeting the demand of the coal for the power and other sectors of the economy, now since we are going to have surplus availability of coal in years to come, therefore it's time that we promote coal gasification so that some of the chemicals which are otherwise being imported are manufactured based on this coal gasification. So keeping this in view, government has approved a policy for promotion of coal and lignite gasification. And after that, we have undertaken 3 rounds of the investors meet. The response is quite encouraging. We are seeing a lot of interest from the industry. They want to set up these gasification plants. There are certain PSU-led projects also, and we'll come out with the draft RFP very soon, and thereafter with the final RFP.
Completed 50 years in India. PM Modi will attend the Silver Jubilee celebrations of the Gujarat Cooperative Milk Marketing Federation, the owner of Amul. At one point of time or the other, we've all grown up with Amul butter or milk for sure. The famous Amul girl created in 1967 is family. We all recognize her. But as the brand grows 50 years old today, do you remember the full form of Amul? It is Anand Milk Union Limited. From producing 250 liters of milk per day since the time Amul was formed back in the mid-90s to today, where Amul has over 36 lakh dairy farmers and produces nearly 300 lakh litres of milk per day, the brand has had a long journey. The story goes way back in time. In the 1940s, dairy farmers were worried. The middlemen exploited their ways of profitable income, and a poor milk production system made their living difficult. Tribhuvan Das Patel and Verghese Kurian identified these issues and helped in the formation of the first milk union called Kaira District Cooperative Milk Producers Union in 1946. The cooperative model gave farmers direct ownership of the dairy industry. The union helped them process, market and sell milk and milk products without the interruption of intermediaries. And it was in 1955 that this union chose a brand name for itself called Amul, which means priceless in Sanskrit. And then, in 1973, Amul Dairy, along with 16 other district cooperatives, formed the Gujarat Cooperative Milk Marketing Federation, which has now completed 50 years in India. Amul also started India's White Revolution that made our country the world's biggest maker of milk and milk products. The brand follows an umbrella marketing technique which has helped GCMMF prevent association clashes and keep an open door for the patrons to coordinate in creating items. As per a report by Statista, the annual sales turnover of Amul from 2011 to 2023 has consistently risen, recording about 55,000 crore rupees of turnover in 2022-2023 alone. And did you know, Amul has also held a Guinness World Record for having the longest continuous run of any advertising campaign that has ever taken place anywhere in the universe. Amul Doodh Peeta Hai India and Utterly Butterly Delicious will always strike a chord. Let us know which famous advertising phases of Amul do you remember.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam.
Thanks for tuning into Talking Point. I'm your host, Neeraj Shah. The case for a chat today, especially after such a strong move that has happened the whole of, actually not the whole of last week, but mainly Friday, is that with the markets at all-time highs, what is next? If it's even possible to answer that. But we'll pose that question to our guests for sure. Do select pockets of Indian markets still appear attractive on a valuation basis, or is it all expensive? I think that's an important conversation to have as well. And amongst all that's happening within the semiconductor space, etc., do manufacturing and EMS come firmly into play? I think let's pose those questions amongst many others to Gautam Trivedi. He's co-founder and managing partner at Nepean Capital, joins us right now on the show. Gautam, so good having you. Thanks for taking the time out. I hope all is well. And yeah, this buy the Indian market at every dip just continues, valuation notwithstanding. Is this something that is surprising you as well, or are you kind of the belief that that's how the trajectory will be?
No, I think it's surprising a lot of the people who've been in this market like myself for over 2.5 decades. And the fact is that I think we have the baggage of history, if I can put it that way. We've seen this movie many times before, and sometimes we've seen this not ending very well. So I think what's different this time is the fact that you've got a whole bunch of new investors that are entering the market. I'm referring to the domestic retail investors who were not present in the previous bull markets as much, because a lot of the previous bull markets were led and driven primarily by the FPIs. And again, year to date, FPIs have been net sellers of over $4 billion. So I think this is more of a rally led by domestic investors as the penetration of the equity culture continues into India.
Most certainly. So, Gautam, explain. It's interesting you use the term baggage of history. Is this, and yes, you're right, these reels have played out multiple times in the past, sometimes not ended too favorably. Do you expect a bit of a quote-unquote hard landing in some sense, or do you believe this this flow of money kind of helps cushion any kind of sharp blows that Indian markets may take?
You know, that's a very good question. I hope there's no hard landing, because the newer investors who are investors for the first time in the Indian equity markets, I hope they don't have a bad experience. I mean, a correction is always good, and the fact is that if they get a correction of 5, maybe even a 10% correction, I'm talking of an average correction, it will, I think, make them wiser, make them more mature, and hope that they continue to invest in the Indian equity markets, because that's something which this country really needs, as we have the need for capital to grow this economy at 8, 9, 10% GDP growth, and to see a Prime Minister's vision of becoming Viksit Bharat. So I think that equity culture has to come from within. It cannot only come from overseas. So I think there needs to be a correction, no question. Now, if you look at where exactly are the two pockets of pain or potential hazard, one would be the F&O market. Okay, so the F&O market, as we know, 180 odd stocks, and of course the index. So that's one aspect where I think the froth clearly is, because 99% of the daily traded volumes in the Indian Stock Exchange are F&O. So that's one bubble. The second bubble, of course, is small caps followed by some mid caps. So you've seen that also happening. In fact, interestingly, you brought it up because we ran a screen last week of the top 1,200 stocks in India. 880 stocks, I repeat, 880 stocks, or 73% of the 1,200 stocks are up 36% or more from their respective 52-week lows. And the reason I take a benchmark of 36% because the BSE 500 over the last 12 months is up 36%. So if I take that as a cutoff, 73% of the top 1,200 stocks in India are up 36% or more. Of course, so many of them are up 100%, 200%, 300%. But the point I'm trying to make is that that's where the froth is, and I think that's where the correction needs to come.
Okay. Fair point. So not the whole bucket, but specific pockets which have rallied quite a bit is something that, Gautam, I presume you would be worried about as well. Tell me something, Gautam. There has been this development of this whole new set of sectors that have come to the fore, right? And I'm trying to wonder, and most of them are not necessarily in the Nifty 50 or Nifty 100, but beyond that. Mid-cap, largish mid-caps, or small large caps, as the case may be. What has impressed you from there the most? If 2023 was a year of defense, that came to the fore in railways, suddenly this whole semiconductor play is coming to the fore as well. What is standing out for you?
I think you make a very valid point. There are certain businesses that didn't even exist 5, 6, 7 years ago that are now getting listed. So, you know, we had only 2 companies in the EMS space, Dixon and Amber, and of course, PG, Electroplast, maybe 3 companies. But now we've got about 15 companies that are listed in the EMS space. And I firmly believe that the EMS space is where the Indian IT sector was 25 years ago. Valuations notwithstanding. So I'm not saying they're all buys right now. Point I'm trying to make is the growth that we're seeing in this sector is similar to what we saw with the Indian IT space. And I think the Prime Minister has done a phenomenal job along with his core team of ministers to market India to the outside world and bring semiconductors, bring televisions, mobile phone sets, etc., to get manufactured in India and as an alternative to the China Plus One strategy. So I think that ecosystem that we're seeing is developing. It's in its nascent stage in this country. And I think you'll see the fruits of that over the next 5 to 10 years definitely play out. So I think these are some of the emerging sectors. Again, like I said, they're not necessarily all buys today only because valuations are expensive. But I think from a longer term perspective, if an investor has a 3 to 5 year view, I would certainly start accumulating some of these names.
Okay. And you're not saying you'll probably wait for a better valuation, or do you think high growth will take care of these higher valuations?
You know, the question really is more to do with the fact that is the correction that we spoke about earlier today, is that correction coming? And if that correction is indeed coming, then I think it's better to hold off. And if you get some of these stocks 5-10% lower, that's the best time to build up a position. Again, what I'm saying is true for the whole market. It's not necessarily only for the EMS space, given the fact that, as I said, 73% of the top 1,200 stocks in India have rallied 36% or more. And the list is even more staggering when you look at the stocks that are up 100% or more. So the point I'm trying to make is these are stocks to keep on your radar and on your list of stocks to buy as and when the correction starts to set in, which I hope happens soon for the majority of the market.
Viewers, keep in mind, Gautam Trivedi is not predicting when the correction will happen. He's merely saying that at some point of time the correction should happen, a healthy correction should happen. Gautam, one follow-up. If at one end we have pockets like EMS and some others, at the other end, we have in HDFC Bank, we have maybe a Kotak Bank, etc. It's befuddling some of the best minds of the Indian stock market as to why is it that these stocks are not quite moving. And yes, one of the factors could be the global supply, which has kept them at bay. But then the question comes, when do these stocks, which have been great stocks for so many years, and the growth rates aren't that bad, save for maybe HDFC Bank having these merger-related issues. What's your prognosis on this?
No, I think it's a very valid question with respect to the fact that, for the longest time, you thought private sector banks, were the gold standard, and the PSUs, were really not well run, no skin in the game for the CMDs who were running it, and, lackluster investor appeal. That's, of course, gone 180 degrees as balance sheets got cleaned up, and the fact that, these banks, the PSU banks, became more prudent or seem to have become more prudent in their lending practices. So I think as a result of that, you've seen a gigantic investor sentiment surge towards PSUs and away from privates, HDFC included. So I think that correction in terms of time correction is still happening with the private sector players, including HDFC Bank. I think specific to HDFC Bank, as you asked, there is, I think, a bit of a wait and watch as the merger of the two entities plays out and the impact of that on the balance sheet, as we've seen over the last few quarters, starts to play out. I think people want to see evidence that the issues of the past are behind them. And from here on, HDFC Bank is back on the growth trajectory. Otherwise, you would not get this bank at half the valuation that it's historically traded over the last 20 years.
Okay, point well taken. We need to slip into a quick break, but just before I do that, Gautam, you mentioned this very important point about private banks versus PSU banks as well. PSU banks have had a rally, but we were doing some numbers. Despite the upticks that we've seen, some of them still traded at par on book, and their internals have significantly improved as well. So while there might be better value in private sector banks optically, are PSU banks an avoid, or selectively some of the PSU banks also offer value?
It's a broad statement, and I think you've got, at one breath, you've got a State Bank of India, which is, as always traded at a different valuation than the rest of the PSU banks, and has a different level of respect, should I say, from the PSU banks. So, but at the same time, if you look at the number of stocks that are now in the top 100, you've seen a lot of other names come in there, Canara Bank, Punjab National Bank. So, in the top, if I look at the top 100 stocks in India, and that's the large cap definition by SEBI, you have a total of 21 PSUs, and not PSU banks, but 21 PSUs, which is remarkable. You always had the OMCs in there, you had ONGC in there, but now you're looking at so many more PSUs come in. So I think the overall sentiment clearly has improved for PSUs from an investor's perspective. And yes, you may still have some PSU banks that may be trading at sub 0.8 times or definitely sub 1 times book. But again, it's very stock specific versus having a broad generalization.
Point well taken. Okay, Gautam, stay on. So much more to talk about. We need to slip into a very quick break. We come back from the break, talk about some of the recent developments. There is some developments happening in the power sector as well. We'll try and get Gautam Trivedi's view on that, and some more long-term thought processes that he inculcates in his investing process. Stay tuned.
Presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Hello. Good morning, ma'am. I'm speaking from XYZ company. Are you looking for a job or a job change? Have you been receiving unwanted calls from spam numbers? Are you tired of being offered new jobs, insurance schemes, or free health checkups? Well, today we will look at an interesting survey report by Local Circles on pesky calls that received 60,000 responses. Most unwanted calls are related to financial services, 54%, and real estate, 22%. In fact, the report has taken names. 40% mobile subscribers have identified Bajaj Finance as a top offender, HDFC Group as the second biggest pesky caller. The report reveals that 60% of people received 3 or more spam calls on an average day every day, and 92% of people registered on the Do Not Disturb list still get pesky calls. So is being listed on DND working? Clearly not. But the report also recorded a minute relief, as per which 6% people don't get any such phone calls. This relief comes after the TRAI directive to banks, insurance companies, and other commercial entities. TRAI is the Telecom Regulatory Authority of India. In fact, the Department of Consumer Affairs has constituted a committee comprising members of different regulatory authorities, telemarketing companies, and cellular industry to draft the guidelines to address the issue of pesky calls. So yes, pesky calls are still a worry, but there is a little relief too. Can you ignore them though? Toll-free numbers are identifiable, so institutions have found a new way. According to the report, calls from different mobile phone numbers that seem to belong to companies or brands have risen from 29% in February 2023 to 36% now. And look at the change in trend. Real estate selling has risen from 18% last year to 22% now. However, job offerings have decreased from 10% to 4%, and in the case of those selling financial services, the calls have slipped from 60% to 54%. So the bigger question is, will the nuisance of pesky calls end anytime soon? There should be a system where pesky callers are blacklisted at the Aadhaar level, so they have the risk of not getting a new SIM. Also, brands on whose behalf the contracted callers are calling also need to be held accountable by the Department of Consumer Affairs, so brands institute the right consumer outreach practices both with employees as well as third-party contractors. For more such updates, stay tuned to NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it.
Back with Talking Point right here on NDTV Profit. The wind industry stocks are in focus. The Ministry of Power has decided to potentially bring back reverse bidding as wind tariffs rose in the auctions gone by and demand also was presumably low. If this confuses you, first let's get in Varsha Chandani, my colleague, to try and explain what is this development and how it could impact. Varsha, good morning.
Good morning, Neeraj. So as you rightly said, first let us see why wind stocks are under pressure, or rather which wind energy stocks are under pressure. So if you see, Inox Wind is down 5%, Sanghvi Movers is down 7%, and KP Energy is down 5%. Now, according to some media reports, Ministry had decided to bring back reverse bidding as wind tariff rise in auctions. Now, Ministry has sent letters to agencies for the same. Now, this is on the back of undersubscription and high tariff discovery in recent wind bids. Just for an overview, there are two types of bidding. One is reverse and the other one is closed bidding. Now, under reverse auction, bidders continue to bid against each other after the initial bids are opened, until a bid tariff goes unchallenged by a counter bid. Now, incidentally, the ministry had given up this reverse auction at the beginning of this financial year. The method did bring down tariffs, but the problem was company had a lot of inventory that they sold the inventory at such a low prices, which led to poor capacity installation, which affected the wind industry as a whole. So with this, the reverse auction was given up and the closed bidding system was adopted, to which tariff did rose. But NDTV Profit did spoke to Inox Wind management in Q2 FY24, wherein he said that last time there was a problem as everyone had an excess inventory and sector was also not doing well. But now situation is different and government has target and company don't have excessive inventory. But so this shouldn't affect Inox Wind or any such wind company stocks. But let's see what happens.
Yeah, well, for now, the stocks have certainly gone down. So viewers, I hope you got a basic understanding. Now, Gautam, I would love to understand from you. I don't know if you looked at this space at all or no, but the company after company has come and said that OEM suppliers are not going to be supplying at losses and this may not necessarily impact. But there's a change in policy and the stocks are down today. How do you look at the wind energy space growth per se over the course of the decade? And are these near-term impediments large enough or will they be taken into stride?
You know, here's the way I see what's happened in the wind energy space. I think the government's focus, and at least until a few years ago, was largely on solar and making sure the solar manufacturers did well, succeeded in India, and that I think was going well. What I guess at some point dawned upon them was the fact that the solar generation happens only from around 8 o'clock in the morning till about 4:30 or 5 o'clock in the afternoon. So after that, solar power generation doesn't happen, and that was impacting the stability of the grid. So as a result, they went in for hybrid bidding and basically, I think most of the PSUs are now doing hybrid projects when it comes to renewables. So it's not only solar, it's solar and wind. Starting from the 1st of April of last year, very clearly the government announced that they will auction as much as 10 gigawatts per annum of wind projects or 2.5 gigawatts every quarter. So I think that itself was a blessing for the wind energy industry. And as you said, this whole industry was actually in big trouble, both financially as well as in terms of the overall business. But a lot of balance sheets have been cleaned up. You've seen the stock prices of the two, and there are only two listed companies in this space, both Inox Wind as well as Suzlon. So you've seen a reversal of fortunes for both these companies and, of course, for the wind energy sector. Now, this new announcement which just came over the weekend, the way I see it is, if the government thinks the tariffs are too high and need to be lowered, and the fact that the reverse auction process will end up resulting in lower tariffs, frankly, I'm not so sure if that's necessarily a good thing. Because if you get some of the crazy competitive bidding that we saw pre-COVID or even 10 years ago, we don't need that to come back because these projects need to be profitable. And I'm not trying to put a number as to what that profit level should be or should not be. But yes, this does bring about a more transparent competitive bidding process. And if it does, and if the tariffs get driven down, I think that itself will correct on its own if the tariff structure gets so low that some of these companies may just not participate in the bidding. So I think the market itself should be self-correcting if the tariffs become too low. That's my personal view.
Got it. Okay. Let's see how the decisions move ahead. But the point you're making is absolutely well taken, Gautam. So thanks for sharing that. The other view that I want from you is what's happening to some of the other power-related themes, Gautam. I mean, one is renewable, of course, and the kind of capacities being set up. But we were talking to the coal secretary earlier today. He spoke about how the availability of coal is at 19 days, which is the highest that we've seen in a long time, and thermal capacities are being ramped up. What's your view on the conventional power space as well, which is trying to wade between the two, right? They are continuing the cash flows through conventional power projects, but at the same time also ramping up renewables. So have these stocks moved ahead of themselves, or is there potential for investments there?
No, I think some of these stocks have got multiple other levers than pure thermal generation. If you look at Tata Power, for example, okay, they've got a huge renewable business, which includes rooftop solar. It includes EV charging, setting up a whole nationwide network of EV charging stations. So, this is the conventional energy generation is not the only earnings driver anymore. And you're seeing other multiple businesses, newer businesses that are being bolted on to the existing traditional power generation business. So I think that's what I suspect is driving these stocks more than pure thermal generation.
Got it. Okay. Gautam, earlier in the interview, when we started off, you mentioned about how a correction would be healthy. Maybe you are waiting for one as well. Who knows? But my question is, if that's the mindset with which you are currently sitting on Dalal Street, how are you going about choosing companies in which you deploy money? Is growth the panacea, or are valuations and low valuations the must-have starting point, or something else?
Yeah, good question. So we're actually a special situations fund. So the way we approach investing in the market is we look for stocks that we believe have triggers that will play out over the next 3 to 5 years. So I'll give you an example. We own a company called Eureka Forbes, a very interesting company wherein, again, full disclosure that we own it, but the fact is, very interesting company, wasn't that well run when it was under the umbrella of the Shapoorji Pallonji Group. Advent International came in and acquired 74% of that company. This is going to take a longer time to play out as they restructure the inner workings of the company. They launch more products, and they brought in Prateek Pota, the erstwhile, the former CEO of Jubilant FoodWorks, to come and run this company and turn it around. So I think a lot of positives going for it. So this is an example of the kind of turnarounds that we believe exist in companies. And valuation is one aspect of it, but the fact is what's not priced in from our perspective and what will play out over the next 3 to 5 years. So we are, like I said, more of a special sits. And if you focus on those opportunities, there are quite a few of them in India right now.
Gautam, I have a follow-up to this answer of yours, and 2 questions out there. Since you mentioned special situations, what explains this arbitrage available between Inox Wind and Inox Wind Energy, since you mentioned that you look at that space? Because there is clearly a very large arbitrage there. Part 1. Part 2 of my question, related but unrelated, you mentioned Eureka Forbes, a large block deal that happened. A lot of chatter around how foreign promoters are selling businesses, and therefore why should people invest in them? Clearly, Eureka Forbes was in the buzz for that as well. Can you talk about that?
Sure. I think there is still an arbitrage left between the 2 Inox companies, and frankly, I think it's before the NCLT. So until that happens, there are ways to play this and maybe get into Inox Wind at a cheaper valuation. So be it. But I think the runway of growth for the wind energy space in India is still very large, notwithstanding the reverse auction process that's just been announced. So I think I wouldn't worry about that. Specific to your second question was with respect to Eureka Forbes, right?
Selling, there's so much chatter around this that foreign promoter bech raha hai, so it's a bad news. But well, if you're invested, you don't see it that way.
Yeah, I'll tell you what it is. If you look at the last 6 to 7 years, the one phenomenon that we've noticed, and I've gone on media and said it as well, is the fact that global private equity funds are coming and buying out promoter stakes in listed mid and small cap companies, but keeping the companies listed. And the objective of keeping that company listed is because as and when they need to sell a chunk, they can do so. Now, there could be various reasons to sell a small block or a big block, depending on when they've come in and when they've invested in the company. One could be the fact that they've made a significant amount of money in the stock from the time they got into the company. So that's one. 2, there could be limitations with respect to the life cycle of the fund from which the initial investment came in. That doesn't mean they can't roll it into the next fund that they have raised. But there are multiple reasons. I don't know specific to why Advent did sell a block, but I suspect these are some of the reasons that private equity funds end up using the fact that these companies are listed and use that as windows selling down blocks. Well, the third element, of course, which I would say is increasing the free float, because specific to Eureka Forbes, Advent International owned as much as 74% of the company.
Okay, fair call. Gautam, lovely talking to you. Thanks so much for taking the time out and being with us today, giving us your thoughts. Completely out of time here. But that's the view from Gautam Trivedi of Nepean Capital. And viewers, thanks for tuning into this edition of The Talking Point.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash, made from 51 precious herbs.
Electoral bonds have been deemed unconstitutional by the 5-judge Supreme Court bench headed by Chief Justice D.Y. Chandrachud. They were first introduced in 2018. An electoral bond is a means to fund a political party in India while maintaining anonymity. These bonds are available in multiple denominations ranging from 1,000 rupees to 1 crore in specified branches of the State Bank of India. This was introduced in the system to maintain transparency in political funding via a banking network and reduce black money. But on the flip side of this intention, questions have been raised on the basis of an important fundamental right of democracy. That's right to information. Is it constitutionally right to keep the source of political funding discreet? Why shouldn't the public know who is funding how much money to different political parties? As per the findings of Political Party Watch, a program under Association for Democratic Reforms, 28,030 electoral bonds worth rupees 16,618 crore was sold between March 2018 and January 2024. The Supreme Court's unanimous decision follows a petition filed in September 2017 challenging the Finance Act 2017, which introduced the electoral bond scheme for the purpose of electoral funding. The Act has also removed the previous limit of 7.5% of the company's average 3-year net profit for political donations. The Supreme Court has asked the following corrective actions to be taken immediately. State Bank of India will need to stop issuing electoral bonds immediately. SBI will have to submit the details of the purchase of electoral bonds and their encashment by political parties since the interim order of the court, which is April 12, 2019, to the Election Commission in 3 weeks by March 6th. The Election Commission will have to publish all these details on its website 1 week after, that is on March 13th, after it has received all the information. Electoral bonds that have not been encashed yet by the political parties will need to be refunded. For more such updates, stay tuned to NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Markets gain marginally after opening at record highs. Sensex trades at 73,900, while the Nifty stays about 22,400. Sectoral indices trade mixed, dragged by media and metals. On the other hand, oil and gas and pharma stocks emerge as top gainers. Winds turn against Inox Wind. Stocks down 5% in trade after Ministry of New and Renewable Energy decided to bring back reverse bidding as wind tariffs rise in auctions. And shares of NTPC jump over 3% in early trade, hitting a fresh lifetime high after the company approves investment with a thermal project worth 17,000 crores. And PM Modi unveils 2047 vision document for a developed India, 1 lakh crore budget for future tech. Hello and welcome. This is Meena Nalwala and with me is Agam, and you're watching the FNO show where we take you through all the derivative action in the markets. Well, a quick check on the markets. The Nifty trades flat, trading at about 22,500, 22,400, and the breadth of the market looks okay in early trade. Agam, what's the FNO picture indicating this morning?
Well, at the moment we are looking at flattish movements, but well, new high life highs for the benchmark. The Nifty is advancing by another 0.2%, and now it looks like it's comfortably above the mark of 22,400. Now, this is something of an expectation, because once you see the life high being broken by a benchmark, you are likely to see at least a couple of sessions where you continue to see that advance. This, of course, you know, on a historical basis, that's how things have panned out so far. Bank Nifty, again, we are looking at that advance, but remember that the Bank Nifty is nowhere close to its life high. It does need to move up significantly higher in order to make that point, and which means, and perhaps begs the question, that can we expect the Bank Nifty to, you know, move ahead and catch up with the Nifty, even as we start seeing a lot of contribution coming in from the private sector space, so the private sector banking space specifically, can perhaps, you know, giving that impetus to the Nifty. Remember that over the last few days, it has essentially been the pharmaceutical space and the metal space which has, in fact, well, given the wings to the Nifty towards life highs. But I'm going to talk about the future space. Let's see how things are panning out there. And, you know, at least as far as the futures snapshot goes on March, for March, we are seeing a lot more traction now building in. But, you know, in terms of open interest, not so much. So it's largely flattish, and it's been the case on Saturday as well. And I reckon that this number could change perhaps. But remember that at these levels, if it hasn't been a significant change in open interest, perhaps traders just perhaps are a bit wary of well, what could perceived to be a fatigued out market. But, you know, that's something that we need to ascertain through the course of the day. We will know how things pan out. Moving on to the Bank Nifty futures too, we are looking at a 1.4% increase in open interest towards what we think could potentially be fresh longs as well. Now, what about the options market? That's where things perhaps are a little more interesting, because now we're looking at a wide 800-point range as far as the Nifty is concerned as we go into this trading week. Now, on the lower end, we continue to see a base around 22,000, and this has been strengthened over the past, you know, few sessions as well, even as the Nifty has continued to advance, and it's somewhere around the, you know, the midway mark, not exactly there, but yes, there. And of course, on the higher end, we are continuing to see more and more call writing around the 22,700 and 22,800 calls. So those are the strikes you can perhaps take as another factor in which would provide you with a little bit of resistance on the higher end as we move into this week's options expiry as well. Now, that of course is a change in you know, your overall option strikes and the kind of open interest that we're seeing, and this is perhaps on expected lines. We are seeing a little more put writing around 22,100, 22,200. That is expected. So this is how things are panning out. Very quickly, also taking a look at how Bank Nifty options open interest distributions is panning out. What sort of a range is it throwing us at? And there you have it. That's also a relatively wider range, 47,000 on the lower end and 48,000 on the higher end is what we're keeping an eye on. A quiet day of days, Samina, but we're going to keep an eye on whether or not we, in fact, do start getting a trend towards perhaps the latter half of the session today or even tomorrow. That will perhaps determine where the traders and the investors want to take these indices going forward?
Yeah, I think the street is seeing stock-specific trade, but there's no trend as such that's emerging. So you've got BHEL that's doing really well, 12% higher. Data Patterns is up 10%. Triveni is up 8%. Tata Investment hits upper circuit once again this morning on back of the approval for 2 semiconductor units. The stock itself is up, I think, 300% in the last 6 months. Remember, this is a holding company, but nevertheless, seeing the reaction on that, on back of those semiconductor units being set up. Graphite, HEG, some of the other gainers, all cargo looks okay. Cochin Shipyard is also trading higher. On the sell side, TV18 is down 5%. Some of those healthcare companies continue to look weaker. Railways, fertilizers are also on the sell side this morning. But like I said, no trend, stock-specific trade really that's driving today's action. We're now joined by Shilpa Rao, derivative lead analyst of Prabhudas Leeladhar, who's also joining in. And we've also got Vinay Rajani, CMT senior technical and derivative analyst at HDFC Securities. Thank you both for joining us today on the show. Vinay, I'll start with you first. What is the trade on the Nifty for the March series? 22,400 is pretty much where we are trading at, but there aren't too many fundamental triggers as such. It's all going to be down to the charts and down to the traders. How would you play the March series?
Yeah, good morning and thanks for having me on the show. So Nifty has registered a new all-time high. So obviously the technical setup of the Nifty is looking bullish. And if we go by the rollover data, we have seen that longs being rolled over in the March series from the February, and derivative data is also suggesting a good setup. So if you were to go by the FI's long to short ratio in index future, it is still 0.53. That means FIs are still carrying more shorts than longs in index future. So despite being at an all-time high in the index, still FIs are holding short positions. So I'm expecting a short covering may come by the FIs in the index futures, and especially in the Bank Nifty, because Bank Nifty is still far away from its all-time high, and the kind of setup which it made on last week, I think Bank Nifty is headed higher, and fresh breakouts could be there. And I'm expecting this March series to be fare well for the markets, especially for the large caps and the benchmark indices. Mid caps, small caps may consolidate or correct a bit, because risk reward ratio at this point of time I see better in the large cap space. So Nifty and Bank Nifty, and especially private sector banks, can do well from here. I can see an inverted head and shoulder pattern on the Nifty private sector banks, which can lead the market from here. So overall March series I think will remain good. And if you were to go by the seasonality, for last 15 years, March has been faring well for the Nifty. So returns have been fairly good. So I think this time I don't see any risk coming from the tax aspects for the March. So overall sentiment is good, and US markets are also supporting. And overall, I'm expecting a short-term target for Nifty at around 22,600 to 22,700. And if you were to see the positional target, I think 23,000 to 23,100 is a strong positional resistance. As far as supports are concerned, 22,200 is a short-term support, and positional supports for Nifty comes at 21,800. So I'm giving an entire view for the March series.
Okay, all right. That's Vinay's view as far as March series is concerned, and he's fairly positive going into this particular month. But we also have Shilpa with us. Shilpa, good morning. How about you? How are you reading the benchmarks?
Good morning, and thank you for having me on the show. Talking about the indices, as rightly put by Vinay, I also believe that the March series rose, though were in line with the previous 3 months average, but the tilt towards the bulls was more clearly visible. But of course, we cannot rule out the fact that the LSR, the long-short ratio is still at 35-37% net longs for FIs. But this is again in sync with the move that, we are good to see 22,800 to 23,000 likely this series, wherein this long-short ratio for FIs can increase towards 60% net longs. So I would still be, bullish until and unless we are holding 22,300, and this move will definitely get to 22,600 to 22,800 in coming sessions. Talking about Bank Nifty, yes, above 48,500 will trigger a very strong, upside value towards 50,000 mark, and we believe that, March series will likely see these targets getting hit.
Right, that's the call on Bank Nifty and Nifty. Shilpa, you want to start by telling us your specific trading calls this morning?
Yes, I have two buys. The same has been, given at Prabhudas Leeladhar around these levels as well. So one is India Mart. India Mart, has a very strong volume, participation today, and I believe it is all set to test 2800 zones, a little positional. So the futures trading at around 26801 can buy on declines till 2650, keep a stop loss of 2620. I believe 2800 to 2850 is the target and the, profit booking zones one can look after. The other one would be a buy in ABB. ABB again, it is trading at above 5500. A little positional view for the entire Mars series. I believe ABB has the potential to test 6000 zones as well. So there are a couple of ways to play this trade. Either you go straight, longs in the futures with 5500 as a stop loss. Otherwise, you can play 6000 calls, at around 90 rupees trading with the stop loss of 45 from here. If anybody wants to participate in a spread, you can buy 5600 call, which is trading at around 230, and sell 6000 call at around 91 rupees. So the net, outflow for you is around 130 rupees with the upside potential of profit towards 270 rupees. So there are 2-3 ways to play ABB, but I believe it is very well placed for this upside mark till 6000.
Okay. And Vinay, how about you? Your trading ideas for today?
Yeah, so I would like to recommend two trading picks in the derivative segment, and both are on the long side. First is from the PSU space. So Nifty PSE index has actually broken out from the consolidation. So running correction was seen in last couple of weeks, but now we are seeing resuming of a primary uptrend. And oil and gas sector amongst the PSU oil and gas space has been performing. So I think oil and gas, GAIL, Gas Authority of India, that has given a fresh breakout on the charts and new all-time high has been registered by the stock. So overall technical setup is quite good and sector is also supporting. So I would like to go long in GAIL March future at 191. Stop loss can be kept at 187. On the upside, I'm expecting a target of 198 in next 2 to 3 sessions. The second pick would be from the private sector bank. As I said earlier, that inverted head and shoulder pattern breakout was seen on Nifty Private Bank Index, and I'm expecting private sector banks to perform well and they can lead the market from here. So they can outperform the Nifty as well as the overall broader markets. So this is the stock ICICI Bank, which is the strongest amongst the private sector banks on the chart. So that can be utilized. The view on the private sector banks can be utilized by taking positions in the ICICI Bank. So ICICI Bank March future can be bought at 1094. Stop loss can be kept at 1075. I'm just giving a trading stop loss for the traders. And on the upside, I'm expecting a target of 1125 for next 2 to 3 sessions. So GAIL from the PSU oil and gas space and ICICI Bank from private sector banks, I like for the longs, trading long.
All right. Well, just to very quickly address the latest updates that we have from the Supreme Court, and we understand that the Chief Justice of India has suggested that we disagree with the judgment in the PV Narasimha case. And well, the further update in this case is that all 7 of us, or rather all 7 of the judges on the bench have reached a unanimous decision. And they agree, rather they disagree with the judgment on PV Narasimha case, which suggests, it's of course a lot more. Lot more data will be expected there, but which grants immunity to the legislator. Something that we will discuss through the course of the day. But these are the latest updates from the Supreme Court. So keep an eye on them. And on that note, we take a break. But on the other side, we get you stocks and a lot more. Stay tuned in.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
The farmers' protests have been making headlines. Indian farmers have demands such as legal guarantee on MSP, pension and debt waiver, no hike in electricity tariff, reinstatement of Land Acquisition Act 2013 and more. But while the protest becomes important from the point of view of elections and politics, it's not just India that has its farmers agitated. The streets of Spain, Belgium, Hungary and Poland have been roaring with protests by farmers too. Around 1,400 tractors took part in a protest in Poland and roads were blocked across the country. What do they have a problem with? Rising production costs, falling sale price, stringent regulations. They say that the European Union is not doing enough to stop cheap imports from Ukraine, which is affecting the demand for local produce. They are also not happy with the European Union's Green Deal that's designed to zero out pollution by 2050 because it limits the use of pesticides, which in turn affects yield. In Greece, farmers have demanded lower electricity prices, tax-free diesel and subsidized animal feed. In France, farmers have been fighting for improved pay and protection from foreign competition. The French government offered 400 million euros, that's $436 million, in various measures in reciprocation to their problems over low earnings, heavy regulation, and unfair competition from abroad. In Germany, farmers are against the government's decision to phase out tax concessions on agricultural diesel. Their argument is that this will lead them to bankruptcy. In Romania, the protests stem from anger about low prices for produce, rising costs, imports of cheap foodstuffs, and constraints imposed by the European Union's drive to fight climate change. In the United Kingdom, farmers are struggling to keep up with weather changes and war-related supply chain disruptions. The whole of Europe seems to have the agricultural sector in pain as climate change becomes a central focus and production prices increase. And no, it doesn't end there. As per Down to Earth, since 2023, farmers have protested in 67% of countries in South America region for a variety of reasons, such as wanting better export exchange rates and reduced taxes amid an extended economic downturn and Argentina's devastating drought, which have severely damaged crops and agricultural output. And look at this data. Farmers' protests have happened in 12 countries in Africa, 11 countries in Asia, 24 countries in Europe, 8 countries in North and Central America, and 2 countries in Oceania in just a year's time. So let's boil down all this worry to 5 main reasons, India included. Pricing of produce, delayed compensation or subsidy, unfair effects of climate change, policies and regulations, import and export duties, and supply chain discrepancies. What does this say about the world of agriculture? Does it just question politics and governance, or does it hint at a bigger problem, a potential global food crisis?
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career
Welcome back to the FNO show. We take a look at how things are faring in the stock futures market at the moment. Let's see where we are in fact seeing an increase in open interest. I reckon BHEL will certainly be in that list of all the gainers. Yeah, in fact, right at the top of that list. So we're seeing a good 13% up move there in BHEL and a lot of strength coming in too. Also at a life high, in fact. SAIL is the other one, which is also advancing with good increase in open interest. And now we've started seeing traction towards the positive in Info Edge, even as it has all its units reinstated on the Google Play Store. Then we have Coromandel as well as Aurobindo Pharma. All of them are up and about. Actually, Coromandel is negative, so that's not a long, but in fact, that is now looking at a short. So that plate will change for you shortly. Let's take a look at all those stocks which are declining in open interest. We see about a short covering for NMDC, Voltas, as well as Muthoot Finance. And on the other hand, Siemens and JK Cement looking at, longs unwinding coming through. Vinay, on that note, want to also ask you about what you would do with something like a BHEL. Would you take a fresh long position even at the moment, considering we've seen such a sharp surge on a positional basis? Vinay, I believe you're on mute.
Yeah, sorry. Yeah, so stock is 13% up. So for traders, intraday trader, risk reward ratio is not favorable, but definitely the setup is quite good for the positional trader because sector is performing well. We have seen a fresh breakout on the Nifty Public Sector Enterprise Index. So overall sector strength is there. But at this point of time, we cannot give a negative view or the opposite view. So we have to be with a trend. And I think dips can be accumulated. And overall, I'm expecting this stock to register an all-time high, which is still far from this level. So currently the stock is trading at 268. The all-time high was at 335 adjusted level I'm talking about. So yes, it has got good potential to give good returns from here as well. For as a positional trader, as an investor, you can expect some more upside because sector is in a full momentum. So there be with a trend. And for traders, I would suggest that dips should be bought into. So the intraday supports can be looked at. So once you see stock coming down, let's say around 255, 250 odd levels, then one can think of going long again in this counter. So trading is not that much favorable. Risk reward is not that favorable. But as a positional trader and investor, one should continue to hold on this stock for the new all-time high in the coming months.
Right. Thank you, Vinay, and thank you, Shilpa, for joining us today on the show with your top trade recommendations. Well, moving on from there, we start our special coverage on Women's Day. We at NDTV Profit aim to recognize the contribution of the women from all walks of life. To kickstart the series, we bring you the story of one such lady leading the energy space, founded in 2017. Repos is India's first fuel e-commerce and among the fastest growing startups in India. Let's take a look of the journey so far.
Hi, my name is Aditi Bosle Walunj. You saw me as a daughter-in-law, as a wife, and now I'm here as an entrepreneur and a co-founder of Repos Energy. So ever since I was a kid, like many other kids, I also wanted to change the world. Trust me, I come from a family who wanted me to get married when I was 24. I did get married at the age of 24. I mean, a lot of girls say that my life changed after marriage and I dropped what I liked to do and I gave up my career. My life took a U-turn and it went on a different direction. And as I got involved in the family-run businesses of fuel stations and a lot of constructions, hospitality, there was that eureka moment where we thought, can we change or can we transform the energy distribution of the world? And today, let me show you something exciting that we've built in the energy space. We are at the Repos IoT factory, where we are transforming the energy distribution of the world. To put a mobile petrol pump or to sell diesel outside a petrol pump in India, it was not allowed. And we said, oh, so then, and that's where our journey started in 2017, where we got the entire policy along with the oil marketing companies, Government of India amended for India for getting this Repos fuel delivery or the doorstep fuel delivery activated. So that's where what you see behind is something what we innovated known as a mobile petrol pump or a mobile fuel station. There's no rocket science actually. We studied the physical brick and mortar petrol pump. We mounted that on wheels and connected to the end user with a mobile app. Today we are talking about diesel and a lot of people ask, how are you saving carbon emissions through diesel? That's the first question we get. And let me tell you a small scenario. If an infra site or if a transporter has 10, 15, 20 vehicles, they spend around 5 to 6 kilometers just to procure fuel on an average. Sometimes it goes up to 50, sometimes it goes up to 1. And when the process of getting fuel is so tedious, you burn fuel to get fuel. That's why we are saying that instead you coming, we innovated something known as a diesel ATM, which is a datum which we install at their sites. Every business has gone on technology. Your groceries, your hospitals, your doctors, your food. Why not energy? Why not today's fuel? Why not tomorrow's fuel? So, last month, recently when I met the Honorable President of India, when 25 female co-founders and entrepreneurs were called, it was such an honor to know that the President of India wants more women empowerment in the country. That if I can stand here and do a lot of things, one of the biggest reasons was, of course, Chetan standing here and my biggest pillar of strength. I was just discussing with him, Chetan, how can we do that? How can we increase the male-female ratio in the organization at the factory? And I think let him share. He came up with an amazing idea for the new factory or the new assembly line that we are building. You want to share that?
Yeah.
Please.
So we aim to build an high-skilled assembly line for datums, and we are hoping that the entire assembly line of our datum will actually be operated through an women-led leadership, and at a shop floor also we will have women who will be actually assembling these datums. Every month we have been able to install 50 odd datums. This year we would be ending at an installation of 600 odd datums, which will take around 750 installations in the country. When we look at this closed door ecosystem, there is no difference between male and female now. The responsibilities what male are carrying, exact same responsibilities a female is able to carry. And I think the difference somewhere will end when we look both at the same time.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Hello and welcome to NDTV Profit. Today we will talk about tattoos and the worth of this market. The history of tattoos in India can be traced back to prehistoric times when tribal people were captivated by drawings on stone or wood walls. Their attempt to replicate these figures through needles gave birth to the practice of inking skin. Over the course of time, tattoos were embraced by tribals as a mark of bravery, war, religious beliefs, customs, marital status, protection from the male gaze, and so on and so forth. Today, in 2024, tattoos have become a means to express thoughts, individuality, personal experiences, and sentimental designs. The industry is estimated to generate over 20,000 crore rupees per year. What is driving this growth? One of the key drivers behind the growth of the tattoo market is the rising demand for customized and unique designs. Improved technological equipment for making advanced, safer, and painless tattoos have boosted the market. The laser technology for removal or modification of tattoos have also added to the surge. Increased exposure and promotion of tattoo designs on social media have led to widespread influence of tattoo culture on the youth. Take a look at these figures now. As per Fortune Business Insights, the global tattoo market is projected to grow from $2.04 billion in 2023 to $3.93 billion by 2030 at a compound annual growth rate of 9.87%. This is a sharp rise from 3.8% year-on-year growth between 2017 and 2022. As per Custom Market Insights, the diamond jewelry market is expected to grow at a compound annual growth rate of 5.5% by 2032, while the luxury jewelry market at a rate of 8.9%, but the tattoo market is estimated to grow at 9.5%. Is the tattoo business lucrative? According to an article by Opportunity India, tattoo kits are now easily available for less than Rs 10,000, while high-end kits range from Rs 20 to 35,000. Now, in a city like Mumbai, the average cost per inch is Rs 2,000 to 2,500. In Delhi and Bangalore, the cost per inch is between Rs 1,000 to 2,000, and in Goa, it is about Rs 500. We spoke to a couple of tattoo artists in Mumbai and found that at an average, the business
Hello and welcome. You tuned into the Small and Mid Cap Show. I am Mahima Vachrajani and with me is Harsh Saita. Before we move on to our guests for the day, a quick check at how the markets are panning out to be. Well, the Nifty 50 is trading at 0.2% higher. The top contributors include NTPC, Power Grid, BPCL and Dr. Reddy's. In terms of advance and decline ratio, 27 advances, 23 decline, and in terms of Bank Nifty, well, Bank Nifty is trading pretty much flat at 0.01%. Moving on to broader markets, Harsh, how are the broader markets doing?
Well, yes, power is the name of the game. Let me also quickly look at the Nifty contributories before I go to broader markets. what you'll see there is Reliance Industries, NTPC, Power Grid. Those are the three stocks which are contributing the most to the Nifty, not significantly, but 15 points for NTPC is still quite significant. RIL not at all significant, but nonetheless in the top 3 gainers, and Power Grid also among the top 3 gainers in terms of contributory. So that's what's probably moving markets. In terms of where the mid cap and small cap lie, Mahima, you're looking at the Nifty mid cap, which is largely flat in line with the Nifty 50, but small cap is where the action is. You're seeing more declines than advances within the small cap index. In fact, twice the number of declines as much as advances, and 0.5% lower on the Nifty small cap. Again, I'll pull out some pain points there. You're looking at hospital stocks continuing to be under pressure, the likes of Medanta. Suzlon too under pressure today. You have RITES, MRPL, IRB also down 2+%. Not sure why some of those are in decline, but nonetheless there is some pressure in the small cap indices. But you know, we're going to switch focus in on a couple of counters. Man Industries is one of them. A new order win, 555 crore for supply of pipes, which takes the total expected order book to above 2,000 crore. They've guided for an FY25 top line growth of around 20 to 25%, roughly at 2,600 crore. So we're expecting around 31 to 3,200 odd crore in FY25. But let's try and chat a little bit more about this. We have Ramesh Chandra Mansukhani, who's the chairman at Man Industries, to join us, to talk to us about where this is going, or where the story, or how the story is unfolding over the next 2 to 3 years. So, sir, you know, this order win of roughly 500 crore, talk to us about the metrics of that. Is it an export order? Is it a domestic order? When does execution for this play out? So I believe you're on mute because we're unable to hear you. Okay, I believe there is an audio issue, and while we're fixing that, let's quickly pull up the sectoral indices and try and see you know, what are the various sectors up to in today's trade. There you go. You're looking at good traction within energy and public sector undertakings, 2% plus on the Nifty PSE. Energy also 1.5% plus. And let's pull up within energy what's really gaining before we come to the losers, which is Nifty Media. There you go. You're seeing 4% plus on NTPC. Tata Power also up 2.5%. Power Grid, that one's been on a tear since a while now. And you also have the likes of a GAIL, positive note coming in, and 2.7% higher on GAIL as well. So that's where we're at. Again, we have Mr. Mansukhani with us. Let me quickly take it to him. So I believe there was an audio issue. I believe you caught my question. So over to you.
Your voice is vibrating a lot.
Okay.
That's why your voice is coming in breaking news like.
Sure. So so let me. So, sir, is this better at all?
Hello?
Is this better at all?
No, but this is not clear.
Okay. Okay. So, while we go back and fix that, let me also again try and pull up the Nifty PSE while we are at that. The Nifty Energy we did speak about, few names buzzing there. Within the Nifty PSE, if you see what's really taken off is BHEL. 13% plus on that counter. A couple of blocks coming in, a favorable Morgan Stanley note, a tie-up with Coal India, all of that keeping BHEL in focus. But 13%, that's a very solid gain that we've seen on that particular counter. NTPC also, I did mention, up around 4%. Common between the Nifty PSE as well as the Nifty Energy. NTPC is one of those names. But you can see a lot of those names are also within the Nifty Energy Index, and that's what's really the commonality between the Nifty PSE and Nifty Energy today. You know, so a stack of gainers there. Let's also pull up Nifty Media, see what's dragging that one. It's likely going to be, there you go, the likes of a TV18 and Z also down 2%, dragging this one lower. but that's the top loser. Nifty IT too in the red today. Let's pull up the Nifty IT constituents, and what we'll see is outside of Tech Mahindra and Wipro, you're seeing pretty much all the Nifty IT players in the red. Mahima, you want to?
Sure. Since you just mentioned BHEL, there was a brokerage note of Morgan Stanley on BHEL, which has given a target price of 220, and it is said that Coal India and BHEL will form a JV to undertake coal, which was there in the recent filings as well. And the initial setting up of coal of approximately 2,000 TPD ammonium nitrate plant, and Coal India will ensure ammonium nitrate offtake of at least 75% is what the filing has said, and an investment outlay of approximately 11,700 crores is what the filings say as per PTI. Well, we also have a new filing from Info Edge where Naukri, Recruiter and Shiksha have been reinstated on Google Play Store, and they've said that they'll continue to work with Google to prevent such delistings in future. Moving on, Skoda Auto India will launch a sub 4 meter compact SUV in the first half of 25. We spoke to Peter Janeba, brand director of Skoda Auto India, about the company's plan to introduce EV products in India. Listen in.
There are different kinds of investments, so expanding capacity in Pune, in Chakan factory is actually not yet finished, but the 30% we definitely need. We are expanding welding shop and the assembly line and some logistics areas, not the paint shop, which is the most expensive, and you can still do a lot with the shift system. However, it has a certain threshold. Unfortunately, the amount I cannot disclose. Maybe later on when all is done, because the change is only about to be done this year. So there are some budgets which needs to be spent and after probably announced. And I mean, we are a transparent company which is paying taxes, giving the job to the people, so everybody can read how much money we can do here. But you can be sure that every money we do here in India, we invest into new product development. And after the compact SUV, there is much more expensive story, which needs a local content, which is coming, and this is embracing the EV market here in India, and this will as well require a lot of investment. So there are a lot of types of investment, but if you ask me, typically for compact SUV, it's a really small brother from Kushaq, but it has its own identity. It's a completely design-wise, completely different car. I mean, people will enjoy because we go for the modern, solid design language now, and this car is in between the step. So it's a different identity, and yeah, it costs some money, but it's worth to spend this money in order to make the customers happy.
Okay.
Well, that's Skoda India for you, but we'll again have Mr. Mansukhani live with us from Man Industries. Mr. Mansukhani, I hope you can hear us now, loud and clear.
Yes.
Okay.
Yes. This new order is 555 crore, which is 80% approximately from export, 20% from domestic market.
Sure. And the execution, sir, on this one?
Yeah, the execution will be completed in 6 months.
Sorry.
And our old order position is around 1,500 crore. So total consolidated order book is roughly 2,000 crore, which has to be completed in between 6 to 7 months in coming months.
Right, Mr. Mansukhani. Right. Mahima this side. So your approximately outstanding bids are standing at 11,000 crores. If you can tell us, what does the conversion rate look like?
It's a very difficult question. Actually, conversion rate, we cannot say which evaluation process, where we have the strength, everything. But we are very confident whatever our companies need of the order, which will be completed by this bid book. Right now, we have around 13,000 crore bid submitted, which is pending as on today.
Right. And sir, out of this 13,000 crore, in your view, how quickly will you be able to execute, and how much are you expecting at some point or realistically to win?
No, right now our order book is around 2,000 crore. And that is good enough to cover 6 months for our next year. This is a next year job. and we are very confident the bid book is continuous increasing, and there is a various evolution stages pending in coming time, coming weeks, which will be materialized, which is a very normal nature of this business. And we are very confident that for coming year, we will be very, very busy time for us.
Right, Mr. Mansukani. So where does this take your margins at then? Currently, they are around 9 to 11%.
Our margin would be around 10 to 12% in coming time after adding the value-added product, etc. And most of the projects which is based on export, which will fetch better realizations, because in India there is a mostly waterworks business where our revenue is hardly 15 to 20% of our total turnover. That's why we are pitching more business from export markets.
So outsourcer, two quick questions. One is, out of the 2,000 odd crore of book that you have, how much of that is export, and how quickly can you get to say 12% in terms of your margins? What would be the quarter? Depend
project to project, somewhere 10%, somewhere 11, somewhere 12, in the oil and gas sector between 10 to 12. That's why every project we cannot announce this moment, but we are very confident the improvement of the EBITDA in coming months and quarters, as well as the better order book position will remain continued.
Your order book is export, sir?
Export, you can say out of 2,000 crore, roughly 1,300 crore is export, 1,400 crore. And 600 crore is a local. Out of 600 crore, 200 will be the oil and gas sector, and 400, 500 crore will be around water. This is ballpark figure I am telling you.
Yeah, fair. Completely take your point. Thank you so much, sir. It's been a short conversation. We'll call you back, of course, but for the moment, I need to slip into a very short break. Thanks so much for joining us and giving us that perspective. More on the other side. Stay tuned.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash, made from 51 precious herbs.
Amul has completed 50 years in India. PM Modi will attend the Silver Jubilee celebrations of the Gujarat Cooperative Milk Marketing Federation, the owner of Amul. At one point of time or the other, we've all grown up with Amul butter or milk for sure. The famous Amul girl created in 1967 is family. We all recognize her. But as the brand grows 50 years old today, do you remember the full form of Amul? It is Anand Milk Union Limited. From producing 250 liters of milk per day since the time Amul was formed back in the mid-90s to today, where Amul has over 36 lakh dairy farmers and produces nearly 300 lakh liters of milk per day, the brand has had a long journey. The story goes way back in time. In the 1940s, dairy farmers were worried. The middlemen exploited their ways of profitable income, and a poor milk production system made their living difficult. Tribhuvan Das Patel and Verghese Kurian identified these issues and helped in the formation of the first milk union called Kaira District Cooperative Milk Producers Union in 1946. The cooperative model gave farmers direct ownership of the dairy industry. The union helped them process, market and sell milk and milk products without the interruption of intermediaries. And it was in 1955 that this union chose a brand name for itself called Amul, which means priceless in Sanskrit. And then, in 1973, Amul Dairy, along with 16 other district cooperatives, formed the Gujarat Cooperative Milk Marketing Federation, which has now completed 50 years in India. Amul also started India's white revolution that made our country the world's biggest maker of milk and milk products. The brand follows an umbrella marketing technique which has helped GCMMF prevent association clashes and keep an open door for the patrons to coordinate in creating items. As per a report by Statista, the annual sales turnover of Amul from 2011 to 2023 has consistently risen, recording about 55,000 crore rupees of turnover in 2022-2023 alone. And did you know, Amul has also held a Guinness World Record for having the longest continuous run of any
Welcome back. You're watching the Small and Mid Cap Show. Well, on to the next company, which is Signature Global. The company has recorded 3,600 crore of sales for its Deluxe DXP residential project in Gurugram. To discuss the project pipeline and FY25 outlook, we have Rajat Kathuria, CEO of Signature Global, who joins us. Welcome to the show, sir.
Thank you, Mahima. Thanks a lot.
Right. My first question to you is that this Deluxe DXP residential project is premium housing project. So does this mean that you're foraying towards the luxury segment more? And if yes, what are the expansion plans that you're looking at towards the luxury side?
So, Mahima, we've been a product and geography focused venture. Initial 5 to 6 years of our commencement, we focus completely on mass housing, whereas last 2 to 3 years, we've pivoted the model more towards mid-income homes. So if you look at the current portfolio, we are selling products which range anywhere starting at about 70-80 lakhs or a crore, going up to about 3 to 4 crores. So I'll still prefer to say that we are playing the full spectrum of mid-income homes. Our focus is going to remain in the Gurugram market, and we're going to come up with launches in few other micro markets, which include Southern Peripheral Road and the Sona Elevated Expressway in the coming months.
Sure, Mr. Kathuria, point taken. So I want to try and understand, you'll remain geography centric, but what's causing this kind of demand? Because around 5+ times in terms of bookings that you've received for your current project. What's driving this traction? I'm trying to understand sustainability of this kind of traction that you're seeing.
Sure. So, Harsh, couple of factors are really fueling this sort of a response. First one being that, see, in Gurugram, a lot of social and physical infrastructure has been created over the last, 8 to 10 years. You talk of new highways, including the Dwarka Express, which is just expected to be inaugurated sometime in this month. And, a lot of other infrastructure initiatives have been taken up by the government. There are a lot of, social infrastructure, has really come up in the city, whether you talk of good quality schools to healthcare, retail spaces, etc. So, while all of this infrastructure has grown, there's very little housing supply which has come over the last entire decade. You go back to 2013-14 until now, there's very little housing supply which got added into the city. While it is happening now, I think there was kind of a pent-up demand which is kind of, taking up whatever little supply is being created at this stage. So it's on a longer span of time, you'll find that primarily there's a supply constraint, which is one reason why you feel that demand is overwhelming, but actually, supply numbers are still quite low at a city level.
Right, sir. So since you mentioned the Dwarka Expressway, a lot of projects are coming up for you on the Dwarka Expressway. What does the ticket size look like there, and what is the sales strategy for you?
So see, we've always believed, that the industry or the company should be operating as a home manufacturing, enterprise. So our endeavor is always to kind of, create supply at a good pace, don't create land bank and not launch, these projects. So the idea is to, treat land purely as a raw material. So our strategy is that, we keep coming up with projects as and when the supply gets created, just kind of launch the entire project. So we have 3 key markets within, Gurugram region. One is on the Northern Peripheral Road stroke Dwarka Expressway. Second is on Sector 71 in the southern peripheral belt. And third is the Sona market, which is just on the periphery of Gurugram. So we do intend to come up with launches on a regular basis in all these three key markets.
Sure, take your point. Now, you've got ongoing projects of around 17 million square feet. You've got a pipeline of around 28 million square feet that you've disclosed as of now. So say in FY 25-26, as you move more towards premiumization, my guess is your top line will grow much faster than has grown in the past. Plus, on top of it, the kind of development that you're doing is far larger. What's the kind of numbers that one can see as some of these projects start to materialize and start to hit your P&L account? What's the kind of number that one can watch out for?
So, Harsh, we are accounting is being done basis completed contract method of accounting. So if I was to do a breakup of the entire portfolio, prior to this launch, there was almost like 17 million square foot, which was launched and is at advanced stages of execution. That entire 17 million block is expected to get completed over the next 8.5 quarters, by fiscal year 26, which will contribute anywhere between 11 to 12,000 crores of revenue recognition in the books of accounts. If we talk of forthcoming inventory, it's almost close to 30 million square foot with a GMV potential of more than 40,000 crores. This forthcoming inventory, so we just launched one of those projects, which was about 2.7 million square foot. Market is very buoyant right now. And, we hope that this is, we are seeing like a long, cycle wherein, some bit of demand gets met for customers. So we'll continue to launch this entire forthcoming inventory over the next, 8 to 10 quarters.
Right. So this 30 million square foot, the projects that are coming in, well, where do you think the fundings will come on? Because you aim at maintaining your net debt levels to sustain in the current range, right? But that is below 1 times the project operating surplus.
So, Mahima, absolutely. See, balance sheet strength is of very, it's critically important, for a development company, because see, we are not building any yield assets. The idea is to churn the portfolio, buy land like you do any other, raw material like cement, steel, it's a raw material which has slightly longer gestation, but by the end of it, it is a raw material for us. So in a development company, we strongly believe that leverage level should remain low. Whatever collections we are doing in any particular year, as a thumb rule, our operating surplus is about 35% of those collections. So this year, let's say if we hypothetically do about 3,000 odd crores of collections, we'll have give or take about 1,000 odd crores of operating surplus, which we can use either to buy further land or to delever. So our fundamental is that operating surplus should always be enough that if we have to come to a zero net debt level, we can do it within a span of 1 year. Since we are doing this business day in, day out, if there are any, weakening of market, we should be sure of, clearing up the entire debt of the balance sheet. And, that's the primary principle, which we are going to follow very stringently over the coming years as well.
Fair, very interesting perspective, especially with regard to debt. Will hold just about a year worth of operating cash flow debt. Thank you so much, Mr. Kathuria. It's been good speaking with you, getting that perspective with regard to demand trends all the way to the balance sheet of Signature Global. That one up around 2% in trade today. Demand traction continues to remain strong. But with that, we're completely out of time on this edition of the Small and Mid Cap Show. From Mahima, myself, everyone who puts the show together, thanks so much for watching. Stay tuned to NDTV Profit. More on the other side.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash, made from 51 precious herbs.
Hello. Good morning, ma'am. I'm speaking from XYZ company. Are you looking for a job or a job change? Have you been receiving unwanted calls from spam numbers? Are you tired of being offered new jobs, insurance schemes, or free health checkups? Well, today we will look at an interesting survey report by local circles on pesky calls that received 60,000 responses. Most unwanted calls are related to financial services, 54%, and real estate, 22%. In fact, the report has taken names. 40% mobile subscribers have identified Bajaj Finance as a top offender, HDFC Group as the second biggest pesky caller. The report reveals that 60% of people received 3 or more spam calls on an average day every day, and 92% of people registered on the Do Not Disturb list still get pesky calls. So is being listed on DND working? Clearly not. But the report also recorded a minute relief, as per which 6% people don't get any such phone calls. This relief comes after the TRAI directive to banks, insurance companies, and other commercial entities. TRAI is the Telecom Regulatory Authority of India. In fact, the Department of Consumer Affairs has constituted a committee comprising members of different regulatory authorities, telemarketing companies, and cellular industry to draft the guidelines to address the issue of pesky calls. So yes, pesky calls are still a worry, but there is a little relief too. Can you ignore them though? Toll-free numbers are identifiable, so institutions have found a new way. According to the report, calls from different mobile phone numbers that seem to belong to companies or brands have risen from 29% in February 2023 to 36% now. And look at the change in trend. Real estate selling has risen from 18% last year to 22% now. However, job offerings have decreased from 10% to 4%, and in the case of those selling financial services, the calls have slipped from 60% to 54%. So the bigger question is, will the nuisance of pesky calls end anytime soon? There should be a system where pesky callers are blacklisted at the Aadhaar level, so they have the risk of not getting a new SIM. Also, brands on whose behalf the contracted callers are calling also need to be held accountable by the Department of Consumer Affairs, so brands institute the right consumer outreach practices both with employees as well as third-party contractors. For more such updates, stay tuned to NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some...
Good morning and thanks so much for joining in. You're watching Ask Profit. My name is Alex Matthew. With me is Smriti Chaudhary, and we'll take you through the next half an hour or so of trade. Like the name suggests, this show is aimed at getting you answers to all of your stock-related questions, and so if you have them, send them to us on the WhatsApp number on your screen, or in fact on any one of our social media platforms. Let's very quickly take you through how the markets are looking right now. And you have the benchmark Nifty 50 that's trading in a range. It's up about 0.1% or so at this juncture, and it has traded in a very narrow range today. And the broader markets more or less reflecting that as well. At least the mid-cap index is. It's just about flat right now. You have the small cap index that's trading with cuts of about 0.5% at this juncture. In terms of the key indices that are moving in trade today, it's the energy pack as a whole that's in focus, which is up about 1.6%. In fact, a lot of the power companies in focus, and they're gaining quite a bit in trade today. You have oil and gas, which is also about 1.4% higher, and you have pharma as a pack that is also doing reasonably well. Among the losers, you have the media index that's down about 1.6%, and it's the worst performer sectorally. You have the IT index that's also lower by about 0.5%, and metals are a little bit under pressure. But interestingly, you have a couple of counters that are related to the the metal index that are doing quite well, or metal sector that are doing quite well, those are the graphite manufacturers. HEG as well as graphite are up and about in trade today. But we're focusing on a different set of stocks in trade today, and that has to do, Smriti, with the wind companies, right?
Right, yes. We are seeing some downtick in wind stocks, and if you look at some specific names, you look at Suzlon, that's down about 4.5%, Orient Green down 3%, Sterling Wilson down about 1.5%, Inox is down 5%, both the stocks, Inox, wind and wind energy as well. But we have Varsha joining in to tell us a little bit more about this and why the stocks are down today.
So hi Smriti, so if you see, as you rightly pointed out, wind energy stocks are under pressure. So Inox Wind is down 5%, Sangvi Movers is also down 7%, and KP Energy is down almost 5%. Now according to some media reports, Ministry had decided to bring back reverse bidding as wind tariffs have risen in auction. Now Ministry had sent letters to the agencies for the same. Now this is on the back of undersubscription and higher tariff discovery in recent wind bids. So if you see, there are, just to give you in context, there are two types of bidding. One is reverse and the other is closed bidding. Under reverse auction method, bidders continue to bid against each other after the initial bids are open and until a bid tariff goes unchallenged by a counter bid. Now, incidentally, the ministry had given up this reverse auction method at the beginning of this financial year. This method did bring down the tariff, but the problem was company had a lot of inventory that they sold off the inventory at very low prices, which led to poor capacity installation, which affected the wind industry as a whole. So the reverse auction then was given up and closed bidding system was adopted, post which tariff did rose. Now NDTV Profit did spoke with management of Inox Wind in Q2 FY24, where he said was that last time this was a problem as everyone had excess inventory and sector was not doing well, but now situation is different. Government has target and company don't have excess inventory. So according to him, this shouldn't affect the industry as a whole, but we are seeing pressure on this stock, so let's see what happens.
All right, thank you Varsha for that. On that note, let me introduce you to the guests for today. We have Gaurang Shah of Geodit Financial Services and Rajesh Palvia of Axis Securities joining in. Welcome to both of you. Now, Gaurang, you heard Varsha talk about how energy companies may bring back reverse bidding. Now, seeing that the street is not taking positively to it, but how are you viewing this development to play out for these energy stocks?
Thank you, Smriti, for having me on the show, and morning to all of you also. I mean, power generation, power transmission, and power equipment, all these sectors are going to go through a major changes because of the new power capacities that is going to come up in the next 3 to 5 years. What I have been given to understand is somewhere close to about anywhere between 350 to 500 gigawatts is the new capacity lined up. This is the initial part. As we go forward, there will be more capacities that will be added. So definitely power generating companies are going to be benefited, whosoever is present in the solar or wind energy. We do have positive coverage, Smriti, on some of the companies which are also into conventional and also into solar as well as wind. We are also positive on power transmission and distribution companies, power equipment companies, because all these things will go together. It's not like one single sector is going to perform. So in the power generation, we are positive on Tata Power, NTPC and CESC. We don't cover stocks like Suzlon or the rest of the, down the line small cap or micro cap companies. We are positive on power transmission and distribution, and hence we have a positive coverage on power grid. In power equipments, we are positive on company like KEC International, L&T, Siemens, etc., because they are into making of power equipments which enable transmission process from manufacturing to the end user. So my sense is that being invested in fundamentally sound companies from a long-term point of view will make a lot of difference rather than going in for small and micro cap companies.
Got it. All right. Gaurang, good morning to you and good morning to Rajesh as well. It's time to jump into the queries. We've got Amit Murkutev, who's writing in from Mumbai, who's got the first question today, and he's asking about a couple of counters, different sectors, of course. Hindustan Zinc is one and Bata India is the other. He's asking if these two are good buys at the current levels for a period of 2 years. I'll come to you, Rajesh, on the technicals of this one, of these two counters. Do they look interesting to you?
See, Bata is in downtrend, and since last couple of months, we are seeing that continuous supply pressure is taking place in the stock. Stock is making lower top, lower bottom formation on the daily chart. Stock now slipped below to all its near-term, short-term, as well as long-term moving averages. So, trend is still on the weaker side, though stock is attempting to show some pullback action from its recent swing low. But still, it's failed to cross above 1450, 1460. That's the immediate supply zone for Bata at this moment. Until the stock not crosses above 1460, 1470 level on a weekly closing basis, trend is likely to remain on the weaker side, and we may see further more supply. So I think Bata, I think he should avoid at this moment for trading perspective, as structure is on the weaker side. Hindustan Zinc is consolidating again in the consolidation mode. If we analyze the longer term time frame, almost it's consolidating in a same price range of 330 to 300. That's the price range since last 8 to 10 months. And still stock not manages to view breakout above 330 kind of zone on a closing basis. So once stock crosses above 330, yes, he may look to buy this stock. Then possible really we can see on the higher side towards 380, even 400 kind of zone in Hindustan Zinc. So at this moment, if he wish to buy and accumulate, then he can keep stop loss of 290 to buy and accumulate the stock. On the breakout above 330, he can add more positions.
All right, understood. Next up, we have a question from Mansi, and they're talking about two counters, Oberoi Realty that they bought at 1518 and SJVN that they bought at 147. I think both the stocks are below, were bought at elevated prices, Gaurang. Now we have seen realty sector, Oberoi Realty is also up over 1% as we speak. Based on these two stocks, what's the long-term view for both of them?
Firstly, let me speak about the real estate sector, because this sector was down and out, bad boy of the market. Lot of high beta movements in all the counters, whether it is Oberoi Realty, whether it is Prestige Estates, whether it is Shobha Limited, whether it is DLF, or whether it is Godrej Properties. But then lot of changes came into this sector because of the government policy, and RERA brought in a lot of discipline which was missing. On Oberoi Realty, we had a buy recommendation earlier, but in the recent run-up, the targets that we had set aside were achieved, and hence we have given out book profits or sell recommendation on Oberoi Realty. This is not only restricted to Oberoi Realty, even on Godrej Properties, we have similarly, because our targets were met, we have given out book profits or sell recommendation. Though having said that, I think lower levels can be revisited in terms of long-term investment ideas, provided you have the numbers encouraging you to take a long-term call on the counters. And I'm quite sure today itself, I think one of the companies that came out with a record sales is the Signature Global. This is not a recommendation. I'm just quoting a news item that I read this morning. So there is a lot of appetite for new properties, be it residential or commercial. But in the immediate short to medium term, the valuation looks a little bit stretched. On SJVN, unfortunately, we don't have a coverage.
Then let me very quickly ask Rajesh what the view on SJVN is on the technicals. Rajesh, what's the view?
So, Alex, stock is, after the correction, stock is consolidating and holding the ground around its important support area of 115. That's the important and critical support area of this corrective move. If it breaks below 115, then we may see furthermore, extended supply pressure, and then possible we can see lower target towards 100 kind of level also. So at this moment, I think he may hold the position with stop loss of 115. If stock manages to cross above 130 mark, then yes, possible we can see a rally towards 145 to 150 kind of zone in the stock in the short-term basis. But looking at the near-term, short-term structure, we see that it may take time as stock is showing, a long consolidation kind of behavior at this moment. So I think it may take time. If we can remain invested for some longer period, then yes, keep a stop loss of 115 to hold position.
All right, let's get the next question in, and this is on Titagar Rail. I'm just pulling up the share price as we speak. It's currently at about 940 or thereabouts, and we've got a viewer that is Shri Kishore Sharma writing in from Motihari, Bihar, that is bought at levels of 225. Now, that's quite the buy price. And the question is, Gaurang, what the prospects are for the next couple of years. This is, of course, part of a pack that has gained quite significantly on the back of the government's push for expansion in the space.
Absolutely. So I'll comment on the sector, Alex, for the benefit of the viewers and this investor. My sense is that with the kind of changes that the Rail Ministry and Government India is bringing into the Indian Railways to resolve the last mile connectivity issue, is going to augur extremely well, not only for those companies which are government companies associated with Indian Railways, but also private sector companies which are associated with Indian Railways. So is going to be the case that you have huge opportunity in terms of orders coming in, whether it is going to do with upgradation of wagons, it is going to do with laying new railway tracks, or whether it is going to do with changes of passenger coaches, improving the speed of the train, etc., etc. My sense tells me that for the next 3 to 5 years, if you invested in railway-related stocks, then I think it's going to be a great opportunity.
Next up, we have a question on YouTube. This one's from Sid. And this is specifically for Rajesh. They've specifically mentioned to take this to you. This is on GPPL, Gujarat Pipav, and they've not mentioned the buy price, but they want to know the mid to long term view on this. So what are the charts showing on this specific counter, and if there are any levels you should watch out for?
So we have seen already there is a breakout happened in this stock, and looking at the overall structure for short to medium term perspective, we believe that, if stocks continues to hold above 195, 200 kind of level, then there is a high possibility we can see again, resumption of rally in the stock. Once the stock crosses about 218 level, then possible target in very short period of time we can see towards 250 to 260. So that's the immediate target which we can see on the short term basis. But if we wish to hold it for longer term perspective, so I think this stock has potential to again reach to its previous all-time high trajectory also, as overall structure is looking bullish, and on the monthly chart stock also showing strength. So we believe that one should hold the position with stop loss of 195. Possible target we can see in short term towards 250, 260 also.
Fair point. All right, we have to slip into a very quick break. Viewers as well as gentlemen, do stay with us. We'll be back very quickly.
Co-presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
Electoral bonds have been deemed unconstitutional by the 5-judge Supreme Court bench headed by Chief Justice D.Y. Chandrachud. They were first introduced in 2018. An electoral bond is a means to fund a political party in India while maintaining anonymity. These bonds are available in multiple denominations ranging from 1,000 rupees to 1 crore in specified branches of the State Bank of India. This was introduced in the system to maintain transparency in political funding via a banking network and reduce black money. But on the flip side of this intention, questions have been raised on the basis of an important fundamental right of democracy. That's right to information. Is it constitutionally right to keep the source of political funding discreet? Why shouldn't the public know who is funding how much money to different political parties? As per the findings of Political Party Watch, a program under Association for Democratic Reforms, 28,030 electoral bonds worth rupees 16,618 crore was sold between March 2018 and January 2024. The Supreme Court's unanimous decision follows a petition filed in September 2017 challenging the Finance Act 2017, which introduced the electoral bond scheme for the purpose of electoral funding. The Act has also removed the previous limit of 7.5% of the company's average 3-year net profit for political donations. The Supreme Court has asked the following corrective actions to be taken immediately. State Bank of India will need to stop issuing electoral bonds immediately. SBI will have to submit the details of the purchase of electoral bonds and their encashment by political parties since the interim order of the court, which is April 12, 2019, to the Election Commission in 3 weeks by March 6th. The Election Commission will have to publish all these details on its website 1 week after, that is on March 13th, after it has received all the information. Electoral bonds that have not been encashed yet by the political parties will need to be refunded. For more such updates, stay tuned to NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future. We've got your options covered.
Welcome back. You're watching Ask Profit on NDTV Profit. Let's quickly jump into the questions. The first one is from Srimati Sridharan on YouTube. They're talking about BLS e-services. They bought the stock at 316 a piece, and let's pull up the chart and see where the stock, it's about 369 as we speak. It's down about 2.5%. Rajesh, on this stock, what are the key levels that you should watch out for?
So this is recently listed stock, and we have very limited data to analyze this stock. But whatever data we have, that clearly shows that on the downside, the immediate support area is at around 350 level. So that level needs to watch on the near-term perspective. If it breaks below 350, then we may see further more profit booking in the counter, and then it may slide further towards 320 level also. On the higher side, 400 is likely to act as a immediate supply zone on the higher side. If it stocks crosses those level, then possible again buying interest we may see in the stock, and then stock can rally further higher from the current level. So 400 is the key resistance, and 350 is the immediate support area.
All right, Gaurang, interesting question for you. Mohit from Ludhiana is talking about State Bank of India, which he's bought at levels of 184. Now, obviously, given the buy price, you can assume that he's bought quite a while back. He's got 1,000 shares. COVID lows. So 1,000 shares of SBI. The stock is currently trading at 771. He's looking for an outlook for the next 5 years. What is the kind of upside that you would expect?
This is really a difficult one, Alex, to answer very straight off. So let me give this reply. Bro, you got it at 180. The stock is at about 780. You got 1,000 shares. At least do this. First of all, we have a positive coverage. Let me give a disclosure from a long-term point of view. And I think the targets that we had set aside, Alex, we have discussed State Bank of India many times, was 740 or 760 or thereabouts. today's share price, the first target is already in place. So, do as the small thing, sell about 100 shares. You will bring in whatever you have invested and a decent amount of profit. The balance 900 shares will be of zero cost, which will leave you with a lot of elevated risk appetite because you will not be putting in any money. It's a zero cost valuation. On fallback of earning visibility, my sense is that the public sector banks difference in terms of underperformance compared to the private banks is now a thing of the past. I think our fourth quarter numbers are just round the corner, Alex. We'll wait for the fourth quarter numbers to come through. But as of now, we have a positive coverage on State Bank of India. Given the price that he's bought it, he can book share profit in 100 shares, bring in whatever he's put in and some profit, and make the remainder costless.
All right, got it. Next up, we have a question from Amit Rastogi, and this one's on Inox Wind Energy. While we've discussed the fundamentals of this as part of focus, Rajesh, Amit bought the stock at 5,500 levels, and they want to know the selling range for this particular stock.
Smriti, you're talking about Inox
Wind Energy.
Yeah, only sellers in the stock right now.
It's down about 5. Yeah, 5.
Yeah. It will be delivered to me today or tomorrow.
Sorry.
So it's at lower circuit at this moment.
Yes.
And now stock is now trading almost near to its 20-day moving average, which is placed at around 550 kind of zone. If it's continues to hit these kind of furthermore supply pressure, we can see furthermore supply pressure to likely to continue, as Inox Wind is also at lower circuit. Inox Wind Energy is also at a lower circuit. So I think these stocks are under pressure since last couple of trading session, and we can see furthermore a down move. So as he has bought at lower price, so I think he can now keep stop loss at around 63.50. That's the immediate level he can keep in eye. If that level breaks, then he should book the whatever profit is left with the stock. So 6350 needs to be keep as a stop loss if he's already holding these positions.
Coming back to you, Rajesh, on this next one, Tata Steel, we've got a question coming from Rajesh Maheshwari. He's asking about this counter. He's bought 2,800 at an average price of 105.5. He's looking for the short to medium term outlook. What level should he look at?
So whole metal basket is showing good traction, and Tata Steel after very long period stock managed to give breakout of this consolidation range. If we analyze on the longer term time frame, after almost a consolidation of 2 year, stock managed to give this breakout. So looking at this breakout in the previous week, and the stock is sustaining above 148 level. That's the immediate level and important level for the stock at this moment. If it's hold above 148 level for some more couple of trading session, then possible follow-up really we can see towards 160 to 165 for trading perspective. And if you can hold for further more longer period, then possible target we can see towards 180 also in the stock. So 148 needs to keep as a stop loss as he has bought recently. That's the important and critical level for Tata Steel now.
Right, got it. Next up, we have a question from Shrikant, and this one's on Vascon Engineering. They bought the shares at 87 a piece, and they bought 555 shares for this. They want to know if they should sell the stock. If you look at the stock, it's down about 1.5% as we speak at around 74, so below the buy price here. Rajesh, what are the key levels that you should watch out for, and would you suggest selling at this juncture?
The stock now slipped below to its 20-day, 50-day moving average, and moving average crossover is also suggesting that we may see further more pressure in the stock. So I think he may try to exit the stock as on the higher side. 82 is the key supply zone at this moment. Until the stock not crosses those level, stock may remain under pressure only. Even in the recent fall, stock is now approaching to its previous swing low also, that is at around 72 kind of level. If it breaks below 72, then we may see further more extended supply pressure towards 65 kind of zone. So I think he may try to exit the position, as the trend is on the near term as well as on the short term is on the weaker side, and we may see further more pressure in the stock in coming trading sessions.
Got it. Coming back to you, Rajesh, on the option strategy that you would suggest for ITC. This is a question coming from Abhishek, and he's looking for the target to pay attention to with regard to the March expiry.
See, if we analyze the overall structure for ITC, stock is in very tight consolidation range. Since last couple of week, we are seeing that stock is moving in very limited price action. So looking at the overall structure, we believe that till stock not crosses above 420, there won't be any traction we will see in the March series itself. But looking at near-term, short-term structure, if you wish to buy a call option, as stock has already shown some consolidation action, some momentum is there in FMCG pack. So we believe that at this moment he should look to buy at the money call option, that is at trading at 410 call option, that is trading at around 9 rupees 90 paisa. That call option he can keep because looking at the consolidation, we believe that 400 needs to keep as a stop. So for this option, he should place stop loss at around 4 rupees. And if at all stock crosses above 420, then possible target for this option, he may get around 18 rupees to 20 rupees. So keep stop loss of 4 rupees to buy 410 call option for ITC for this March series. Already consolidation has been done. So there is a high possibility that stock may attempt to give some pullback from current level.
All right, got it. Now, unfortunately, we're completely out of time. Thank you so much, Gaurang and Rajesh, for joining and for answering questions for us. And viewers, if you were not able to take your questions today, we'll definitely try and take them tomorrow. But stay tuned, lots more coming up on NDTV Profit.
Co-presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
The farmers' protests have been making headlines. Indian farmers have demands such as legal guarantee on MSP, pension and debt waiver, no hike in electricity tariff, reinstatement of Land Acquisition Act 2013 and more. But while the protest becomes important from the point of view of elections and politics, it's not just India that has its farmers agitated. The streets of Spain, Belgium, Hungary and Poland have been roaring with protests by farmers too. Around 1,400 tractors took part in a protest in Poland and roads were blocked across the country. What do they have a problem with? Rising production costs, falling sale price, stringent regulations. They say that the European Union is not doing enough to stop cheap imports from Ukraine, which is affecting the demand for local produce. They are also not happy with the European Union's Green Deal that's designed to zero out pollution by 2050 because it limits the use of pesticides, which in turn affects yield. In Greece, farmers have demanded lower electricity prices, tax-free diesel and subsidized animal feed. In France, farmers have been fighting for improved pay and protection from foreign competition. The French government offered 400 million euros, that's $436 million, in various measures in reciprocation to their problems over low earnings, heavy regulation, and unfair competition from abroad. In Germany, farmers are against the government's decision to phase out tax concessions on agricultural diesel. Their argument is that this will lead them to bankruptcy. In Romania, the protests stem from anger about low prices for produce, rising costs, imports of cheap foodstuffs, and constraints imposed by the European Union's drive to fight climate change. In the United Kingdom, farmers are struggling to keep up with weather changes and war-related supply chain disruptions. The whole of Europe seems to have the agricultural sector in pain as climate change becomes a central focus and production prices increase. And no, it doesn't end there. As per Down to Earth, since 2023, farmers have protested in 67% of countries in South America region for a variety of reasons, such as wanting better export exchange rates and reduced taxes amid an extended economic downturn and Argentina's devastating drought, which have severely damaged crops and agricultural output. And look at this data. Farmers' protests have happened in 12 countries in Africa, 11 countries in Asia, 24 countries in Europe, 8 countries in North and Central America, and 2 countries in Oceania in just a year's time. So let's boil down all this worry to 5 main reasons, India included. Pricing of produce, delayed compensation or subsidy, unfair effects of climate change, policies and regulations, import and export duties, and supply chain discrepancies. What does it say about the world of agriculture? Does it just question politics and governance, or does it hint at a bigger problem, a potential global food crisis?
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to...
Markets trade flat, opening at record highs. Sensex trades at 73,900 levels, while the Nifty is below 22,400. Sectoral indices trade mixed, dragged by media and metals. On the other hand, oil and gas and pharma emerge as top gainers. Wind turns against Inox Wind. Stocks dips as much as 5% in trade after the Ministry of New and Renewable Energy decided to bring back reverse bidding as wind tariffs rise in auctions. And shares of NTPC jump over 4% in early trade, hitting a fresh lifetime high after the company approves investment for thermal project worth over 17,000 crores. And more flack for industry firms needs government permissions before launching products in India, said IT Minister Rajiv Chandrasekhar. And no respite for MPs and MLAs. Supreme Court overrules 1998 Narasimha Rao judgment, orders legislatures that they cannot claim immunity from prosecution for taking bribe to make speech on caste a vote in legislature. Hello and welcome. This is Hot Money. I'm Agam Vakil, and in this show we take you through all the stocks which are buzzing in trade. But right at the top, a quick look at the markets, which are currently marginally in the green, but well, they're advanced, and where we, but it's largely flattish, I would say, because we aren't seeing too much traction there. The Nifty is holding on to 22,400 at the moment, and we're looking at a relatively broader range as far as this week is concerned. It's in terms of the Nifty going in. Remember, volatility has risen off late. The India VIX, in fact, has also and is also currently somewhere around the mark of 16 and a half, and it's the same for I stand corrected. It has come off and it's currently at 15, but it's not a huge correction. And this is likely to, see a rise as we move in the run-up through to the election through the course of the month of March. So while it is at 15, there's a high chance that this number will look to be a lot higher towards the end of March. That said, as far as the Bank Nifty goes, let's pull that up as well and see how things are panning. It's flat as well. That's where the Nifty is, and it's moving in tandem with the Nifty. In terms of the constituents of the Nifty, let's take a look at where there's a contribution of stocks on the upward side. So Reliance contributing to about 20 points, NTPC about 17 points, and then of course we have gains in Power Grid and Bharti Airtel. On the other hand, on the losing end, well, we do have some amount of pressure from the IT stocks, which would include something like an Infosys as well as a TCS. HDFC Bank, again, not too much of a cut, but well, a cut all the same. And L&T, remember, has had a reasonably strong last week. I reckon that there is a little bit of profit taking coming through in today's day of trade. So that's as far as your benchmarks are concerned. To take a look at the broader markets too, what we are seeing in this case is they're largely flattish. We haven't seen too much change in the mid-cap index. As far as the small cap index is concerned, again, that's down by around 0.5%. So a little bit of an underperformance for the small cap index. But no one's going to complain, at least just as of yet, because we have seen tremendous outperformance for both the mid cap as well as small cap indices on a financial year-to-date basis. So I reckon just a tad bit of profit taking in the broader markets is what we are seeing right now. We're going to continue to give you updates as far as the broader markets go. But let's take up what we are going to discuss in today's day of trade. And well, we are talking about the telecom sector. We are also talking about, a handful of auto names as well. And we are also going to address a whole host of other names from the real estate sector. And to talk to us about that, we have Shahina Mukaddam. She's an independent market expert who's going to join us and perhaps also take us through all the stocks which will be in focus. Shahina, good afternoon. Thank you so much for joining in. Before I come to you, Shahina, let me address the first stock that we want to take up, and that is Signature Global. That stock has advanced today, and on some positive news and positive news updates which are coming in, I'm going to get in Anushi to tell us a little more about this one. Anushi, good afternoon. What do you have for us?
Right. So now coming to Signature Global, it is in focus after its 3,000 crore sales that it has recognized for its premium project, which is the Deluxe DXP residential project. Now this is different as to what the company's focus has been, which is more on the affordable and the lower mid segment side, wherein it holds about a 19% market share as well in the Delhi NCR region. So again, with this, the company received a oversubscribed expression of interest of about 5.4 times and sees a sale potential of about 2.7 million square feet. Again, just giving a brief recap on its 9-month FY24 numbers, the pre-sales were already up about 41% at 3,100 crore. So adding this 3,600 brings the company closer to its FY24 target guidance. It has given of about 8,500 crore of pre-sales. Apart from that, the collections are also up about 57% in the 9-month period, while the sales realization was at 9,500 per square feet as compared to 7,500 square feet earlier. So this is the overall gist on Signature Global, which has now deviated its focus to the premium side compared to the affordable side it usually is in.
Thank you so much for joining us and giving us those updates. In fact, we did talk to the management as well about these updates today. This is what they had to say. Listen in.
We've been a product and geography focused venture. Initial 5 to 6 years of our commencement, we focus completely on mass housing, whereas last 2 to 3 years, we've pivoted the model more towards mid-income homes. So if you look at the current portfolio, we are selling products which range anywhere starting at about 70-80 lakhs or a crore, going up to about 3 to 4 crores. So I'll still prefer to say that we are playing the full spectrum of mid-income homes. Our focus is going to remain in the Gurugram market, and we're going to come up with launches in few other micro markets, which include Southern Peripheral Road and the Sona Elevated Expressway in the coming months.
Right. Well, Shahina, I'm going to come to you on Signature Global now. Among the very long list of IPOs that we've had over the past, 1.5 years, Signature Global is one of them. And of course, it's taken advantage of the huge up move that we've seen in the real estate sector. Do you have coverage on this? Your view on this particular counter? How would you go about this one?
Well, the overall sector has done very well, the real estate sector. But I think, a large part of it, if you look at the valuations, it started, in my view, going into the overstretched range. And a new investor needs to be careful, because if you see across the board, most of these stocks have actually given you returns of 2 times, 3 times in the last 1 year. So in terms of percentage times. So the thing is, 100% doubling, tripling. From here on, a new investor really needs to be careful. Let us take, for example, Signature Global, great company in terms of real estate, much smaller than the other established players, especially in the Mumbai space. Like if for example, you take, say, Godrej Properties. So this is a smaller player. The margins also on the net profit level are lower. So even if you take a very aggressive target of 8,000 crores revenue that will come in maybe next year or the year after, which is a big jump from what we are talking about now. Having said that, also the market cap close to about 20,000 crores for Signature Global. PE is, of course, I mean, like really very high. So on every parameter, if you look at market turnover to market cap, if you look at the profits to, their EV, so everything is expensive. So in my view, one needs to be really cautious, and I would prefer to wait and buy on dips rather than a new investor buying it at current levels.
Right, Shaina, I'm going to stick to the real estate sector, and the next stock, which is also on our radar today, is Godrej Properties. We've also had an update there as well, where we understand this agreed to develop township project on a 62-acre parcel in North Bangalore. Moreover, the project development is under profit-sharing model, and we understand that this will rake up a booking value of northwards of 5,000 crores, and expects to launch in the first phase in FY25, that is the upcoming financial year. Now, Shaina, Godrej Properties has had its own share of volatility, while a lot of its other peers have had a straight up run. Godrej Properties has at times lagged. What is your view on this one?
Yeah, so basically you're absolutely right, and because of which actually Godrej Properties for the medium term and of course even for the longer term looks one of the better placed than some of the other real estate stocks at this particular point in time, given the fact even in terms of valuation it is lower, it is more attractive compared to the others, and of course as you mentioned they have got very good projects also upcoming, and they've had the last 1 year with some of their ups and downs in terms of the numbers that they have declared. But I think in terms of management quality, in terms of the project quality, and of course the order book that will be there, I think Godrej Properties, if one wants to look at this segment in terms of overall real estate, it could give a decent bet for the medium term if you enter at current levels.
Okay. All right, Shaina, stay with us. We'll slip into a short break. But on the other side, we also get you an update on one of the commercial vehicles players, as well as several other stocks that we want to discuss. Stay tuned in, and we'll be back in just a bit.
Hello and welcome to NDTV Profit. Today, we will talk about tattoos and the worth of this market. The history of tattoos in India can be traced back to prehistoric times when tribal people were captivated by drawings on stone or wood walls. Their attempt to replicate these figures through needles gave birth to the practice of inking skin. Over the course of time, tattoos were embraced by tribals as a mark of bravery, war, religious beliefs, customs, marital status, protection from the male gaze, and so on and so forth. Today, in 2024, tattoos have become a means to express thoughts, individuality, personal experiences, and sentimental designs. The industry is estimated to generate over 20,000 crore rupees per year. What is driving this growth? One of the key drivers behind the growth of the tattoo market is the rising demand for customized and unique designs. Improved technological equipment for making advanced, safer, and painless tattoos have boosted the market. The laser technology for removal or modification of tattoos have also added to the surge. Increased exposure and promotion of tattoo designs on social media have led to widespread influence of tattoo culture on the youth. Take a look at these figures now. As per Fortune Business Insights, the global tattoo market is projected to grow from $2.04 billion in 2023 to $3.93 billion by 2030 at a compound annual growth rate of 9.87%. This is a sharp rise from 3.8% year-on-year growth between 2017 and 2022. As per Custom Market Insights, the diamond jewelry market is expected to grow at a compound annual growth rate of 5.5% by 2032, while the luxury jewelry market at a rate of 8.9%, but the tattoo market is estimated to grow at 9.5%. Is the tattoo business lucrative? According to an article by Opportunity India, tattoo kits are now easily available for less than Rs 10,000, while high-end kits range from Rs 20 to 35,000. Now, in a city like Mumbai, the average cost per inch is Rs 2,000 to 2,500. In Delhi and Bangalore, the cost per inch is between Rs 1,000 to 2,000, and in Goa, it is about Rs 500. We spoke to a couple of tattoo artists in Mumbai and found that at an average, the business earns them a profit of rupees 75,000 to 1 lakh per month. In fact, as per an article by India Today, a person can earn a minimum of 20,000 rupees to rupees 2 lakhs per month depending upon one's work and creativity with an initial investment of 1.5 to 2 lakh rupees. A beginner level tattoo artist can earn a minimum of 20,000 rupees per month, which gradually increases to a couple of lakhs or more depending upon the caliber of the artist and the uniqueness of their artwork. And I'd like to leave you with an interesting data by Advanced Dermatology that revealed that 63% of people with a tattoo smaller than the palm of their hand regret it. The reasons being impulsive decisions, 35%, significant meaning, 29%, or the
Welcome back. This is Hot Money. I'm Agam Vakil, and we are now going to talk about Eicher Motors. Well, Volvo Eicher specifically in this case, and we've had a volumes update coming in where we have in fact seen an overall 2% growth on a year-on-year basis for the February month gone by in terms of its overall sales volumes. Where we are seeing growth is, well, largely in trucks, and there is also the LMD bus segment, which has picked up substantially. On the other hand, a little bit of weakness seen in some of the HD segments. And as far as your overall exports are concerned, well, that has also seen growth of around 5% on a year-on-year basis. But to talk to us about the month gone by and what we can expect going forward, we are in conversation with Mr. Vinod Agarwal, MD and CEO of VECE CV. Mr. Agarwal, good afternoon. Thank you so much for joining in. Firstly, your assessment of the month gone by and what can we expect going forward?
As far as the industry is concerned, last 2 months have been less than the expectations. However, at the same time, this is also due to the fact that last year Q4 was very strong. So therefore, we had high base impact due to some preponement of sales last year Q4. As you know, this BS6 OBD2 norms were implemented from 1st April 2023, due to which there was some pre-buying. And as a result of that, last year Q4 was very strong. So the base was very high. When we compare the sales with that base, the numbers are looking less for the industry. However, on fundamentals basis, we see no concern as far as the commercial vehicle industry is concerned. And within commercial vehicle industry, as you have seen, as far as we are concerned, we are doing better than the industry. For the month, we have seen it is 2% growth, even though for the month, the industry has dropped by around 4%. And YTD industry has grown by around 5.6% for 3.5 ton and above industry. And we have grown by around 10%, 9.7% to be precise. So therefore, we are doing better than the industry. We are improving the market shares, and we are satisfied with our performance.
Sure. So we have a clear double-digit growth even for the first 10 months of this financial year to date. So an idea on at what rate can we expect this year to close? I know we're just 1 month in and 1 month left for the closure of this financial year. My question, I guess, in this case is specifically to do with exports then. Let me talk about exports because we have seen a sharp decline on a year-to-date basis of around 27%, but a 5% growth right now in the month of February. Can you tell us about the trends that are working out here?
Fundamentally, as far as exports are concerned, exports are not doing very well. And this is not only for the India as a country, it is all across in the globe. And the reasons are, as you know, geopolitical factors and also some of the specific foreign exchange related situation in some of the countries. Specifically, our South Asian markets like Bangladesh, Nepal, Sri Lanka. They are doing extremely low. They are down from the earlier peak of 18-19 by almost 80%. So therefore, there is huge drop in these markets. And on the other hand, if you look at the markets of Middle East market is growing consistently, and that is doing better for the commercial vehicle industry. Similarly, African market is impacted. Some parts are impacted, some parts are doing well. So African market is also overall it is down, but overall it is less down as compared to the South Asian markets. So therefore, overall exports is a concern. Now this currently exports from the country for the entire industry, it is at around 2.5 to 3,000 units per month, as against the peak numbers of 5,500 per month in 1890. So with respect to 5,500 per month for the industry, the commercial vehicle exports from India, they are down to around 2.5 to 3,000 per month. So therefore, exports are continuing to be under concern. And in line with that, we are also down. We are for the month, even though there is a marginal growth, but YTD basis, we are also down significantly in exports.
Okay, Mr. Agarwal, we leave it at that. Thank you so much for joining us and explaining to us how things are panning out, not just on an overall basis, but also in domestic and export markets. We wish you the best for the future.
Thank you. Thank you very much.
Right, so that's, of course, the management of Volvo Eicher. Shahina, your view on commercial vehicles and how things are panning out for them. It's not been a very encouraging year, but we have seen a significant pickup in Tata Motors. Ashok Leyland has been dealing with its own set of challenges when it comes to margins specifically. And of course, you also heard the management. They've shown us about a 12% growth in volumes for the financial year to date so far. But how would you assess these three companies? Of course, I understand that Eicher Motors is not just commercial vehicles, it's also the motorbikes. Still, your view here.
Well, I think, if one has to compare the three and discuss what would be the better pick, even at current levels, I would still go with Tata Motors, despite the stock having run up. And, the performance of Tata Motors would have outperformed something like an Eicher and even an Ashok Leyland for that matter, if you take a 1 year period. Having said that, I think if you look at the momentum from here, one is the debt is coming down. The debt was pretty high. That is coming down. Also, the sales in Europe, US, China, I think, things are looking better for the JLR portfolio. And domestically, of course, even we saw the last month, the growth has been pretty robust. So I would still go with the Tata Motors if you have a longer term holding. And for the rest of the two, I would say the second pick would be I would go with I would wait for an Eicher. I think there would be some time, margins are improving, but they still have to show their performance in terms of growth and overall volume. So I would still wait.
Right. Shaina, and finally, your view on the telecom sector. We've had certain updates from Vodafone of late. Of course, Bharti Airtel, the management has also spoken about the potential of leading ARPUs higher going ahead. Your view on this particular sector, and if you have a pick here.
Well, I think it's pretty clear that ARPUs, which were better, if you saw the recent past, are likely to go up still further. I mean, the managements are openly talking that, the ARPUs need to go up still further. And I think with a lot of investment going into 5G, ARPUs are likely to go up still further. And Vodafone, of course, there is clarity in terms of their fundraise, 45,000 crores of fundraise. I think that's a positive for the sector as for the overall sector. And also, I think if you want to pick, you can go with a Reliance, which offers you, multiple areas of investment, just not telecom, and they're doing pretty well. You also have Bharti Airtel, which has given you a decent performance in the last 1 year. And I think it still looks decent from current levels for the longer term. As far as Vodafone, in my view, the debt is very high. And I do not know at what will be the cost of the fundraise that they're going to do.
Right.
So that, in my view, would be a technical bet. One needs to follow technicals.
All right, Shaina, we leave it at that. Thank you so much for joining us and taking us through your views on the several stocks and themes that we wanted to discuss. And on that note, we have run completely out of time on this show. So it's a wrap on Hot Money, but don't go anywhere. Lots more lined up. Stay tuned to NDTV Profit.
Amul has completed 50 years in India. PM Modi will attend the Silver Jubilee celebrations of the Gujarat Cooperative Milk Marketing Federation, the owner of Amul. At one point of time or the other, we've all grown up with Amul butter or milk for sure. The famous Amul girl created in 1967 is family. We all recognize her. But as the brand grows 50 years old today, do you remember the full form of Amul? It is Anand Milk Union Limited. From producing 250 liters of milk per day since the time Amul was formed back in the mid-90s to today, where Amul has over 36 lakh dairy farmers and produces nearly 300 lakh liters of milk per day, the brand has had a long journey. The story goes way back in time. In the 1940s, dairy farmers were worried. The middlemen exploited their ways of profitable income, and a poor milk production system made their living difficult. Tribhuvan Das Patel and Verghese Kurian identified these issues and helped in the formation of the first milk union called Kaira District Cooperative Milk Producers Union in 1946. The cooperative model gave farmers direct ownership of the dairy industry. The union helped them process, market and sell milk and milk products without the interruption of intermediaries. And it was in 1955 that this union chose a brand name for itself called Amul, which means priceless in Sanskrit. And then in 1973, Amul Dairy, along with 16 other district cooperatives, formed the Gujarat Cooperative Milk Marketing Federation, which has now completed 50 years in India. Amul also started India's white revolution that made our country the world's biggest maker of milk and milk products. The brand follows an umbrella marketing technique which has helped GCMMF prevent association clashes and keep an open door for the patrons to coordinate in creating items. As per a report by Statista, the annual sales turnover of Amul from 2011 to 2023 has consistently risen, recording about 55,000 crore rupees of turnover in 2022-2023 alone. And did you know, Amul has also held a Guinness World Record for having the longest continuous run of any advertising campaign that has ever taken place anywhere in the universe. Amul Doodh Pita Hai India and Utterly Butterly Delicious will always strike a chord. Let us know which famous advertising phrases of Amul do you remember.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point. Hello and welcome to to Portfolio Manager. I'm your host, Neeraj Shah. On the show, we try and get into the minds of the portfolio manager to try and understand how is it that she or he is building out the portfolio or making the portfolio construct to generate alpha over the next 12 to 24 to 36 months. Our guest today is Tridip Pathak, who runs the Avendus Olivo Core Equity Portfolio. It's in a scheme with a AUM of roughly 420 crores, and since inception has had a decent performance relative to the benchmark index, which is the S&P BSE 500 TRI. Tridip, thanks so much for taking the time out and being with us on the show. Can you tell us a bit about the scheme and about yourself? What kind of portfolio manager are you?
Well, Neeraj, thank you very much for inviting me. So we are basically fundamental equity investors, more focused on businesses which are capital efficient and which have sustainable growth. And at the same time, we don't like to overpay for things. So, we are very cautious about what we pay for. So in a way, we are more fundamentally driven, long-term oriented. We like to invest in businesses rather than investing in stocks, I would say, we very strongly believe that stock market returns are generated ultimately and finally only through the underlying business growing, and it getting reflected over a period. In the meanwhile, there is always a lot of volatility and noise in the markets, which we tend to ignore,
So a particular index or a sector may find it difficult to have very substantially higher growth relative to maybe the economy, at least the economy linked sectors, Tridip. I'm just trying to understand, at the current juncture with the global growth looking a bit fragile and Indian markets not necessarily cheap, are you getting quote unquote the GARP valuation or growth at reasonable price valuations within this Indian landscape when you're trying to choose stocks for the next 12 to 24 to 36 months?
Certainly, yes, Neeraj, and surprisingly so, we find a number of opportunities even today. I guess the fundamental reason is over the last few years and 10 years rather, the depth and the breadth of the Indian market has expanded quite dramatically, So even today, we do find a number of opportunities across various sectors where we find much higher growth possibilities. Some examples would be manufacturing. Nearly 40% of our portfolio is focused on manufacturing companies, which derive their competitive advantage from much improved infrastructure, lower labor costs and all that. Some examples out here would be EMS companies or textile companies or even auto banks, and we find them growing at a much faster pace. Other things other sectors where we find much higher growth is obviously private banks and insurance companies, life insurance to be specific.
Now, with every investment comes this argument that there is always a way to look at it, a glass half full or glass half empty. So I'm going to try and probe a little bit into your portfolio and the psyche that you have when you're trying to choose some of these, right? So banking, if I'm not wrong, banks and NBFCs together constitute about 22.9% of your portfolio. Now, this would make you, unless I'm very wrong, a bit relatively underweight to the index weightage that we have. Correct me if I'm wrong. And if so, is that because you believe that while there might be growth, supply side from maybe global institutions who are selling some of these banks and are overweight there, a reason why the true valuations may not get captured in the next 12, 24 months? Or why is it that it has the weightage that it has? And what within this landscape do you like more? Because while the top tier banks, sorry for the long question, but while the top tier banks have not performed as well, we've had idiosyncratic reasons as instances of mid-sized banks having done really well in the last 12 to 24 months.
No, fair enough. 22.9% weightage is definitely a little lower than what is represented in the benchmark. But as such, our strategy involves in independent and individual stock selections, and we don't really get measure ourselves against a particular sector weightage and all that. Having said that, our individual positions do add up to a sector position, which is what you are able to see. We do within the financial services space also. We also like life insurance, as I said. I'll come to that later. But within the banking sector, our focus continues to remain on the larger private banks, including the mid-sized private banks. Okay, both of them, there are equally good opportunities available. And you mentioned about the fact that they have underperformed, which is all the more reason to believe that there is a far more higher opportunity. In fact, the private bank sector is one area where we find stock opportunities which are at a lower valuation than their past averages, ironically, whereas the market is at a higher valuation than what its average valuations have been in the past, So we do find a bargain out there. We are quite patient, and from a longer term point of view, the larger private banks as well as the mid-private banks will continue to gain market share as we go forward. They're growing quite well, and they'll be able to manage, we believe, their overall asset quality as well as net interest margins quite stably. So I would think, So just to mention about the fact that about the 23% from a bottom-up basis, we find very interesting opportunities in the life insurance space. Most of these companies, the share prices are telling you, if I were to do a reverse DCF, they're telling you that the premium growth in this industry is going to be only in the region of 2 to 3% or 4% max, which is not the case, So we do find a lot of opportunities which are attractive from a valuation perspective as well.
You could have made a similar argument around life insurance, Trideep, 12 months ago as well, maybe, wherein they looked attractive then, or they looked attractive even 24 months ago. But I was looking at either the private ones since 2017 when they circa 2017 when they listed, or the PSU ones. They haven't quite generated wealth. Now you could argue that because they've underperformed, they'll outperform, but that could extend itself for another 1 year as well. What is ailing these businesses or these stock prices, if you will?
So I guess there has been a correction in the valuations. I agree with you. Maybe partly, there were there was too much of expectations probably 2-3 years back. There has been some regulatory interventions of late about the surrender value thing. But if I were to just look at a little longer term in terms of the prospects for the sector, in terms of the fact that there is a lot more to go on penetration, and more importantly, I think the overall product mix slowly as you go forward will keep shifting towards the protection policies, which have much higher margins per se within the basket. So we find that the whole sector is moving towards more protection over a period, and certainly it will be able to take advantage of the under-penetration as well. And when the valuations tell you that the embedded growth in the share prices is hardly 2-4%, when the actual growth possibility could be anywhere in the region of 10 to 15%, then it basically shouts at you to say that, from a longer term perspective, there is definitely a good amount of ability to gain from this scenario.
Okay, fair point. Before we take that break, moving from something that has been a large portion of your portfolio, or is a large portion of your portfolio, and yes, viewers, 22.9 on banks and NBFCs and about 9% on life insurance. So that's collectively a fairly large or a reasonable allocation to both lending and non-lending financials. What I found absent, and again I may be wrong, but based on the sectoral breakup that I look, some of the high-flying sectors have been the likes of defense, railways, the last 12 odd months. They don't find a place in your portfolio, do they?
Yeah, they don't directly. There are a couple of businesses which do benefit from the railway capital expenditure. We have a business which is a part of the Vande Bharat, train system. But specifically what you're saying is right. We don't have direct exposures to defense or railways. we find valuations have stretched out quite a lot now. In fact, most of the entire PSU sector, I would think, there is a lot of higher valuations now than it were earlier. And we probably are not able to gauge, good opportunities, bottom-up opportunities which are at attractive valuations. I think that would be the fundamental reason. Let me admit, we may have missed a couple of these opportunities in the past, but we have been relooking our whole portfolio strategy, and we think we are okay with not having them in our portfolio at this stage.
Fair call. Okay, Trideep, stay on. So much more to talk about, from talking about something that is the large portion of the portfolio to something that is not there currently, or largely not there currently, maybe some indirect plays. We've covered the two ends of the spectrum, if you will. Now, we'll come back and try and cover what is there in between, if you will, on the other side of this very quick break. Stay tuned, viewers. We'll be right back.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash, made from 51 precious herbs.
Hello. Good morning, ma'am. I'm speaking from XYZ company. Are you looking for a job or a job change?
Have you been receiving unwanted calls from spam numbers? Are you tired of being offered new jobs, insurance schemes, or free health checkups? Well, today we will look at an interesting survey report by Local Circles on pesky calls that received 60,000 responses. Most unwanted calls are related to financial services, 54%, and real estate, 22%. In fact, the report has taken names. 40% mobile subscribers have identified Bajaj Finance as a top offender, HDFC Group as the second biggest pesky caller. The report reveals that 60% of people received 3 or more spam calls on an average day every day, and 92% of people registered on the Do Not Disturb list still get pesky calls. So is being listed on DND working? Clearly not. But the report also recorded a minute relief, as per which 6% people don't get any such phone calls. This relief comes after the TRAI directive to banks, insurance companies, and other commercial entities. TRAI is the Telecom Regulatory Authority of India. In fact, the Department of Consumer Affairs has constituted a committee comprising members of different regulatory authorities, telemarketing companies, and cellular industry to draft the guidelines to address the issue of pesky calls. So yes, pesky calls are still a worry, but there is a little relief too. Can you ignore them though? Toll-free numbers are identifiable, so institutions have found a new way. According to the report, calls from different mobile phone numbers that seem to belong to companies or brands have risen from 29% in February 2023 to 36% now. And look at the change in trend. Real estate selling has risen from 18% last year to 22% now. However, job offerings have decreased from 10% to 4%, and in the case of those selling financial services, the calls have slipped from 60% to 54%. So the bigger question is, will the nuisance of pesky calls end anytime soon? There should be a system where pesky callers are blacklisted at the Aadhaar level, so they have the risk of not getting a new SIM. Also, brands on whose behalf the contracted callers are calling also need to be held accountable by the Department of Consumer Affairs, so brands institute the right consumer outreach practices both with employees as well as third-party contractors. For more such updates, stay tuned.
All right, back with the portfolio manager in conversation with Trideep Pathak. The interesting piece that I like about this is that this, the last few days, there's been a lot of talk around the caution that SEBI brought out around mid caps and small caps, and how they've advised fund managers to take care of ensuring that people don't caught. And I've been on record saying that it is a warning, like many others that have come, that you need to be careful when you choose small cap stocks. It doesn't make them a no-no. If anything, there are a bunch of small cap sectors and stocks out there which potentially have far greater and far better growth rates than most other spaces. And the beautiful part about viewers that I see in the vendor's portfolio is that they have a sizable exposure, unless I'm very wrong, to the broader end of the spectrum as well. Now, Trideep, come in on this. I wanted to ask this to you. Does this worry you? There's so much chatter around how small caps have become completely avoidable, untouchable, what have you. And here I have a portfolio which has got a refreshing mix of large caps and mid caps as well, and small caps too.
A fair point, Neeraj. It's an interesting question in the right context. But let me step back and explain our thought process. We are market cap agnostic in a way, in the sense that we do not believe, and we think investors also should not fall into what we call as the definition trap. A lot of people use the words large cap, mid cap, and small cap, and they invest according to the size of the market cap. We think what matters in investing, again, fundamentally, is the underlying business. It doesn't matter what is the size of the business or size of the market cap per se. But there is herd mentality which happens when allocation happens towards market cap sizes and all that. We are aware of that. But our whole way of working has been that, look, we are going to look at the underlying business because, no two mid-cap companies are the same, right? If you compare two mid-cap companies or two small-cap companies, they're not the same. It is just that they belong to a certain size categorization, but their businesses could be completely different with very different horizon in terms of growth, from the prospects and all that, So we would rather focus on the prospects, and that is why, but from a liquidity management point of view, obviously it's important to have a balance. So we've always maintained our stance that we are a multi-cap offering, which in a way, because it is multi-cap, it is also market cap agnostic. And if I were to go into the historical, ranges, our large cap exposure has ranged in the, from 40 to 60%, and the mid and small cap also in the same way, 40 to 60%. But it is more focused towards the choice of the businesses rather than the choice of their size,
So when I look at the sectoral breakup, Trideep, and we discussed the two ends, but now I'm talking something in between. So I could argue that maybe textiles, maybe select pockets of real estate, etc., would certainly, or maybe auto ancillary would certainly be the mid-cap, small-cap flavor. What forms a part of the mid-cap, small-cap space? I know you're not investing by market cap, but if you're choosing to invest in a small-cap company in a particular sector, it'll be interesting to know.
Sure. No, certainly. So I referred to manufacturing, and I referred to quite a lot of opportunities within manufacturing, the EMS part, the textiles part, the auto anks part, there is another part which is housing finance. So that forms a part of our mid-cap strategy. Interestingly, our whole portfolio is focused on consumer discretionaries, and we find a lot of consumer discretionary ideas in the mid-cap and the small-cap space, as opposed to consumer staples, which are largely in the large-cap range. We feel that the consumer discretionary sectors would do far better, simply because there is a rise in per capita incomes. What was considered as a discretionary consumption, very soon and very fast, it is turning into non-discretionary, I would think, So we find a lot of opportunities. Some examples out there would be QSR, quick service restaurants, even real estate for that matter, and so on and so forth.
Interesting. Okay. Auto ancillaries has an auto ancillary. I would love to talk a bit about that, considering that here's one pocket wherein I've heard completely chalk and cheese commentary post Q3. If Baba Kalyani's comments around what could happen to demand was one end, some of the others that we spoke to, a Sona Comstar, RK Forging, what have you, they're all citing that they are not seeing any issues thereof. I would love to understand what is your view on autos and auto ancillary in particular?
Right. So I think, again, in autos, of course, we are focused more on the premium side. We find, there has been premiumization, and as I said, consumer discretionary part. We've seen low ticket items, consumption at the low ticket item level has not been growing much, but at the premium end, there has been a good amount of growth. So within auto, our focus is more on the premium end. And coming to your question about auto anchs, I think it's more company and business specific. I would think it's quite a large sector, and a lot of auto anchs companies are export oriented as well. So it all depends on what chain they belong to, and what is the competition out there, and in terms of the product categories. So it would be difficult to really paint one brush. But we are focused on businesses within that which are more futuristic in terms of technology, where they're able to, rather they've already taken strides in terms of a competitive advantage through their technological edge, and are into new sunrise applications and sectors. So I would think it is more business and company specific.
Okay, point well noted. You do have an exposure to information technology as well. Is this ER&D? Is it IT services? Is it large? Is it small? And why is it here when discretionary demand, in the words of the companies, isn't quite turning around the corner anytime soon?
Oh, interesting. So within that space, we have an exposure to the advertisement, the ad tech space, and also to a product company in the banking platform. So unlike, we don't have much exposure to IT services per se, by choice. It's more towards platform companies within the technology side, be it the advertisement technology platform or be it the banking products platform.
Okay, point well taken. Okay, so this is, this is more the platform companies which got de-rated for a bit and have just suddenly found resurgence, save for a fintech player which is under the eye of the storm. Most others seem to have done reasonably okay. So I think it falls under that bucket.
Not exactly. I would think in the sense that not in that loss-making so-called new generation companies per se, but highly profitable companies in the technology and platform space with a return on equity of more than 20%, and that is where our focus has been.
Okay, do you guys buy and hold for a really long period of time, or is it there's no such framework that you may take the gains when they come and it's not necessarily held for a long period? Just trying to understand your psyche.
Sure. So our investment horizon, the way we look at things and expectation wise and all that, investment horizon is anywhere from 3 to 5 years. Okay. But the holding period could be different. We may have to book profits in case our position really does well, and we need to size the position per se. So we do take action when we have to size it, but typically our horizon is definitely 3 to 4 years, not less than that. A holding period could vary depending on what is happening with the stock or with our position within the portfolio and the size and all that.
Got it. My final question, Tradeep, you told us about a few pockets like defense, railways, etc. In some of them where you now don't find the risk reward to be favorable. Where is it, aside of that you are negative on, wherein you believe that either the valuations or the growth prospects are firmly stacked up against the fortunes of the sector or the companies?
Yeah, so if you look at a large, vast majority of the kind of businesses which we don't have in our portfolio, they would belong to the IT services space. I'm talking the services space, IT services space. They would belong to, I would think, the overall the global commodity space, which you normally like to avoid, okay, because we don't have much knowledge or ability sitting here in India to take a gauge on how the commodity prices are going to move. So I would think metals, commodities, IT services, businesses out there, we don't have any exposure, I would think, in our portfolios at this stage, because of the reasons which you pointed out.
Got it. Okay. Fair call, Tradeep. We'll leave it at that. Out of time on the show, but thank you for your insights and thank you for letting us a sneak peek into how you guys think about the portfolio construct. Much appreciate your time.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Electoral bonds have been deemed unconstitutional by the 5-judge Supreme Court bench headed by Chief Justice D.Y. Chandrachud. They were first introduced in 2018. An electoral bond is a means to fund a political party in India while maintaining anonymity. These bonds are available in multiple denominations ranging from 1,000 rupees to 1 crore in specified branches of the State Bank of India. This was introduced in the system to maintain transparency in political funding via a banking network and reduce black money. But on the flip side of this intention, questions have been raised on the basis of an important fundamental right of democracy. That's right to information. Is it constitutionally right to keep the source of political funding discreet? Why shouldn't the public know who is funding how much money to different political parties? As per the findings of Political Party Watch, a program under Association for Democratic Reforms, 28,030 electoral bonds worth rupees 16,618 crore were sold between March 2018 and January 2024. The Supreme Court's unanimous decision follows a petition filed in September 2017 challenging the Finance Act 2017, which introduced the electoral bond scheme for the purpose of electoral funding. The Act has also removed the previous limit of 7.5% of the company's average 3-year net profit for political donations. The Supreme Court has asked the following corrective actions to be taken immediately. State Bank of India will need to stop issuing electoral bonds immediately. SBI will have to submit the details of the purchase of electoral bonds and their encashment by political parties since the interim order of the court, which is April 12, 2019, to the Election Commission in 3 weeks by March 6th. The Election Commission will have to publish all these details on its website 1 week after, that is on March 13th, after it has received all the information. Electoral bonds that have not been encashed yet by the political parties will need to be refunded. For more such updates, stay tuned to NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future, as we've got your options covered. Futures and options strategy that'll help you move with the tide. An unmissable trade.
Markets gain marginally after opening at record high. Sensex trades at 73,900 levels, while Nifty is near 22,400. And sectoral indices trade mixed, dragged by media and metals. On the other hand, oil and gas and pharma emerge as the top gainers. Wind turns against Inox Wind. Stocks dip 5% in trade after Ministry of New and Renewable Energy decided to bring back reverse bidding as wind tariffs rise in auctions. More flack for AI industry. Firms need to get government permission before launching products in India, said IT Minister Rajiv Chandrasekhar. And no respite for MPs and MLAs. Supreme Court overrules 1998 Narasimha Rao judgment orders legislatures that they cannot claim immunity from prosecution for taking bribe to make a speech or cast a vote in legislature. Hello and welcome. You're watching Market IQ. I'm Smriti Chaudhary, and for the next 30 minutes, we'll take stock of how the markets are doing at noon. Let's look at the benchmark indices. Nifty 50 is flattish, only up about 0.1% as we speak. If you look at the sectors, we have the likes of Nifty, auto, IT, consumer durables, all down and trading in red. However, the biggest loser today is Nifty Media, that's down about 1.7%, followed by IT. We have PSC stocks gaining today, and the sector, and that's reflected in the sector. It's up about 2.5%. However, the second one is energy, and we're going to talk a little bit more about that just in a bit. But first, let's also look at the broader markets and see where they're at. Nifty Midcap 150 is also kind of flattish, only up about 0.14% as we speak. And Nifty Small Cap is in the red today. It's trading with cuts of about 0.6%, and that has been the case since morning. It opened a little higher in the morning, but immediately started dragging after that and is maintaining the losing streak even at midday. But let's pull up some Nifty 50 stocks and see what's how they're doing. If you look at NTPC, that's up about over 4.5% as we speak. Now this is a record high for NTPC. This comes after they approved a project that costs about over 17,000 crore rupees. They approved investment into Singrauli project, and that can be seen positively in the stock today. The second one is HDFC Life, that's up about 2.8% as we speak. There's Power Grid, also up about 2.5%, followed by BPCL. So a lot of energy stocks gaining in today's trade as well, and we're going to talk in detail about these energy stocks and how they're trading. Let's also look at the breadth of the market, and if we can pull that up and see how that is. Yeah, so we started off with the advances. It was in the favor of advances, and now it's in the favor of declines. If you see, it changed pretty much in the morning trade itself, and now we can see about 2/3 of the market declining. So that's where we're currently at. Now let's focus on, as promised, on the wind energy sector. Now the stocks are declining today, including Inox Wind Energy, that's down about 5% and is stuck at lower circuit. Now this comes after the Ministry of New and Renewable Energy has decided to bring back reverse bidding as wind tariffs rise in auctions. Varsha is joining in with more on that. Varsha, tell us a little bit more about what is happening in the wind energy stocks today, and they're all tumbling in trade today.
Good afternoon, Smriti. So as you rightly said, wind energy stocks are under pressure. As we see, Sangvi Movers is down 7%, followed by Inox Wind and KP Energy as well. Now this on the back of, so there was a media report stating that Ministry has decided to bring back reverse bidding as wind tariff rise in auctions. Now, Ministry has sent letters to agencies for the same. Now, this is on the back of undersubscription and high tariff discovery in recent wind bids. Now, just to give you an overview, there are two types of bidding. One is reverse and the other one is closed bidding. Under the reverse auction method, bidders continue to bid against each other after the initial bids are open until a bid tariff goes unchallenged by counter bid. Now, incidentally, the ministry had given up the reverse auction method at the beginning of this financial year. Now, this method did bring tariff down, but the problem was that a lot of company had inventory which they sold off at a very low prices, which led to poor capacity installation, which affected the wind industry. Now the reverse auction, was given up and the closed bidding system was introduced, post which tariff did rise. Now, NDTV Profit did speak with Inox Wind in Q2 FY24, wherein they said that last year this was a problem as everyone had an excess inventory and sector was not doing as well. But if you see, government had set target. So out of 500 gigawatt, 150 gigawatt from wind power is expected. And also company do not have excess inventory. So this shouldn't affect wind sector as all. But today we are seeing pressure on the stock. So let's see what happens in future.
Definitely, you will see how this pans out. Thank you so much, Varsha, for being so comprehensive with us. Now let's move on to the macros. Now this comes from Moody's, the rating agency that has revised the growth forecast for India's gross domestic product for 2024 to 6.8% from 6.1% earlier. Now they said this citing stronger than expected data in 2023. My colleague Pallavi Nahata is joining us to get us the key highlights of the note.
Yeah, hi Smriti. So you're right, Moody's has revised the growth forecast for India's GDP for calendar year 2024 to 6.8%, like you pointed out, from 6.1% earlier, citing stronger than expected data in 2023. Now, with global headwinds fading, the Indian economy should comfortably be able to grow between about 6 to 7%. That's what Moody's said in its research note that was published earlier today. And the ratings agency also said that it does expect policy continuity and the government's thrust on capex to continue for the rest of the year and for the near-term outlook. Private industrial capital spending, which has been slow to pick up, is also likely to pick up with ongoing supply chain diversification benefits and investors' response to the government's PLI scheme. The ratings agency also said that high-frequency indicators show that the momentum that we saw in 2023 does continue according to the data we have so far. So given the solid growth dynamics and the fact that inflation is still above the 4% target, Moody's actually does not expect the central bank to act anytime soon when it comes to cutting rates.
Well, thank you, Pallavi, for that. So Moody's has raised the GDP growth outlook for 2024 to 6.8%. However, for FY25, as Pallavi mentioned, it's at 6.4%, and which is probably why economists are looking at slower credit growth for banks, as I just mentioned about the GDP. So that might be one of the reasons that may be playing out. Mimantsa Verma is joining in with more on this.
Yeah, hi Smriti. So a slower growth in India's economy in FY25 is likely to moderate loan growth to 14%. This is what economists have been telling us from the current 16 to 17% credit growth. Bloomberg poll of 53 economists has also pegged the GDP growth in FY25 to 6.4%, which is sharply lower than the RBI estimates of 7%. The government, however, expects 7.6% FY24 growth estimate. So economists have cited weakness in private consumption, uncertainty over external demand, and incomplete transmission of RBI's rate hikes to be the reasons for slower disbursements going forward. Moreover, the added push in credit offtake due to HDFC and HDFC Bank merger is also likely to fizzle out in FY25, which is going to reflect on the bank credit growth in FY25. So while RBI data suggests that the lending to NBFCs has slowed down considerably, City Research has also mentioned that the moderation in NBFCs lending is going to continue going forward as well. One more thing that the economists have pointed out is that the personal loans, which were on a high for all these months, they are going to see slight adjustment and moderation in FY25 because the pent-up demand that we saw in COVID era is going to normalize going forward.
All right. Thank you, Mimantsa, for that. We may see personal loan demand moderating from here on. But let's take a break for now. After the break, we'll take you through a slew of news coming in from the national capital. Stay tuned for that.
Brought to you by बनेगा तो बढ़ेगा इंडिया, अल्ट्राटेक, देश का नंबर 1 सीमेंट.
The farmers' protests have been making headlines. Indian farmers have demands such as legal guarantee on MSP, pension and debt waiver, no hike in electricity tariff, reinstatement of Land Acquisition Act 2013 and more. But while the protest becomes important from the point of view of elections and politics, it's not just India that has its farmers agitated. The streets of Spain, Belgium, Hungary and Poland have been roaring with protests by farmers too. Around 1,400 tractors took part in a protest in Poland and roads were blocked across the country. What do they have a problem with? Rising production costs, falling sale price, stringent regulations. They say that the European Union is not doing enough to stop cheap imports from Ukraine, which is affecting the demand for local produce. They are also not happy with the European Union's Green Deal that's designed to zero out pollution by 2050 because it limits the use of pesticides, which in turn affects yield. In Greece, farmers have demanded lower electricity prices, tax-free diesel and subsidized animal feed. In France, farmers have been fighting for improved pay and protection from foreign competition. The French government offered 400 million euros, that's $436 million, in various measures in reciprocation to their problems over low earnings, heavy regulation, and unfair competition from abroad. In Germany, farmers are against the government's decision to phase out tax concessions on agricultural diesel. Their argument is that this will lead them to bankruptcy. In Romania, the protests stem from anger about low prices for produce, rising costs, imports of cheap foodstuffs, and constraints imposed by the European Union's drive to fight climate change. In the United Kingdom, farmers are struggling to keep up with weather changes and war-related supply chain disruptions. The whole of Europe seems to have the agricultural sector in pain as climate change becomes a central focus and production prices increase. And no, it doesn't end there. As per Down to Earth, since 2023, farmers have protested in 67% of countries in South America region for a variety of reasons, such as wanting better export exchange rates and reduced taxes amid an extended economic downturn and Argentina's devastating drought, which has severely damaged crops and agricultural output. And look at this data. Farmers' protests have happened in 12 countries in Africa, 11 countries in Asia, 24 countries in Europe, 8 countries in North and Central America, and 2 countries in Oceania in just a year's time. So let's boil down all this worry to 5 main reasons, India included. Pricing of produce, delayed compensation or subsidy, unfair effects of climate change, policies and regulations, import and export duties, and supply chain discrepancies. What does this say about the world of agriculture? Does it just question politics and governance, or does it hint at a bigger problem, a potential global food crisis?
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right.
Welcome back. You're watching Market IQ on NDTV Profit. Before we move on, let me mark a stock that's that was up in trade at about 11.5% intraday high, and as we speak it's still up about over 9% in trade, which is MOIL. Now this comes on the back of February business update. If you look at the business update, the production was up over 15% year on year at 1.51 lakh tons. We're talking about the manganese ore, which the production of which grew 15% year on year. However, the production grew 37% year on year to 15.84 lakh. This is up to February 2024, so from April till February, and this is also the highest level that MOIL has achieved since its inception. This is according to the company. So pretty good day for MOIL there. The sales are also up 18% year on year at 1.56 lakh, and sales up 32% year on year from April to February to 13.91 lakh. A good day for MOIL as we speak. But let's move on to some AI news that's coming in. Google's Gemini mishap has prompted Nifty to issue an advisory for AI usage, saying platforms need explicit government approval to use under testing unreliable AI models. Rishabh Bhatnagar joins in with more details on this. Rishabh, what are you picking up from this?
That's right, Smriti. What we're hearing from the Ministry of Electronics and IT is that there will be an explicit government approval that a lot of these large AI platforms, actually large platforms that deploy models of artificial intelligence, generative AI, a lot of these models will require explicit government approval starting today. This was an advisory dated to these platforms March 1st. And within 15 days, these platforms are now required to submit a status report to the MeitY on the actions they've taken. So March 16th is when we can expect something from these platforms as well. The biggest takeaway from this advisory is that platforms have been asked to ensure that their AI model / large language model does not permit any sort of bias or discrimination. And also that these under-testing and unreliable AI models be appropriately labeled by these platforms. And just a few minutes ago, we also had an update by the MOS IT who said that this only applies to large platforms and not startups. But again, we're not very clear in terms of what defines startups versus large platforms here. So will it impact an Ola Krutrim? That is yet to be seen. That's still a gray area, and we'll keep tracking that. Back to you.
All right. Thank you, Rishabh, for that. We'll keep tracking that and we'll bring you more updates on this as we get them. Now, NDTV reports, quoting sources, that at a meeting of the Council of Ministers over the weekend, Prime Minister Modi represented a Vision India document for 2047, saying planning for a Vikasit Bharat by then is a priority. My colleague Vasudha Venugopal joins in with key highlights from the meeting.
So yesterday, the meeting was very sort of critical because, it just comes days before the elections get announced. And the Prime Minister has interestingly spoken about this 1 lakh crore, fund in the budget for futuristic technologies. He has spoken about countries facing, this challenge of aging population. He's talked about how Viksit Bharat, the plan for it is a priority for him, and how, the government has been working on this since December 2021. And the next budget that gets presented in June, July, very confidently is that the government is coming back to power. That will have a glimpse and actually a roadmap for Viksit Bharat. To the ministers, he specifically told them to be careful in their, in their speeches, not to get into controversies, and more importantly, be careful about AI, deep fakes, and also ensure that schemes and, welfare schemes and governance work that the government is doing actually reaches to people. But this Viksit Bharat thing, he specifically talked about how this needs to be part of all governmental agenda, how business bodies and, even media needs to talk, create a dialogue on this so that India becomes a leader in not just thought, technology, and also innovation. He has specifically talked about also sustainable economy. So some key focus areas there, but it was also one of the most critical meetings coming before elections. In one way, nudging the bureaucracy and also ministers that this is just continuity in progress, and the contest that everyone is expecting in the election is not going to happen. It's just going to be a formality. So we'll just keep doing our work. That's the big messaging out there in the PM's almost 8-hour-long meeting that happened with bureaucrats and ministers yesterday.
Thank you, Vasudha, for that. Definitely a crucial time because we're only a month or so away from the general elections. However, a 7-judge bench of the Supreme Court has unanimously ruled that elected representatives cannot claim immunity against allegations of bribery for casting a vote or making a speech in the legislature. This is an overruling of a previous 1998 judgment in the PV Narasimha Rao case. My colleague Varun Gakkar gets us more details on this. Varun, what are you picking up on this specific order?
Yeah, hi Smriti, thank you. Yeah, so rightly pointed out by you, the Supreme Court, a unanimous 7-judge bench has held that legislators cannot claim immunity for taking bribes because a member indulging in bribery indulges in a criminal act which is not essential for the function of casting a vote or giving a speech in the legislature, the court has held. The court has also said that immunity granted to legislators seeks to sustain an environment in which debate and deliberation takes place within the legislature. This purpose is destroyed when a member is induced to vote or speak in a particular manner because of an act of bribery. The court has also clarified the threshold for holding a person guilty for accepting a bribe. The offence of bribery, the court has held, is agnostic to the performance of the agreed action. The court has went on to explain that it does not matter if the vote is cast in the agreed direction or if the vote is not cast at all. The offence of bribery is complete when the legislator accepts the bribe, the court has explained. Now, the court has also said that corruption and bribery are destructive of the deliberative ideas of the Constitution, and it is not necessary that the action for which the bribe has been taken is actually performed. Now, overturning the 1998 P.V. Narasimha Rao judgment, the court has said that the ruling resulted in paradoxical situation where a legislator accepting a bribe is conferred with immunity if it is followed through by a voting in the agreed direction. However, if the bribe is accepted and the vote is not cast in the agreed direction, no immunity would lie as per the 1998 judgment. Now, we don't have the written order as per yet, but as soon as it comes out, we'll get back to you with more details.
All right, thank you, Varun, for that. Now, Finance Minister Nirmala Sitharaman will inaugurate a conference of GST enforcement chiefs today. The aim is to tackle tax evasion and fake invoicing. Janani joins in with more details on this. Janani, what are the key outcomes expected of this conference?
That's right, Smriti. Like you pointed out, Finance Minister Nirmala Sitharaman is meeting the enforcement authorities of the state and the central GST authorities as of today. And as we know, the meeting is already underway. This is also being attended by the Revenue Secretary and the CBIC Chairman. What is on this agenda, you ask? Well, firstly, combating GST fake evasions, fake invoicing. There's also about sharing best practices and, fostering some synergy. If you remember, just a while back, the central authorities had investigated and sort of sent out a field notice to all their field formations saying that, officials must be careful in what kind of show cause notices that they send out. This was in the wake of the spate of GST notices sent to many companies. So this particular meeting, in fact, comes after such a notice went out. While we do not know when the next GST Council meeting may be, this definitely gains precedence, considering this will be one of the first meetings with, both the state level authorities and the central level authorities in the capital city to discuss further on how they can get together and effectively put out the GST authorities' mandate. We also understand that technology leveraging and balancing ease of doing business is a primary concern. Last, we know that CBIC had run 2 drives, one on curbing fake evasions and one on increasing, customer awareness, getting more people into the GST net. We'll have to see what this particular meeting yields, but this is all we know as of now. Back to you.
All right, thank you, Janani, for that. We'll be tracking the meeting and bring you updates from there. Now on to our special Women's Day series now. We bring you the story of one such woman leading the energy space, Repos Energy. Let's take a look at the journey so far, and thanks for watching Market IQ, but stay tuned for more updates.
Hi, my name is Aditi Bosle Walunj. You saw me as a daughter-in-law, as a wife, and now I'm here as an entrepreneur and a co-founder of Repos Energy. So ever since I was a kid, like many other kids, I also wanted to change the world. Trust me, I come from a family who wanted me to get married when I was 24. I did get married at the age of 24. As I got involved in the family-run businesses of fuel stations and a lot of constructions, hospitality, there was that eureka moment where we thought, can we change or can we transform the energy distribution of the world? And today, let me show you something exciting that we've built in the energy space. Repos IoT factory, where we are transforming the energy distribution of the world. To put a mobile petrol pump or to sell diesel outside a petrol pump in India, it was not allowed. And we said, oh, so then, and that's where our journey started in 2017, where we got the entire policy along with the oil marketing companies, Government of India amended for India for getting this Repos fuel delivery or the doorstep fuel delivery activated. So that's where what you see behind is something what we innovated known as a mobile petrol pump or a mobile fuel station. There's no rocket science actually. We studied the physical brick and mortar petrol pump. We mounted that on wheels and connected to the end user with a mobile app. Today we are talking about diesel and a lot of people ask, how are you saving carbon emissions through diesel? That's the first question we get. And let me tell you a small scenario. If an infra site or if a transporter has 10, 15, 20 vehicles, they spend around 5 to 6 kilometers just to procure fuel on an average. Sometimes it goes up to 50, sometimes it goes up to 1. And when the process of getting fuel is so tedious, you burn fuel to get fuel. That's why we are saying that instead you coming, we innovated something known as a diesel ATM, which is a datum which we install at their sites. Every business has gone on technology. Your groceries, your hospitals, your doctors, your food. Why not energy? Why not today's fuel? Why not tomorrow's fuel? So, last month, recently when I met the Honorable President of India, when 25 female co-founders and entrepreneurs were called, it was such an honor to know that the President of India wants more women empowerment in the country. That if I can stand here and do a lot of things, one of the biggest reasons was, of course, Chetan standing here and my biggest pillar of strength. I was just discussing with him, Chetan, how can we do that? How can we increase the male-female ratio in the organization at the factory? And I think let him share. He came up with an amazing idea for the new factory or the new assembly line that we are building. You want to share that?
Yeah.
Please.
So we aim to build an high-skilled assembly line for datums, and we are hoping that the entire assembly line of our datum will actually be operated through an women-led leadership, and at a shop floor also we will have women who will be actually assembling these datums. The responsibilities what male are carrying, exact same responsibilities a female is able to carry, and I think the difference somewhere will end when we look both at the same time.
Brought to you by बनेगा तो बढ़ेगा इंडिया, अल्ट्राटेक, देश का नंबर 1 सीमेंट.
Hello and welcome to NDTV Profit. Today we will talk about tattoos and the worth of this market. The history of tattoos in India can be traced back to prehistoric times when tribal people were captivated by drawings on stone or wood walls. Their attempt to replicate these figures through needles gave birth to the practice of inking skin. Over the course of time, tattoos were embraced by tribals as a mark of bravery, war, religious beliefs, customs, marital status, protection from the male gaze, and so on and so forth. Today, in 2024, tattoos have become a means to express thoughts, individuality, personal experiences, and sentimental designs. The industry is estimated to generate over 20,000 crore rupees per year. What is driving this growth? One of the key drivers behind the growth of the tattoo market is the rising demand for customized and unique designs. Improved technological equipment for making advanced, safer, and painless tattoos have boosted the market. The laser technology for removal or modification of tattoos have also added to the surge. Increased exposure and promotion of tattoo designs on social media have led to widespread influence of tattoo culture on the youth. Take a look at these figures now. As per Fortune Business Insights, the global tattoo market is projected to grow from $2.04 billion in 2023 to $3.93 billion by 2030 at a compound annual growth rate of 9.87%. This is a sharp rise from 3.8% year-on-year growth between 2017 and 2022. As per Custom Market Insights, the diamond jewelry market is expected to grow at a compound annual growth rate of 5.5% by 2032, while the luxury jewelry market at a rate of 8.9%, but the tattoo market is estimated to grow at 9.5%. Is the tattoo business lucrative? According to an article
Welcome, you're watching the Mutual Fund Show. I'm Tamanna Inamdar. Now, this is the show where we tell you what is the best direction for your mutual fund investments and strategy. And we're talking today about large cap funds. Now, large cap funds are back in focus, perhaps will soon be back in vogue. The context is an advisory issued by SEBI last week directing AMCs to moderate flows into mid and small cap funds and rebalance portfolios. Does that mean that we will now see more inflows coming into large caps? If so, is it time for you to also relook at your portfolio? How should you do that? What are the best large cap stocks to pick? For context, on an average, large cap funds have given a return of about 39% in the last 1 year, not shabby at all. But small cap and mid cap funds have given over 50% returns. And this is why they have continued to attract a lot of investments, especially from retail investors. To speak more on this and how you should perhaps relook at some of those large cap funds, we're joined today by Mrin Agarwal, founder of FinSafe India, and Rushabh, founder of Rupee with Rushabh Investment Services. Welcome to both of you. Thank you so much for speaking with us today. Mrin, let me begin with you and we'll start with your overview on the subject that we've picked. Large cap funds have always been an investor favorite, especially for, I would say, first time investors or those who are beginning their investment journey. They always find it a safe bet. How much should it account for in your portfolio in terms of large cap funds? And of course, the pertinent question today, is it time to relook and rebalance tilting towards large cap funds?
So good afternoon, Tamanna. And well, I think, large cap needs to be part of everybody's portfolio, right? Given the fact that it is an indicator of how economy is also doing, right? So I think large caps need to be in everybody's portfolio. Now, should you move out of small caps and get into large caps, especially, when we're talking about the mutual fund space, right? So, of course, I think, the decision to choose a particular market cap is truly based on the risk-taking ability. While valuations in small and mid caps have run up much above the averages, right? So I think they're like 25 to 30% above the long-term averages. I still feel that if people are in the investment or are in the fund for the long term, then they can continue to hold their investment. But of course, you need to keep in mind that there's been a run-up, which means that, you may see some sort of a correction. And of course, what is really important is to just remain invested. So my answer would be yes, large cap needs to be part of everybody's portfolio. But should you actually move out of a small cap fund and then move into a large cap fund at this space? Well, it depends on the risk-taking ability and the time horizon. We have seen a lot of people who've entered these funds in the last 1 year based upon the great performance. And certainly they need to evaluate at this point whether they can hold it for the next 10 years. If they can't, then they need to actually get out of equity.
If you can't, then you get out of equity. You have to be able to hold. The question is about returns. And Rushabh, I come to you on this point. The reason that small cap and mid cap funds have been so attractive is because of the kind of returns they are giving. And it's a cycle of sorts, right? If investors pour money into these funds, then fund managers have to go out and buy these stocks, which bring up their prices, and then there is more money coming into the funds. Now, will that virtuous cycle of sorts, in your view, shift to large cap funds? And is it a time to relook at large cap funds?
Tamanna, thank you so much for having me on the show. I absolutely agree with Mrin that, what she had to say, particularly that, large cap valuations are quite reasonable at this point of time compared to mid and small caps. But I would also say one thing and one backing that, what Mrin said, that, stick with your asset allocation. I always tell my clients that, stick with your goals, understand your goals, what is your risk appetite, what is your time horizon, and then form your asset allocation. See, even today, if someone wants to invest in mid and small caps, if they have a long-term time horizon, then definitely it's not a bad idea to invest in the mid and small cap space. But the only thing is that if you invest at the wrong time, we always say that, timing time in the markets is more important than timing. But actually, I don't agree with that, because see, if you invest at the wrong time, and however long if time horizon you have, you're still going to be disappointed with the returns what you're getting in the mid and small cap. See, when investors invest in the mid and small cap space, they are definitely going to expect a higher kind of returns, not only compared to large cap, but just overall. When markets rally, and when investors stick in the product for say 5, 7, 10 years, they're definitely going to expect superior double digit returns. So in my view, I think if someone invests today in the mid and small cap space, then definitely expect a low to moderate kind of returns, even from a long term point of view. But if you stick with your asset allocation, I think that's the best strategy going forward. Investors should continue with their SIP, but only thing investors should be cautious is about the lump sum investment, especially in the mid and small cap space.
Lump sum investment in mid and small, be cautious. But now, what about the focus back on large caps? How do you approach this, Rishabh? Give us, actionable sort of intelligence that our viewers and investors can look at, and if they want to rebalance their portfolios. First of all, how much of your portfolio should be large cap funds?
See, Tamanna, this is actually a great time if someone wants to rebalance in the mid and small cap space. Say, for example, if someone has an allocation decided of say 50% into mid and small caps, and if their allocation has shifted from 50 to say probably 70, 75 or 80, and if they are uncomfortable with that additional risk what they are taking over and above of 50% what they have decided, then of course trimming down that additional risk and coming back to their original allocation of around 50% would be great. So this is a great time if someone wants to reduce their risk in the mid and small cap space. This is a great time to rebalance, number one. Number two, as you correctly pointed out, this is also a great time to focus on the large cap space. There are three reasons for that. One is that the valuations are reasonable. Number two, that large cap over a 3 to 5 year period has underperformed the mid and small cap segment. And number three, over the past 3 years from 2021 to 2023, value as a segment did tremendously well compared to growth, right? So these are the three reasons I feel that one should look at the large cap segment. Now, how should investors invest in the large cap space? There are two ways to do that. One is they can look at the traditional large cap funds. Although I am not recommending active large cap funds at this point of time, so they can choose the index large cap funds, which is the Nifty 50 and Sensex plan. And second, because we have seen a lot of flexi cap funds which have been tilted towards large caps around at an average around 50 to 60% of the flexi cap around 50 to 60% of flexi cap funds have exposure in the large cap, heavy large cap segment. So either they can go for the traditional large cap index funds or flexi cap funds which are tilted towards large caps.
Okay. I just want to take that question with Mrin as well, in terms of which would be the best options for large caps right now, Mrin?
Well, I also concur with Rishabh that I prefer index funds myself because they turn out to be lower cost. And if you look at the long-term performances, again, you would find that the index funds would be a better, would give you a better return compared to the actively managed large cap funds. I also agree that a good way to play the large cap space is through flexi caps as well, because then you are not having to look at altering the allocation between large, mid, and small caps. So I would say that, but yes, I mean, if you were to ask me right now, funds that have done really well in the large cap space and which have actually beaten the benchmark on a rolling return basis would be Canara, Robeco, and Axis.
Okay, so Canara and Robeco, and Axis would be your top picks, Mrin?
Yeah, sure. On the actively managed side, of course, on the index side, a good Nifty 50 index fund like ICICI would work well.
Okay. Rishabh, your specific funds that you would prefer, you said, you prefer index funds as well, but the picks that you have in terms of large cap funds?
So there are 4 picks, Tamanna. One is UTI Nifty 50 fund. Second is HDFC Sensex fund. And on the FlexiCap side, they can look at DSP FlexiCap fund and UTI FlexiCap fund. So these are the 4 funds one can look at, creating a portfolio in the large cap segment.
Okay. So those are the topics as far as Rishabh Desai is concerned. We'll take a very short break, but we're continuing our conversation on the other side, so don't go away. On the other side, we also take your queries and our experts answer them specifically to tailor to your needs in terms of investments. Stay tuned.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Amul has completed 50 years in India. PM Modi will attend the Silver Jubilee celebrations of the Gujarat Cooperative Milk Marketing Federation, the owner of Amul. At one point of time or the other, we've all grown up with Amul butter or milk for sure. The famous Amul girl created in 1967 is family. We all recognize her. But as the brand grows 50 years old today, do you remember the full form of Amul? It is Anand Milk Union Limited. From producing 250 liters of milk per day since the time Amul was formed back in the mid-90s to today, where Amul has over 36 lakh dairy farmers and produces nearly 300 lakh liters of milk per day, the brand has had a long journey. The story goes way back in time. In the 1940s, dairy farmers were worried. The middlemen exploited their ways of profitable income, and a poor milk production system made their living difficult. Tribhuvan Das Patel and Verghese Kurian identified these issues and helped in the formation of the first milk union called Kaira District Cooperative Milk Producers Union in 1946. The cooperative model gave farmers direct ownership of the dairy industry. The union helped them process, market and sell milk and milk products without the interruption of intermediaries. And it was in 1955 that this union chose a brand name for itself called Amul, which means priceless in Sanskrit. And then in 1973, Amul Dairy, along with 16 other district cooperatives, formed the Gujarat Cooperative Milk Marketing Federation, which has now completed 50 years in India. Amul also started India's white revolution that made our country the world's biggest maker of milk and milk products. The brand follows an umbrella marketing technique which has helped GCMMF prevent association clashes and keep an open door for the patrons to coordinate in creating items. As per a report by Statista, the annual sales turnover of Amul from 2011 to 2023 has consistently risen, recording about 55,000 crore rupees of turnover in 2022-2023 alone. And did you know, Amul has also held a Guinness World Record for having the longest continuous run of any advertising campaign that has ever taken place anywhere in the universe. Amul Doodh Peeta Hai India and Utterly Butterly Delicious will always strike a chord. Let us know.
Welcome back. You're watching the Mutual Fund Show. Now, this is the section of the show where we answer your queries and some very interesting ones that we have today. Rishabh Desai and Mrin Agarwal are our experts who are going to be answering your questions. And the first one is from Shrirang, aged 65 years. Their goal is medical expenses and really funding medical expenses. He says, I had a SIP in SBI Equity Hybrid Mutual Fund, but stopped it after it collected a corpus of 1 lakh rupees. Now I am looking for a mutual fund that will provide support for future medical expenses. This is a very, very important query because after a certain age, if you don't have a pre-existing medical policy that covers you, you might find it difficult to get insurance. There will be a lot of, illnesses, hospital visits, checkups, some things that just do not get covered, but those expenses keep adding up as you grow older. And this is something that we often overlook. Using mutual funds as a vehicle to make sure that any unfortunate medical issue doesn't end up wiping out your savings. So thank you Mr. Srirang, for sending in that query. I'm going to take Mrin's view first on this. And Mrin, if Mr. Srirang is starting now and is looking for a mutual fund that will provide support for future medical expenses, how does he go about doing it?
Well, given his age and given the goal, which is for future medical expenses, which could happen at any point in time, I would say that he should probably look at investing in an ultra short duration debt fund or into a short duration debt fund if he can hold some amount for 3 years, right? So he could always plan the corpus in such a way that a part of it is in ultra short duration that can be immediately pulled out as and when required, and the balance amount could be in a short duration debt fund. And in both the cases, yes, I do recommend ICICI and HDFC in both of these cases. But yeah, I would just stay safe and certainly not have like an investment that has an equity allocation, because it can be volatile, and at the time of need, it may not be, it could be down or something of that sort, right? So better to stay safe on this.
Okay, so even say versus a good old FD for this profile, you're saying a debt fund is better, Mrin?
It's slightly better. I mean, of course, you can look at fixed deposit also. It's just that fixed deposits come with some prepayment penalty and all of that. So I just find that the mutual funds are more liquid in nature. Of course, you could look at keeping a 25% in fixed deposit, because if it's a real emergency, you need an instrument where you can just withdraw the money right away. And a flexi deposit would work well over there.
Okay, so a flexi deposit debt fund is what Mrin suggests. Rishabh, how would you advise Mr. Srirang, who's written in to us?
Mrin, Tamanna, I absolutely agree with what Mrin had to say. Stick with ultra short duration or low duration or even liquid funds, matter of fact, because, at this point of time, liquidity is very important. Having a conservative approach at this age is very important. That is why we advisors, we always say, start early, have your medical insurance done very early, so that, there are you need to pay low premiums, for that, because when you age, see, although I'm not an insurance expert, but as you age, and then when you take an insurance policy, you would need to pay a higher premium, and in many of the cases or certain of the cases, the insurance people don't even give you an insurance. So starting early is very important, and especially at this point of time, having a conservative approach in debt mutual funds and fixed deposits should do the job.
All right. Next query is from Johnson JK. He's aged 54 years. The goal is a retirement fund. Now, he says, my son is currently in the US and has an NRE account. He wants to start 5 SIPs and invest 10,000 each for future retirement corpus. Okay, so the retirement is not for Mr. Johnson, age 54, for his son. So what funds would you recommend? Now, we're not very sure how old Mr. Johnson's son is, but if he's 54, one would assume he's 30 at the very least. What would you advise, Mrin?
Well, I would say that since he is young and he has time to go for retirement, he can certainly take some amount of risk, and I would veer towards going towards mid and small cap funds. And I would suggest like Mirae or Kotak on the mid cap side, and on the small cap side, of course, Nippon. Of course, they'll have to check which are the funds that are taking investments right now. But yes, I think these would be the fund choices that I would actually recommend. Of course, if they want to play it slightly safer, then they can go in for flexi cap funds.
Okay, so flexi cap funds if they want to play it safer. Now, does NRE account holder have to do anything additional, Rishabh? And of course, the funds that you would suggest, but since this detail has been mentioned that Mr. Johnson JK's son is an NRE account holder, what does that mean in terms of tax liabilities, etc.?
See, when you're an NRI, right, there are certain mutual funds which don't allow, investments. So I think, first of all, I'm assuming, his age to be probably towards the end of 20s or a little bit early 30s. I would suggest, 60%, anywhere between 50 to 60% in the flexi cap strategy, and the rest can be divided into the mid and small cap space. There should be no issue in terms of SIP, or in terms of, as long as, he has the KYC done and NRI status to be updated. I don't think there will be any issue, for his investments. But just check it with the AMCs that which funds are allowed and which funds are not allowed.
Which are your top picks in this flexi cap segment, Rishabh?
There are two funds. What I can think of is one is Parag Parikh Flexi Cap Fund and DSP Flexi Cap Fund at this point of time.
And Mrin, do you want to give any specific advice to Mr. Johnson's son?
Well, of course, the main thing would be to again remain invested, right? And I think, there is one additional requirement, which is there is a US declaration form that they need to sign as well. And some of the AMCs also need you to be physically present in India at this when you're doing when you're signing up for the investment. So I think, as Rishabh said, that it's good to check with the AMCs and check out the AMC websites for the specific requirements.
Okay, so obviously convenience also becomes a factor when you make that choice if you're an NRI, because if you are not available to come down and do the paperwork, etc., then you might want a fund that makes it easier for you. All right, the next question is from Dilna, who's 36 years old, and the goal is a retirement fund. She says, I've been holding an Axis Blue Chip Fund with a 5,000 rupee SIP, UTI Nifty Next 50 Index Fund 10,000 rupees, and I'm planning to consolidate them into a single large and mid-cap fund to simplify my portfolio. But I'm divided between the Zerodha Nifty 250 large and mid-cap index fund, which is passively managed, and the HDFC large and mid-cap fund, which is actively managed. Could you recommend one of these options or suggest another large and mid-cap fund? What is interesting in this question is, first of all, it's a retirement goal. And I'm glad to see more and more people planning now for retirement. Secondly, it also brings up the question of whether you should go for a passive or an active fund, especially when she wants to move to a large and mid-cap fund. Bryn, what would you advise Dilna?
Well, it would have been good to know what would be the reason to actually get out of two funds and move into just one, but that's fine. That's their choice. See, the difference is really going to be in terms of expense ratio about 0.6% and the active versus the passive strategy. Now, in these days, I find that a lot of investors feel that the passive strategy is always going to work out best. And that's not true. It's not like, every fund in the passive space or every fund in the actively managed space is going to underperform the passive fund, or that's going to underperform the benchmark, right? So I think, what is really important is that don't get into a passive fund just because, you're reading or someone's telling you that, oh, you could passive funds are better. I've heard a lot of people saying passive funds are going to perform better than active funds. There's no way for anybody to know that. They're just less expensive. So, as long as she's clear about that fact, I think it's okay for her to choose a passive fund if she feels more comfortable with that versus going in with an actively managed fund. So, that's what I would suggest. Of course, I always say that it's always good to have diversification in your strategy. So, but here I can't even suggest that because she wants to consolidate two funds into one fund. So I can't tell her to have a passive fund and an active fund. So choose based on what you're more comfortable with and the strategy that you feel is going to do better. But at this point, there's no data to say, which is going to perform better. It's just that one is
given two options. She's given two specific options and asked which one is better.
Yeah, so I would still want to go with the actively managed fund rather than just going with the passively managed fund.
Okay, in this case, that's the HDFC large and mid-cap fund because those are the two options she's given. It's interesting because when Zerodha started its mutual fund venture, Nitin Kamath actually put out, and he put this out on Twitter, on why they've gone for entirely passive funds. And they say broader market exposure seems to be the only space where investors with moderate risk appetite can build a healthy portfolio and also sleep peacefully at the same time. So that seems to be the theory for why passive funds. Rishabh, your advice to our viewer?
Tamanna, I think to just keep it very simple is, have one active fund and one passive fund because it's large and mid cap. So around, 40-50% will be in the large caps and 40-50% will be in the mid cap space. So have one active fund and one passive fund because we have to accept the fact that today a lot of active funds are, underperforming even from a 7-year or a 10-year perspective, right? And 7-year and 10-year periods are very long period of time, and AMCs are charging, a good percentage, out of your kitty, on an annual basis in terms of expense ratio. So to keep it very simply, have one passive fund and one active fund. I think the anxiety what she has will be definitely reduced quite a lot.
One for which she wants a large and mid cap fund. So which one should be active and which one should be passive?
Have one large and mid cap active fund and one large and mid cap passive fund. You really don't need a lot of funds in your portfolio because large and mid caps, the combination is a very good combination. Even if the small cap segment is missing, the mid cap space would give quite well returns over a longer period of time. So she can stick with Zerodha Nifty 250 index, large and mid cap index, and HDFC large and mid cap fund. I think she'll be very well sorted.
Okay, so no need for an either or, do an and. Take both, Dilna. That's at least the advice coming from Rishabh. All right, that's all the time we have. You know where to reach us if you want to send us a query. Those numbers are on your screen. We hope to hear from you and, of course, see you back here on the Mutual Fund Show, Monday to Friday on NDTV Profit at 1:30 in the afternoon. For now, Rishabh, Marin, thank you so much for joining us. And for viewers, thank you so much for tuning in. But don't go anywhere. We're right back after the break.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Hello. Good morning, ma'am. I'm speaking from XYZ company. Are you looking for a job or a job change? Have you been receiving unwanted calls from spam numbers? Are you tired of being offered new jobs, insurance schemes, or free health checkups? Well, today we will look at an interesting survey report by local circles on pesky calls that received 60,000 responses. Most unwanted calls are related to financial services, 54%, and real estate, 22%. In fact, the report has taken names. 40% mobile subscribers have identified Bajaj Finance as a top offender, HDFC Group as the second biggest pesky caller. The report reveals that 60% of people received 3 or more spam calls on an average day every day, and 92% of people registered on the Do Not Disturb list still get pesky calls. So is being listed on DND working? Clearly not. But the report also recorded a minute relief as per which 6% people don't get any such phone calls. This relief comes after the TRAI directive to banks, insurance companies and other commercial entities. TRAI is the Telecom Regulatory Authority of India. In fact, the Department of Consumer Affairs has constituted a committee comprising members of different regulatory authorities, telemarketing companies, and cellular industry to draft the guidelines to address the issue of pesky calls. So yes, pesky calls are still a worry, but there is a little relief too. Can you ignore them though? Toll-free numbers are identifiable, so institutions have found a new way. According to the report, calls from different mobile phone numbers that seem to belong to companies or brands have risen from 29% in February 2023 to 36% now. And look at the change in trend. Real estate selling has risen from 18% last year to 22% now. However, job offerings have decreased from 10% to 4%, and in the case of those selling financial services, the calls have slipped from 60% to 54%. So the bigger question is, will the nuisance of pesky calls end anytime soon? There should be a system where pesky callers are blacklisted at the Aadhaar level, so they have the risk of not getting a new SIM. Also, brands on whose behalf the contracted callers are calling also need to be held accountable by the Department of Consumer Affairs, so brands institute the right consumer outreach practices both with employees as well as third-party contractors. For more such updates, stay tuned to NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made...
Hello and welcome. This is Last Trades. I am Agam Vakil, and in this show we take you through all the stocks which have either seen a buzz deal, a block deal, or well, buzzing on volumes. But before that, a quick look at the markets. And while the markets did make a new high today, specifically the Nifty I am talking about, and the Sensex is also advancing at the moment. And there have been minor dips here and there in the red through the course of the day. But overall, it's been a fairly stable, a quiet day, quiet start to the trading week, at least in terms of the key indices. Now, the Bank Nifty, on the other hand, is also currently, marginally in the green. And there hasn't been as much of traction on the Bank Nifty either on today's day of trade. After the first, spike in the first half of the day, we have seen a gradual sideways movement for all the key indices. Now, in terms of the constituents of the Nifty and how they are contributing to the flatness today, while we do have gains in something like an RIL and NTPC, on the other hand, Infosys and TCS is weighing down on the index. But, in terms of the contribution to the gainers and the losers are largely equal. If you consider something like the broader markets, well, there are plenty of stocks out there which are in focus. But on the whole, there's a little bit of an outperformance, but just marginally so, because something like a mid-cap or a small-cap index, mid-cap index is advancing, but small-cap index has underperformance. That's down around 0.5%. But, BHEL in the broader markets is what will also be in focus today. That's up around 13.3%. Then we have Oil India. That's up around 6.3%. Tata Communications is doing well today. That's up 4.4%. And SAIL is up by just as much. In fact, it's been a fairly steady last few sessions for the entire steel sector, hasn't it? Because we are looking at steady gains and continue to do so in a whole host of not just smaller stocks like SAIL, but also something like a Tata Steel and a JSW Steel too. And on the losing end, we do have something like a Fortis Healthcare, which is under pressure. That's down around 4.2%. And then we have Devyani International. That is taking a knock of around 3.5% at the moment. And besides that, Gujarat Fluorochem is looking at about a profit taking as well. So these are some handful of counters which are in focus today. But that said, let's take a look at what we are going to be talking about in large trades today. So we are naturally talking about BHEL, as I mentioned earlier. We do have large trades in HG Infra as well. MOIL will be in focus, considering volumes have surged. And we're also talking about TD Power and Systems as to what the company does and what's really going on here as well. And with that, let's straight up start by taking a look at BHEL, or Bharat Heavy Electronics. Now, all sorts of news reports surrounding this one, but for now, it is at a life high, and this is after coming out with a very disappointing third quarter. Maybe, just maybe, investors are perhaps anticipating a turnaround of sorts for this one. And I'm going to say no more, and let's get in Anushi to tell us a little more on BHEL. Anushi, good afternoon.
Afternoon, Agam. Hey, so multiple large trades in this counter. If you have to look at, the stock did see a intraday high of about 14%, while its volumes were buzzing about 4 times its 30-day average. Now, coming to the trade details, about 40.7 lakh shares changed hands, or rather 0.1% equity changed hands in 3 large trades today. Well, there has been potential reason that this could be on the back of the news update of NTPC, wherein NTPC received is in focus after its 17,200 crore of investment for its Singrauli thermal project, where it is anticipated that BHEL is the primary beneficiary in this case. So definitely watch out for this one. But other than that, there's recent developments also in this company, wherein Coal India and BHEL have formed a joint venture to undertake coal to chemical business, in which BHEL is going to be providing the company with the technology to do so, to set the ammonium nitrate plant. Again, the CIL is going to ensure that the ammonium nitrate offtake is about 75% of production, and the total outlay for this also stands at about 11,700 crore as per PTI. So a definite watch on that. Now coming to the stock performance of the company, so in the last 1 week the stock has seen about a 17 to 18% of an upside, while in the 6 months and 1 year period, handsome returns over here, about 92% and 256% respectively. So this is all on BHEL that we are gathering right now.
All right. Well, fair enough. Anushi, thank you so much for joining us and getting us those details on BHEL. And of course, media reports, as they suggest, that it's likely to rake in another large order. But the real question is, it's not about large orders. It's not just about large orders. It's also about execution capabilities. And while BHEL does enjoy a considerably large order book of well over 1.1 lakh crore rupees, at least in the past few quarters, it hasn't come through on execution, and in fact, it has disappointed when it comes to the earnings. Maybe what a lot of investors are perhaps expecting things to change for that. But we'll keep an eye on that one. From there on, we move on to the next company which is on our list, and that is Manganese Ore India. And that's also in focus. Of course, we've had some production updates here as well. Let's get in Mahima to tell us more about this. Mahima, good afternoon.
Good afternoon, Agam. So as you rightly mentioned, there was a February production update that came out today. Well, the production is up 15% year on year at 1.51 lakh tons. And overall, if we see for up to Feb 24, the production is up 37%. Similarly, sales are up 18% YOY at 1.56 lakh tons. And up to Feb 24, the sales are up 32%. So a good month as well as 9 months. Let's 11 months FY24 for MOIL. Now, there was also a revision in the manganese ore prices that took place with effect from 1st of March. The prices of manganese ore with content above 44% remain same. However, below 44% increased by 5%. Also moving on, the stock has been buzzing in trade today. Now, this is because of 2 large trades that took place at an average price of 302 per piece. Total volumes traded were approximately 10 lakh shares, which is around 5% of the total paid up share capital, and the volumes represent the volumes are trading at 5.6 times its 30-day average. Talking about the stock price, the stock touched an intraday high of 11.5% today. 1 month the stock has been down 10%, so it's not been doing well in the past 1 month. 6 months the stock is up 25%, and 1 year the stock is up around 96%. If we talk about the analyst recommendations, well, it's a mixed bag. 2 say buy, 1 say hold, and 1 say sell. So this is the overall view of MOIL. Let's see what it has in future.
Absolutely, Mahima. Thank you so much for getting us those updates on MOIL. And this is one of those other metal companies which really hasn't picked up as much and as significantly as some of its ferrous peers, or for that matter, even aluminium. This is something of a catch-up as well as far as this particular company goes. Of course, it's a government-owned company. But we'll continue to keep tracks on a whole host of factors that Mahima has spoken to us about that. And from there on, we move on to HG Infra, which is also in focus. The stock has reached an intraday high of more than 5% today. We have Varsha, who's going to give us more details on this one. Varsha, good afternoon.
Good afternoon, Agam. So as you rightly said, the stock has seen intraday high of almost 5%. Volumes are trading at over 3x. Shares surged for the 4th consecutive trading session on Monday, that is today. Now this is on the back of company receiving letter of acceptance from South Central Railway for doubling of track project, which includes electrification and signaling work, and the total cost of the project is around 447 crore. Earlier on Friday also, company was declared as L1 bidder for East Central Railway contract. Now this is for the construction of double line track formation, which covers works such as earthwork, bridges and electrification. Now the total value of the order is almost 709 crore, which is expected to be completed within 36 months. Now let's see what are the con call highlights as on Q3 FY24, wherein order book as on December stood at almost 9,626 crore. Also they are expecting order inflow of around 8,000 crores in this year's and 10,000 crores in next year. PAT margin is expected to be around 10%. This may increase to 11% in coming quarters. Also, they're expecting 7 to 20% growth in FY24 and expecting a revenue of around 6,000 by FY25. So this is all we have for HG Infra today.
Okay, another one of those companies which has had order book grow quite robustly over the course of the last 2 to 3 years. It has, of course, given away a lot of its gains on an intraday basis. Varsha, thank you for getting us those details on HG Infra. And from there on, I talk about TD Power and Systems. Now, this is the other one which is buzzing in trade. It has, gradually advanced through the course of the day, and it is gaining as much as nearly 9% as we speak at the moment. A lot of things have changed for this particular company, but to tell you what this company does is that it's actually engaged in manufacturing AC generators and electric motors along with various other applications as well. And it has its own technology when it comes to the 60 megawatt 4-pole generators, and it is also a licensee of the Siemens AG for 2-pole generators from 60 megawatt to 200 megawatts. In terms of today's action, it has in fact seen the highest intraday volumes in well over 1 month. If you consider just today's intraday volumes, this is nearly at around 3.8 to 3.9 times the daily 1-month average. And I was looking at the earnings of the company, and we've seen some fairly stable numbers come through, not just for the third quarter, but also for the last 9 months. So we are looking at a fairly steady growth in terms of around about 20% for the revenues. Say for the last quarter, and it's maintained its margins at around 16% on a year-on-year basis, and that perhaps has led to some investors taking interest in this particular relatively small company, but a strongly and stably growing company as well. So that's as far as TD Power for you. And of course, it is currently also trading at a life high as we speak. And it's gained substantially over the course of the last 12 months too. And well, for good reason too, as I mentioned, that it is starting to see stable growth come through as far as TD Power is concerned. Well, once again, another one of those mid-cap companies that you can perhaps keep on your radar. But on that note, we slip into a short break, but don't go anywhere. Lots more lined up on the other side, and stay tuned to NDTV Profit.
Co-presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
Electoral bonds have been deemed unconstitutional by the 5-judge Supreme Court bench headed by Chief Justice D.Y. Chandrachud. They were first introduced in 2018. An electoral bond is a means to fund a political party in India while maintaining anonymity. These bonds are available in multiple denominations ranging from 1,000 rupees to 1 crore in specified branches of the State Bank of India. This was introduced in the system to maintain transparency in political funding via a banking network and reduce black money. But on the flip side of this intention, questions have been raised on the basis of an important fundamental right of democracy. That's right to information. Is it constitutionally right to keep the source of political funding discreet? Why shouldn't the public know who is funding how much money to different political parties? As per the findings of Political Party Watch, a program under Association for Democratic Reforms, 28,030 electoral bonds worth rupees 16,618 crore were sold between March 2018 and January 2024. The Supreme Court's unanimous decision follows a petition filed in September 2017 challenging the Finance Act 2017, which introduced the electoral bond scheme for the purpose of electoral funding. The Act has also removed the previous limit of 7.5% of the company's average 3-year net profit for political donations. The Supreme Court has asked the following corrective actions to be taken immediately. State Bank of India will need to stop issuing electoral bonds immediately. SBI will have to submit the details of the purchase of electoral bonds and their encashment by political parties since the interim order of the court, which is April 12, 2019, to the Election Commission in 3 weeks by March 6th. The Election Commission will have to publish all these details on its website 1 week after, that is on March 13th, after it has received all the information. Electoral bonds that have not been encashed yet by the political parties will need to be refunded. For more such updates, stay tuned to NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Welcome back to Last Trades. How's the future demand looking for auto space? My colleague Vinay spoke to Maruti Suzuki's Senior Executive Officer Shashank Srivastav. Here's what he had to say. Listen in.
As far as the future demand is concerned, it is expected that it will be in low single digits for next year. Next year demand projection across OEMs is around just about 43 lakhs, that is 4.3 million plus, and against 4.2 million of this year, which is now expected. Really, it will depend on how the economy grows, how the monsoons are, how the inflation goes, interest rate, and so on and so forth. But early indications, if you look at February, the demand early indicators are basically inquiries and bookings, and that has been like 1 or 2% in case of February. So I think going forward, you could just see a plateauing also because of the large base effect that comes into force from Q2 of next year.
And we had the chance to speak to Nepean Capital's Gautam Trivedi, who spoke at length about the conundrum in the private bank space. Listen in.
No, I think it's a very valid question with respect to the fact that, for the longest time, you thought private sector banks, were the gold standard, and the PSUs, were really not well run, no skin in the game for the CMDs who were running it, and lackluster investor appeal. That's of course gone 180 degrees as balance sheets got cleaned up, and the fact that these banks, the PSU banks, became more prudent or seem to have become more prudent in their lending practices. So I think as a result of that, you've seen a gigantic investor sentiment surge towards PSUs and away from privates, HDFC included. So I think that correction in terms of time correction is still happening with the private sector players, including HDFC Bank. I think specific to HDFC Bank, as you asked, there is, I think, a bit of a wait and watch as the merger of the two entities plays out and the impact of that on the balance sheet, as we've seen over the last few quarters, starts to play out. I think people want to see evidence that the issues of the past are behind them, and from here on, HDFC Bank is back on the growth trajectory. Otherwise, you would not get this bank at half the valuation that is historically traded over the last 20 years.
You mentioned this very important point about private banks versus PSU banks as well. PSU banks have had a rally, but
we were doing some numbers. Despite the upticks that we've seen, some of them still trade at par on book. And their internals have significantly improved as well. So while there might be better value in private sector banks optically, are PSU banks then avoid, or selectively some of the PSU banks also offer value?
You know, it's a broad statement, and I think you've got, at one breath, you've got a State Bank of India, which is, you know, as always traded at a different valuation than the rest of the PSU banks, and has a different level of respect, should I say, from the PSU banks. So, but at the same time, if you look at the number of stocks that are now in the top 100, you've seen a lot of other names come in there. You know, Canara Bank, Punjab National Bank. So, you know, in the top, if I look at the top 100 stocks in India, and that's the large cap definition by SEBI, you have a total of 21 PSUs, and not PSU banks, but 21 PSUs, you know, which is remarkable. You always had the OMCs in there, you had ONGC in there, but now you're looking at so many more PSUs come in. So I think the overall sentiment clearly has improved for PSUs from an investor's perspective. And yes, you may still have some PSU banks that may be trading at, you know, sub 0.8 times or definitely sub 1 times book. But again, it's very stock specific versus having a broad generalization.
And moving on, Škoda Auto India will launch a sub-4 meter compact SUV in the first half of 2025. We spoke to Preeta Janeba, the brand director of Škoda Auto India, about the company's plans to introduce EV products in India. Listen in.
There are different kinds of investments, so expanding capacity in Pune, in Chakan factory, is actually not yet finished, but these 30% we definitely need. We are expanding welding shop and the assembly line and some logistics areas, not the paint shop, which is the most expensive, and you can still do a lot with the shift system. However, it has a certain threshold. Unfortunately, the amount I cannot disclose. Maybe later on when all is done, because the change is only about to be done this year. So there are some budgets which needs to be spent and after probably announced. And I mean, we are a transparent company which is paying taxes, giving the job to the people, so everybody can read how much money we can do here. But you can be sure that every money we do here in India, we invest into new product development. And after the compact SUV, there is much more expensive story, which needs a local content, which is coming, and this is embracing the EV market here in India, and this will as well require a lot of investment. So there are a lot of types of investment, but if you ask me, typically for compact SUV, it's a really small brother from Kushaq, but it has its own identity. It's a completely design-wise, completely different car. I mean, people will enjoy, because we go for the modern, solid design language now, and this car is in between the step. So it's a different identity, and yeah, it costs some money, but it's worth to spend this money in order to make the customers happy.
Okay, you know, in Kushaq you have a two-engine strategy of 1 liter turbo and the 1.5 turbo. I'm guessing the 1.5 turbo is not going to be in the compact SUV.
You are exactly right.
Will you go ahead with the 1 liter turbo?
Definitely. We keep 1.0, which is nearly 90% localized here in India, assembled locally, and this engine is as well something extraordinary for the segment. So it's a powerful, it's performance, it's efficient and reliable engine. And I think bringing the engine from the higher class car into this segment will make customer happy as well.
Okay, you know, you have said that you'll be bringing ENIAC this year into Indian market, but there is a small compact BEV also, which is there, which was unveiled in the product presentation when the BEV plan was announced. Do you think that's a product that can come to India? Or do you think that has a case in India, because Indian customers also want more BEVs and more localized BEVs?
So you want to know more than was part of the press conference, because it was more about compact SUV, but I have to answer some part of it. So embracing BEV in India, there are a lot of possibilities how we can do it. one of the most preferred ones for us is out of the 6 BEV cars which we have in Europe, which is going, Europe, everybody knows, is going 35-100% electric now. So then the role of India within the global ecosystem of manufacturing and exporting of India will grow dramatically at the time. Yeah? So we are preparing for this. But for EVs, what does it mean for the local customers? We think we should bring like 4 cars. The biggest EV, the 7-seater, will be probably only CBU. Then we will have 2 parts and components cars, and then we will have 1 deeply localized BEV, which you were talking about. So I'm looking forward. I think it will be a nice journey.
And that is all that we have in edition of Large Trades. But don't go anywhere. We slip into a short break. And on the other side, we get you India Markets Close. Stay tuned in.
Co-presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
The farmers' protests have been making headlines. Indian farmers have demands such as legal guarantee on MSP, pension and debt waiver, no hike in electricity tariff, reinstatement of Land Acquisition Act 2013 and more. But while the protest becomes important from the point of view of elections and politics, it's not just India that has its farmers agitated. The streets of Spain, Belgium, Hungary and Poland have been roaring with protests by farmers too. Around 1,400 tractors took part in a protest in Poland and roads were blocked across the country. What do they have a problem with? Rising production costs, falling sale price, stringent regulations. They say that the European Union is not doing enough to stop cheap imports from Ukraine, which is affecting the demand for local produce. They are also not happy with the European Union's Green Deal that's designed to zero out pollution by 2050 because it limits the use of pesticides, which in turn affects yield. In Greece, farmers have demanded lower electricity prices, tax-free diesel and subsidized animal feed. In France, farmers have been fighting for improved pay and protection from foreign competition. The French government offered 400 million euros, that's $436 million, in various measures in reciprocation to their problems over low earnings, heavy regulation, and unfair competition from abroad. In Germany, farmers are against the government's decision to phase out tax concessions on agricultural diesel. Their argument is that this will lead them to bankruptcy. In Romania, the protests stem from anger about low prices for produce, rising costs, imports of cheap foodstuffs, and constraints imposed by the European Union's drive to fight climate change. In the United Kingdom, farmers are struggling to keep up with weather changes and war-related supply chain disruptions. The whole of Europe seems to have the agricultural sector in pain as climate change becomes a central focus and production prices increase. And no, it doesn't end there. As per Down to Earth, since 2023, farmers have protested in 67% of countries in South America region for a variety of reasons, such as wanting better export exchange rates and reduced taxes amid an extended economic downturn and Argentina's devastating drought, which have severely damaged crops and agricultural output. And look at this data. Farmers' protests have happened in 12 countries in Africa, 11 countries in Asia, 24 countries in Europe, 8 countries in North and Central America, and 2 countries in Oceania in just a year's time. So let's boil down all this worry to 5 main reasons, India included. Pricing of produce, delayed compensation or subsidy, unfair effects of climate change, policies and regulations, import and export duties, and supply chain discrepancies. What does this say about the world of agriculture? Does it just question politics and governance, or does it hint at a bigger problem, a potential global food crisis?
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others,
Thanks for tuning in to India Market Close, and let's bring up the markets for you and show you what's happened today. Well, optically, it would seem that pretty much nothing has happened because we started off at these levels and we are stuck at these levels. Frankly, the intraday chart of the Nifty, and we'll get the chart-based depiction on the screen on the left-hand side as well. But if you just look at what's happened here, like there, it's just been very, very flattish for the index, so no big changes really for the benchmark index. The mid-cap and the small-cap indices will also come up on your screen and just show you what's happening out there. So the mid-cap index 0.26 or 0.27%. The small-cap index, well, which started off flattish, is down about 0.5%. But if you can pull up the market breadth before we get to the heat map, while the index or the small-cap index is down about 0.47% alone, the difference between the advance and the declines from the start of the trading day has been large, and it's widened as the day has gone by. So in some sense, yeah, a bit of a tepid day at the broader end of the spectrum for sure. Now get the heat map up, because while the index has stayed flat, the difference between the gainers and the losers has been pretty strong. So look at that strong move in NTPC, up 4%, Power Grid is up 3%, and the PSU pack, so energy and power on the PSU side, have done extremely well in the session today. Half of the gainers are essentially stocks which are dominated by what's happening to PSUs and energy per se. HDFC Life in between, it's about 3.5%, and sporadically HDFC Life has done well, and today Reliance Industries is giving support to the index, up about 1.3%, so that's actually a good move too. What's not done well? iShares post the numbers, the metal names post the downgrade that has come in from CLSA, so that's the second one. And some of the auto stocks just seeing a bit of a pullback in trade today. Let's see if this lasts. But the broader end of the spectrum is where the larger movement, as always, has happened. Though I must say today, the index too, like I said, the difference between the gainers and the losers is pretty pronounced. But Tamanna, what are you spotting?
I mean, I don't know if I can see anything apart from BHEL today. What a story, and truly the story of the day. So we started off the day talking about NTPC, and Neeraj showed you on the heat map how well NTPC has done. So BHEL is in a sense the other side of that story. Look at that, near the day's highs, almost that stock has gained 15% in a day, over a 250% rise in the last 1 year. So what exactly has happened with BHEL? So NTPC has bagged a project in Singrauli, and that's why that stock has been up. BHEL is the only eligible company to actually build that project. So BHEL also benefits. Their order book is anyway looking very, very robust, and that is the stock of the day, one way or the other. Apart from that, I would say, not too much action. Yes, the broader end of the spectrum is doing mildly better than your headliners. But it's not a day of too many fancy moves, I would say. Your energy, PSU space, like Neeraj said, are the ones that are seeing the most action. A little bit in real estate, not massively though. And Oil India, SAIL, GAIL, all of them are doing fairly well. In terms of movers and shakers, I would say it's a bit of a muted day in that sense, where not too many bets are being placed at this time. In fact, let's go across to Hemen Kapadia and G. Chokalingam to get a sense of how they are seeing the markets at this, the last leg of the trading day, so to speak. The fact is that the overall cues are positive. There's no doubt about that. But is there more steam left to really see the next leg? Let me start with Hemen and his view on the charts for the Nifty and the Bank Nifty.
A very good afternoon to you, actually, Tamanna. Thank you for having me on the show. We spent 12 trading sessions over here, Tamanna, between 21,834 and 22,300. Now, this is the third day in a row that we look like closing about 22,300. Excuse me. So frankly speaking, we're trading in the leash, cusp of breaking out. Technically, we've broken out but somehow the follow-up buying hasn't come. That's why we've sort of stagnated a bit over here. Nothing changes. As long as we remain about 22,300, 22,500, okay, that's not very far away, but 22,500 and 22,800 are definitely on the horizon. So once again, I go back to a favorite topic. The volatility index is just below 15 now. We haven't closed below 15 for some time. We flirted with that level. A close below 15 today would be a fillip to the bulls. And in a couple of days, if we go down to 13 and or so, I think the level that I spoke earlier look like happening. The bank Nifty, Tamanna, is strong. We're on the verge of breaking out about 47,400, looking at a probable 1,000-point upside. So everything is hunky-dory. No explanation as to why we've done nothing over the past, I'd say, how many hours? 1, 2, 3, 4, 5, 6. This is the 8th hour where we've done nothing. So it's I think, a matter of a few days here and there. If we don't break 22,300, we are going to see higher levels realistically. Tamanna.
Okay. I love the way you count that, Hemen. Pretty interesting. But even if we haven't done for the 8th hour anything, I think the momentum was very strong the whole of Friday's session as well. So in light of that, are your calls on the long side, Hemen? And if so, what are these?
I think so, Neeraj, they're all on the long side because, frankly speaking, things are quite okay. Mid-cap, small-cap seem to be taking a breather, but I have a buy call firstly on Bata. Bata has fallen off a cliff, 1720 to 1380. Firstly, oversold. Secondly, positive divergence. 3 mechanical indicators on the daily chart have given a crossover buy. So we are playing for a bounce, a recovery. One can buy Bata at 1425, stop loss of 1405, target 1465. Second one is Balkrishna Industries. Same logic applies. 2800, 2200, fallen off a cliff. Oversold, positive divergences, crossover buy. So one can buy Balkrishna Industries at 2240, stop loss 2200, target 2320. Both are contra buy calls for a bounce. Neeraj.
Okay. Well, contra buy calls as well. And you know, just before we get in, Anushi, for the stock of the day, get in Mr. G. Chokalingam for just a brief commentary as well. Mr. Chokalingam, thanks for joining in. It seems that PSU, large cap PSUs, are back in vogue today at least. I would love to understand from you. Let's start with energy. Today, with everything related to energy, ONGC, BPCL, upstream, downstream, are all very active. What are your thoughts on this?
Yeah, I mean, I've been saying that Indian market is set to hit the $5 trillion market cap before election itself. Now we are short of only 5%. The $5 trillion translate into 415 lakh crore. As we are speaking, now it's around 394 lakh crore, just 5% short. I'm pretty confident that because of anticipated political stability and the recent GDP number, and also rupee outperforming the peers in the global market, all this would augur well for the bull run continuing till at least we reach a $5 trillion market cap overall. So therefore, I would suggest that one can continue to hold on to all these large cap stocks which are gaining the momentum at present.
Well, large caps are certainly buzzing. BHEL is absolutely buzzing in trade today. Let's bring in Anushi with more details of why this would be the case. Anushi, good afternoon.
Afternoon, Neeraj. As you rightly mentioned, BHEL is shining all throughout the day now, about 16% of an intraday high over here. As you mentioned, with the volumes 4 times the volumes with 30-day average. Now, a lot of large trades have taken place over here, about 40.7 lakh shares, rather 0.1% of equity changed hands today at a price of about 258 to 259 now. So one potential reason that stands out is that it being a primary beneficiary for the NTPC thermal project which has just been declared, that is the 17,200 crore investment that they're making in the Singrauli thermal project. So definitely keep an eye out for more updates in that. Apart from that, the company had also been in focus after its recent development with Coal India, wherein it has formed a JV to undertake about coal to chemical business over here. So over here also they are going to be setting up a coal to 2,000 tons per day of ammonia nitrate plant, and wherein Coal India is going to ensure about 75% of ammonium nitrate output, whereas the NTPC, whereas BHEL would be responsible for providing the technology for such deal to take place. So for this project also the investment outlay was about 11,700 crore. That is what PTI suggests. Now coming to the stock performance also, about 1 week just the stock has gained about 18%. Most of it is attributed to today's also, while in the 6 and the 1 year period about 92% return here, and 1 year about more than 3x of a return over here. So definitely a watch out for BHEL.
Okay, well, certainly watch out for this one in trade. What a strong performance by this stock, and on very high volumes relative to everything. And by the way, BHEL has given a clarification to the exchanges. I have it with me on the BSE. They have said that they have effectively said that BHEL has not published the referred news article, obviously, sir, as of now. So this company says that the company had submitted a price bid on the 21st of December and is the only bidder for the mentioned NTPC tender, which is an activity in the normal course of business. Submission of the bid does not result into automatic bagging of an order. As of now, BHEL has not received any order from NTPC regarding the subject project. But effectively, while they may not have received the official order, if they are the only bidder, and usually it precludes that this is what has happened in the past, that large NTPC orders around thermal power generation get awarded to BHEL, and BHEL is the only applicant. No doubt that the order will be coming to them.
So technically, they have clarified that we have. They're saying also submission of a bid does not result into automatic bagging of an order.
Yeah.
You could argue that if you're the only person in the race, then you are coming first, second, third, and last. So no problem. But it's not necessary, is what BHEL is clarifying. So that's an important point that BHEL has put out on the exchanges right now. We're seeing slight slide, but anyway, it's already 14% up. The fact is, Chokha, that BHEL and NTPC, this whole lot of infra play, energy play, is going to be the space to watch out. Would you agree? As more and more projects get announced, I mean, even with an NTPC, this is only about the Singrauli plant that they have bagged, but there is, announcements of projects worth 30,000 crore rupees that NTPC is going to lead. As India pushes its energy transformation, and especially its renewables transformation, they're going to bet on state-run companies.
No, I definitely agree. The short term, it looks like this momentum in PSUs will continue. But then, medium to long term, there are a couple of facts. One, the valuations are ahead of the fundamental developments happening now, and market is cyclical, and also even the PSU stocks and sector cycles, they keep playing. I mean, if you look back for last 30, 40 years. However, I'm pretty confident that the current momentum in the short term should continue. And the market should see at least 5% jump from here. And if market has to jump 5%, I'm sure these kind of large PSUs also would participate in that rally in the short term. So quite bullish in the short term, but a little suspicious about continuous rally in the medium to long term in the PSU space.
Yeah, that's fair. The rally has been quite a bit, just 30% on an NTPC, which we're showing you in the last 3 months. And these stocks have really seen that kind of a run up. I just want to pull up BHEL again, because you're seeing that stock price pairing a bit as that news is being digested, and perhaps some kind of an understanding of what it really means. Himen, how are you liking it on the charts? I'm talking about BHEL at this point.
360, 400 time frame, 18 to 24 months, Tamanna. There will be one break or a correction because we've had a phenomenal move from 40 to current levels. So there will be one correction of a greater degree, not yet, But whenever that comes, I believe it would be a 6 to 8 month correction. That's why I'm saying 2 years and more. 360, 400, I think that seems like a very distinct possibility.
Okay. Well, that's the verdict on BHEL and that space. Actually, you know, the other thing is NTPC, right? The BHEL may be or potentially will be the beneficiary, but the capex is being done by NTPC, and for the power major to commit such large capital to work is an interesting one too. And that stock too is about 3.5% up in trade. Various brokerages have given their views as well on what this would mean for NTPC. But you know, we're seeing announcements of thermal power capacity addition now starting to happen very thick and fast. Before we take that break, Mr. Chokalingam, NTPC has always been a steady state performer. Nobody expects multi-bagger returns here, but is it a safe stock to invest into, or are there better names available?
I think the better names are available. Those who are holding on to stocks like NTPC, BHEL, they can continue to hold. That's my firm view.
Holding it, then continue to do so. The BHEL stock, they're trying to stabilize after that news has come in. In case you missed it, just you know, about an exchange filing by BHEL saying that they have not bagged any order from NTPC per se. What the market has done today is that 2 + 2 = 4. Essentially because NTPC has a large project in Singrauli. BHEL was the only bidder, so the market has assumed that BHEL is the one that will back the order. The company, in due diligence, as is fair, has said that bidding for something doesn't mean that we will necessarily bag the order, though they are the only one in queue. I want to talk about more of these companies. MOIL is the other one that we should actually focus on. But after a very short break, we'll be right back to talk about MOIL and a lot more.
Co-presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
Hello and welcome to NDTV Profit. Today we will talk about tattoos and the worth of this market. The history of tattoos in India can be traced back to prehistoric times when tribal people were captivated by drawings on stone or wood walls. Their attempt to replicate these figures through needles gave birth to the practice of inking skin. Over the course of time, tattoos were embraced by tribals as a mark of bravery, war, religious beliefs, customs, marital status, protection from the male gaze, and so on and so forth. Today, in 2024, tattoos have become a means to express thoughts, individuality, personal experiences, and sentimental designs. The industry is estimated to generate over 20,000 crore rupees per year. What is driving this growth? One of the key drivers behind the growth of the tattoo market is the rising demand for customized and unique designs. Improved technological equipment for making advanced, safer, and painless tattoos have boosted the market. The laser technology for removal or modification of tattoos have also added to the surge. Increased exposure and promotion of tattoo designs on social media have led to widespread influence of tattoo culture on the youth. Take a look at these figures now. As per Fortune Business Insights, the global tattoo market is projected to grow from $2.04 billion in 2023 to $3.93 billion by 2030 at a compound annual growth rate of 9.87%. This is a sharp rise from 3.8% year-on-year growth between 2017 and 2022. As per Custom Market Insights, the diamond jewelry market is expected to grow at a compound annual growth rate of 5.5% by 2032, while the luxury jewelry market at a rate of 8.9%, but the tattoo market is estimated to grow at 9.5%. Is the tattoo business lucrative? According to an article by Opportunity India, tattoo kits are now easily available for less than Rs 10,000, while high-end kits range from Rs 20 to 35,000. Now, in a city like Mumbai, the average cost per inch is Rs 2,000 to 2,500. In Delhi and Bangalore, the cost per inch is between Rs 1,000 to 2,000, and in Goa, it is about Rs 500. We spoke to a couple of tattoo artists in Mumbai and found that at an average, the business earns them a profit of rupees 75,000 to 1 lakh per month. In fact, as per an article by India Today, a person can earn a minimum of 20,000 rupees to rupees 2 lakhs per month depending upon one's work and creativity, with an initial investment of 1.5 to 2 lakh rupees. A beginner level tattoo artist can earn a minimum of 20,000 rupees per month, which gradually increases to a couple of lakhs or more depending upon the caliber of the artist and the uniqueness of their artwork. And I'd like to leave you with an interesting data by Advanced Dermatology that revealed that 63% of people with a tattoo smaller than the palm of their hand regret it. The reasons being impulsive decisions, 35%, significant meaning, 29%, or the idea that it would make them look cool, 18%. Thank you for watching and stay tuned to NDTV Profit for more.
Welcome back. You're watching India Market Close, and it's looking like a steady kind of a close. This is not the most exciting day for the markets, but you need some of these days. To be honest, we've been a little spoiled with the kind of rock and roll phases we've seen in the Indian markets. Not that there are not enough opportunities to spot. We're steady over 22,400 on the Nifty, at least today in trade. But tons of volume buzzers that have been making news, and Anushi is joining us with the list.
Right, Tamanna. So I'll start off with MOIL first, which is now, which saw an intraday high of about 11% and its volumes buzzing at about 6 times now. Well, multiple large trades over here, 2 large trades, about 3.3 lakh shares exchanged hands with about an average traded price of about 302.4. Now, this is also the back of the strong business update that the company came out with, wherein it saw its production going up about 15% for the month of February, while its production for up to the months leading to February was about 37% up. Coming to sales was about 18% up for the month of Feb, while its sales for the overall period leading up to Feb 24 was about 32% up. Next on the list, we have TD Power Systems and Triveni Engineering and Industries. Again, the same reason over here, multiple large trades in these counters as well. Similar volumes over here, 6 times its 30-day average, with both the stocks seeing an intraday high of about 8% now. Next on the list is ISGC Heavy Engineering. While there are no fundamental drivers pushing the stock ahead with about a 9% gain now, the volumes were buzzing heavily on this one also, about 5 times its 30-day average. Last on the list is BHEL, which is probably the stock of the day as well, about 60% of an intraday return over here, while its volumes were about 5 times its 30-day average. Now, this was on the back of a news update that the company has won and is the sole potential beneficiary of the NTPC bid of 17,200 Singrauli thermal project. But the company recently came out with a clarification note on the same, stating that it has not received any order from NTPC regarding this subject matter. So again, that remains on the watch out. So these are the 5 stocks that are buzzing in volumes today.
Okay, I'm going to talk about the first one, which is MOIL. And look at the kind of trade we have seen. Back of news as well, that manganese prices and output has jumped. Production has risen 15% year on year. And that's, of course, a fundamental reason. But having said that, I just want to get a view first from G. Chokhalingam of the kind of bump up that we're seeing, because you have production up 15%, at 15.1 lakh tons. In Feb, also you had sales going up 18% year on year, in fact, and 32% up to Feb 2024. So what really is making this stock tick, and do you see this sustaining?
Basically, the momentum is helping. As I said, I see another upside, 5% upside for the whole market, and PSU could lead that back. And therefore, those who are holding oil can continue to hold. But otherwise, I would not suggest fresh buy at this level, because This company has already exhausted free cash. The free cash used to be in a few thousands of crores. Now it is just around 870 crore. It's already used the cash for buyback and good dividend. And also now for FY24, the stock is trading at 24 PE. Basically, manganese ore stocks trade at 8-9 PE. I've been tracking it ever since it has gone for public. Normally it's single digit PE, but it is much ahead of all the fundamentals. But still, I would not panic the people who are holding it. I would suggest use this rally for next 2-3 months till we hit the $5 trillion market, and then definitely slowly book profit, because if you see last 5 years, the turnover has been more or less stagnant. Somehow the manganese ore is not able to join the rally of other metals and ores. So therefore, hold on further 5-10% jump, you can book profits.
Okay, so you're seeing another 5% jump. Hemant, do you like MOIL? It's up 8% today.
If I take a slightly longer term view, Tamanna, yes. Extreme near term, we've gone up from 260 to 315 in a matter of 4 trading sessions. So if I go to buy fresh, I'd wait for a cool off. Why? If there's a gap up, I believe this gap would get covered up in this week itself. So, but if I have a slightly longer term point of view, I think so, because we're going to go back to test its all-time highs of 370, probably not in a jiffy, but a few months down the line. Setup positive. Near term, I believe a small cool off is on the anvil.
I think the point that Mr. Chokalingam is making, so I'm just looking at the numbers. March FY18, MOIL ended with revenues of 1,314 crores. FY23 was 1,339 crores. So virtually not grown their top line for the longest time. Yes, trailing 12 months, I think they've done reasonably well. And therefore, if this momentum continues, could it help them? Let's wait and watch. But I think otherwise the point, it's an interesting point that Mr. Chokalingam seems to be making. Let's wait and watch what happens to MOIL in the times to come. The other set of stocks, of course, and post the break, we'll of course talk about the wind energy companies, because those have really been hit badly in trade today. Everything from an Inox to a Suzlon to a Sangvi Movers has all corrected in session. So that's to be kept in mind. But the other set of stocks, and Hemant, come in on oil upstream, we didn't get a chance to talk, but Oil India, ONGC, both of these stocks have had a really good move today, and they were up sometime last week as well. What do the charts look like here?
I think if we start with oil, Neeraj, all-time highs, clear blue skies, no known resistance levels, everything is hunky-dory. So I like oil slightly more than ONGC, but yeah, the setup seems positive. Yes, I think oil looks relatively better. We're at what, 627? Slightly similar logic with the MOIL stock I spoke with Tamanna, Neeraj. Stock is going to 4 figures. It's going to, this is probably a 2.5-year call. 8 to 10 month correction, which is not there on the anvil at all, is built into it. That's why I'm saying 2.5 to 3 years. But setup is positive, looks good, and going to remain good for the next few years also, Neeraj.
Okay. Well, gentlemen, stay on. More to talk about. We need to get into a quick break. On the other side, top BTST ideas, derivative space, and a deep dive into the wind power ruling that has pulled the wind out of the sails of stocks like Inox Wind and Suzlon. Stay tuned.
Amul has completed 50 years in India. PM Modi will attend the Silver Jubilee celebrations of the Gujarat Cooperative Milk Marketing Federation, the owner of Amul. At one point of time or the other, we've all grown up with Amul butter or milk for sure. The famous Amul girl created in 1967 is family. We all recognize her. But as the brand grows 50 years old today, do you remember the full form of Amul? It is Anand Milk Union Limited. From producing 250 litres of milk per day since the time Amul was formed back in the mid-90s to today, where Amul has over 36 lakh dairy farmers and produces nearly 300 lakh litres of milk per day, the brand has had a long journey. The story goes way back in time. In the 1940s, dairy farmers were worried. The middlemen exploited their ways of profitable income, and a poor milk production system made their living difficult. Tribhuvandas Patel and Verghese Kurian identified these issues and helped in the formation of the first milk union called Kaira District Cooperative Milk Producers Union in 1946. The cooperative model gave farmers direct ownership of the dairy industry. The union helped them process, market and sell milk and milk products without the interruption of intermediaries. And it was in 1955 that this union chose a brand name for itself called Amul, which means priceless in Sanskrit. And then in 1973, Amul Dairy, along with 16 other district cooperatives, formed the Gujarat Cooperative Milk Marketing Federation, which has now completed 50 years in India. Amul also started India's white revolution that made our country the world's biggest maker of milk and milk products. The brand follows an umbrella marketing technique which has helped GCMMF prevent association clashes and keep an open door for the patrons to coordinate in creating items. As per a report by Statista, the annual sales turnover of Amul from 2011 to 2023 has consistently risen, recording about 55,000 crore rupees of turnover in 2022-2023 alone. And did you know, Amul has also held a Guinness World Record for having the longest continuous run of any advertising campaign that has ever taken place anywhere in the universe. Amul Doodh Pita Hai India and Utterly Butterly Delicious will always strike a chord. Let us know which famous advertising phrases of Amul do you remember?
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only.
Range-bound day of trade, not too much activity here. What's not working today? Well, media stocks are down, micro caps really, the broader market's not necessarily doing very, very well. You've seen some pressure, in that sense on IT stocks as well. But what is the action on the F&O end of things? Let me go across to Agam for more. Agam.
Right, well, it's turned out to be a quiet day of trade. There's not much happening, but the positive, of course, is that we continue to hold on to, well, the newly made highs. So Nifty at the moment is still sustaining about 22,400. We haven't seen too much change in open interest. That's because I reckon at least a few traders are perhaps a little bit more hesitant to take in new positions as we move into what can be possibly a volatile, session and a volatile period. The Bank Nifty, it's not very different, the picture. There's very little change in open interest, even as we see the index continue to move higher by around 0.4%. And as far as your option markets go, considering the fact that we have seen the Nifty consolidate around 22,400, 22,500 today, is also the reason why we continue to see a lot more writing in both calls and puts around those levels too. Where does that bring us when it comes to your overall open interest distribution picture? Still looking at a relatively wide range, but on the higher end, max open interest has now shifted from 22,800 to 23,000. That's the range, and it's a 1,000-point range that we are playing as far as the Nifty is concerned, based on how things can pan out through the course of the week. But the fact that your higher end of the range has shifted from 22,800 to 23,000, that of course also means that, well, perhaps traders are a little bit more positive towards the markets, at least in the near term, through today through Thursday. Finally, coming down to stocks, when we have seen BHEL, we've been talking about it quite a bit today, and a big surge coming in there, longs coming in there as well, SAIL also catching up with its relatively larger peers, and of course we also have longs in Sun TV. On the other hand, Info Edge is once again dipped and will become a little bit taken a red color, and of course Dr. Lal Pathlabs among the others, which are also declining by around 2.5%. But on the other hand, among stocks which are seeing unwinding, short covering for NMDC, Coromandel, Voltas and Hindalco, and Siemens on the other hand is looking at just a tad bit of longs and winding. Overall it's a mixed market, but more advances as compared to declines, at least in the futures and options space. And the Nifty continues to consolidate, but the big and the good news is that it's consolidating at a life high.
Yeah, Lal Path Lab down after change in management, which has seen that stock face a bit of heat, about 2.5% down, to be honest. But you know, a few other stocks that are seeing some at least movement today, and I just want to pull up Zaggle. Zaggle's now been an interesting story because a slew of arrangements they've made, orders they've signed, or you know, new clients they've gotten on. Axis is the latest one. That's why you're seeing that stock about 5.5% up. Interesting business, not a very massive scale of a business, but growing quickly. Heyman, I'm wondering if you track this on the charts at all?
I don't track it very closely, but while you were mentioning, I had a look. Once again, a small caveat, paucity of data, relatively new listing, 6 months old. But yes, high tops, high bottoms, above important moving averages, very safely ensconced in an intermediate uptrend, probably a longer term uptrend, but once again, I don't know enough data to justify that. So seems copacetic, everything seems hunky-dory. If there were to be a reversal, we'd need a close below 320, that's far away. Seems fine.
Yeah.
Well, okay, and so that's Zaggle prepaid, and clearly a lot of deals signed last week as well by the company, 4 or 5 on last count. But if Zaggle is doing well, energy stocks are not. Now the ministry has apparently decided to bring back reverse bidding as wind tariffs rose in auctions. Varsha Johnson to tell us why is this piece of news impacting these stocks and what's the way ahead more importantly. Varsha, good afternoon. We've been tracking this story all through the day. So we've spoken about the basics. What's next now?
Good afternoon, Neeraj. So wind energy stocks are under pressure since morning. Now this is on the back of news of ministry bringing back reverse bidding as wind tariffs rise in auctions. Now ministry had given up this reverse auction method at the beginning of the financial year, which did bring down tariffs but affected capacity installation, and hence closed bidding system was adopted, post which tariff also rose. Now this is JM Financial note wherein they believe that current changes will have limited impact on the sector, and there's high probability of policy reversal in due course given market size is significantly more than the manufacturing and execution capability of the industry. Now most of the bids in recent months, if you see, are decided through reverse auction. That is 67.6 gigawatt of projects are under the bidding phase where tenders have been issued but auctions are not yet completed. Now wind only tender is just 264 megawatt, that is 2% of overall total bids which have finalized during November 23 to Jan 24. And lastly, JM Financial believes that the recent bids are undersubscribed, leaving opportunity for all qualified industry players.
Okay, thanks a lot for that, Varsha. So that's the sum and substance, and there's been a correction that has been fairly severe in these stocks, though the stocks have rallied quite a bit too. The question, Mr. Chokalingam, is whether this is very disruptive with the business model, or the tall targets that the country has with regards to renewables would mean that the growth opportunity remains large.
No, opportunity in the sector like renewable energy or wind energy need not necessarily translate into a big opportunity for companies like these three companies. If you look at the balance sheet of Suzlon and INOX, I mean, the way they are rallied, it's really surprising. Now look at INOX Wind. Annualized turnover this year is around 1,700 crore. Market cap is 18,000 crore, and the debt is close to 2,500 crore. So the whole turnover is around 1,700 crore, whereas the market cap plus debt is about 20,000 crore. And it's yet to turn around the business. Even in latest quarter, it has made marginal losses. For entire 9 months, it has made losses. Now, if I take the top line of 1,700 crore, even if I assume super optimistic assumption, if I make, and assume that it makes a 20% net margin, the profit will be 340 crore, which if I compare with the enterprise value, I think even then it is extraordinarily overvalued. So I think, even if somebody misses the opportunity today, in the next 1 week, if anybody gets opportunity to offload them, one should offload them and conserve the cash.
Okay. The reason why, Mr. Chokalingam, some people might have been bullish on these stocks is the execution of the next few years, wherein INOX is on record guiding to doing maybe 600 megawatts in FY25 or more, and even more in FY27 odd. And that is a substantial jump from the 250 megawatts that they've done in the first 9 months. So could that be reason why these businesses might look interesting on an EV/EBITDA basis?
I'm sorry, I am not, convinced, because if you take these numbers also, doubling up, tripling up the bottom line, even then the valuation would be extremely stretched. Even then the PE could be in the range of 40, 50. So I think, it's a thematic bull run, in this country has created enormous wealth. It also led to destruction of wealth. So one has to be very cautious. I may be wrong. I am being a little conservative. I give a lot of importance to the balance sheet strength and weakness of the company. So that is not giving me confidence in this particular case.
That's exactly the way to do it. Please, don't apologize for it at all. But that's exactly how you must do it, looking at the balance sheet and what the basics are. But having said that, I wanted to get your take, Choka, on what we're seeing in private banks. Now, again, everything is contextual and relative. So on a day like this, an Axis Bank up 1%, an ICICI Bank up nearly 1%. Not a bad call at all, not a bad scene at all. Do you think that we might see a turnaround in this space that the market hasn't factored in yet in terms of valuations?
Possibly, yes. They have been underperforming in the recent months. I agree with you because, there are very few sectors, if you look at a Nifty basket or Sensex basket, there are very few sectors which are giving confidence in terms of double-digit growth, whether it is a revenue or bottom line. And the banking sector is one of them. Even now, the credit is growing in double-digit, anywhere from 14 to 16%. And there is a structural story of net NPA being the lowest in the last 10 years. So the credit growth is close to 10-year record high, and quality of asset is also close to 10-year record high. And also, I am very bullish on the large cap segment. And I'm very nervous on the small cap. So considering all these three set of factors, I firmly believe that this is a time to invest in these large private banks and increase the exposure to the banking sector within the Nifty basket.
Okay. Well, speaking of private banks, I had a chance to speak with Gautam Trivedi of Nepean Capital earlier in the day, who spoke at length about the conundrum in the large private banking space, particularly the likes of HDFC Bank. Listen in.
No, I think it's a very valid question with respect to the fact that, for the longest time, you thought private sector banks, were the gold standard, and the PSUs, were really not well run, no skin in the game for the CMDs who were running it, and, lackluster investor appeal. That's, of course, gone 180 degrees as balance sheets got cleaned up. And the fact that, these banks, the PSU banks, became more prudent or seem to have become more prudent in their lending practices. So I think as a result of that, you've seen a gigantic investor sentiment surge towards PSUs and away from privates, HDFC included. So I think that correction in terms of time correction is still happening with the private sector players, including HDFC Bank. I think specific to HDFC Bank, as you asked, there is, I think, a bit of a wait and watch as the merger of the two entities plays out and the impact of that on the balance sheet, as we've seen over the last few quarters, starts to play out. I think people want to see evidence that the issues of the past are behind them. And from here on, HDFC Bank is back on the growth trajectory. Otherwise, you would not get this bank at half the valuation that is historically traded over the last 20 years.
You mentioned this very important point about private banks versus PSU banks as well. PSU banks have had a rally, but we were doing some numbers. Despite the upticks that we've seen, some of them still traded at par on book. And their internals have significantly improved as well. So while there might be better value in private sector banks optically, are PSU banks an avoid, or selectively some of the PSU banks also offer value?
You know, it's a broad statement, and I think you've got, at one breath, you've got a State Bank of India, which is, you know, as always traded at a different valuation than the rest of the PSU banks, and has a different level of respect, should I say, from the PSU banks. So, but at the same time, if you look at the number of stocks that are now in the top 100, you've seen a lot of other names come in there. You know, Canara Bank, Punjab National Bank. So, you know, in the top, if I look at the top 100 stocks in India, and that's the large cap definition by SEBI, you have a total of 21 PSUs, and not PSU banks, but 21 PSUs, you know, which is remarkable. You always had the OMCs in there, you had ONGC in there, but now you're looking at so many more PSUs come in. So I think the overall sentiment clearly has improved for PSUs from an investor's perspective. And yes, you may still have some PSU banks that may be trading at, you know, sub 0.8 times or definitely sub 1 times book. But again, it's very stock specific versus having a broad generalization.
All right, so good views there on banks, PSU as well as private banks, but the focus for now on private banks, because like Choka said, they've been underperformance relatively. Heyman, just your take on an Axis today, an ICICI, an HDFC. Are you seeing you know, potential of a breakout? Interesting Bernstein report out today as well as far as an HDFC bank is concerned. Are you liking anything on the charts?
HDFC has not much to lose, Tamanna. I know it's been a drag. It hasn't done much. It's sort of defies logic, but it's not going to go down. It's not going to go down further, at least in near term. 1380 is rock solid support. I don't see that breaking. If that breaks, all hell will break loose. But 99%, that's not happening. If that's not happening, sooner or later, the bounce is coming. I know it's looked promising for almost 1.5 weeks now. It hasn't delivered, but back to square one, I still feel hardly anything to lose and lot to gain. So HDFC Bank looks safe from that point of view. If I were to look for something slightly more different, I believe IndusInd Bank has up for 4 days, so it's going to cool off. But Axis Bank is shaping up well. But at 1532, if I get Axis IndusInd Bank at sub 1520, I'd buy that, Tamanna, from a trading point of view.
All right, so Axis is something that Heyman likes. Last bit of, you know, few hours of trade, and I want to come back to you, Choka, on the big theme of PSUs. We're already seeing that begin. Do you see a build-up over there? And which segment would you look at next? PSU banks have already seen a run-up. You've seen the energy stocks, the power pack today within the PSU basket show some signs of life. Would you re-look perhaps at a railways, a defense kind of space?
Certainly, you know, I would not relook at PSU for fresh buying. As I said, I am of a pretty confident view that the market would jump another 5% and PSU pack would lead that rally. And therefore, it's a hold rather than buy recommendation from me on entire PSU pack.
Okay, well, let's see. PSUs per se expensive, PSU banks maybe not. Let's see how this shapes up. I was looking at stocks which have had a good price volume action in the session today. TD Power Systems certainly has had a very strong price and volume activity in trade. 5 million shares traded on that one, 325 and counting, and good volumes as well, as I said, but good price action at 10% higher is certainly packing a punch. It's not that the whole space is buzzing out here, Hemen. Have you had a chance to look at the charts of TD Power?
Neeraj, unfortunately, I don't track TD Power very closely. No, sorry, I had a look. So yeah, it's given a breakout out of a 3-month consolidation phase, Neeraj. The range was between 260 on the downside, 310 on the upside. In listed history, we've never closed above 310. Simply put, it's continuing its uptrend. Upward breakout from a symmetrical triangle on the daily chart, ticks all boxes. Fresh buy, I'm not sure, but a strong hold further upside seems a cinch.
Okay. The other set of stocks which have had good price volume action today, Premier Explosives up about 6% on volumes which are about 5 or 6 times the 1 month average. Premier Explosives, yeah, that's the one. Good price volume action today for that one. And Triveni Engineering as well as KEI have both had a good move today. Triveni Engineering 7% higher, 4 million shares traded. It's very unusual for Triveni to have this move, but it has had this move, as is KEI. Hemen, your closing strategy, because it's 320, but also post that, give me a call on Triveni Engineering. How do the charts look here?
Okay, I'll go out on a limb and say I have a sell call on TCS. We're at STBT, we're at 4077. So I'd wait for a small 3 rupee bounce. So a sell at 4080, stop loss of 4105, target of 4030, risk reward ratio 1:2, 25 rupee stop loss, 50 rupee target. So sell call on TCS. The texture of the market has eroded in the time we've spoken since the last 1 hour, Neeraj. So a buy call on BTSU and Apollo Tyres at 534, stop loss of 530, target of 542, risk reward ratio 1:2. I believe that if we don't break out, chances of that are reducing. We could be seeing a small dip tomorrow, and it's a high risk, but I think even a Nifty can be a STBT. Coming back to Triveni Engineering, Neeraj, it's formed a nice base. Nice base in the sense we've taken 1, 2, 3, 4, 5, 6, 7, almost 12 weeks of a consolidation phase. Mechanical indicators are turning positive. It looks promising in a market which hasn't done much today. Triveni stands out, and I'd say buy the buy call at 5 rupees lower, 20 rupees stop loss, 50 rupee target. Looks good, and we all anyway remain in a longer term positive. I believe we are on the verge of exhausting. It's 1, 2, 3, a 6-month, 5.5 month intermediate correction. Looks good. It's a positional buy.
Interesting that there is a sell call on TCS that Hemen has. Sell tomorrow, buy today, sell tomorrow kind of a call. Just on the IT space, because again, another day of being an underperformer, emphasis, LTI, Mindtree, persistent, Infi, all of them showing weakness. I wouldn't say they're cracking per se, but they're showing weakness. Choka, do you expect this sort of trend to continue? They've not really, sort of pulled their weight per se, the IT pack. Anything over here that you would pick up at this point?
I certainly agree with you that the pain is going to continue for large and mid-sized IT companies, because NASCOM has projected almost stagnating IT services exports. We have a coverage. It's basically for very small retail investors. We have recommended Mindtech. Other than that, I don't have many stocks in the IT space, because I am overall I have a very negative view on the sector.
Negative view on the sector when it comes to the IT space. Apart from the very clear TCS call, Hemen, anything else in that space that you're tracking and that you like?
Frankly speaking, Sun Pharma is going to give a small bounce, but there's a small distribution pattern happening in Sun Pharma, Tamanna. I believe there is pressure coming in over there, and I believe the Nifty is going to come down under its own weight. So tomorrow, I'd be pleasantly surprised if we end positive on the Nifty tomorrow, Tamanna. Few stocks and the entire IT pack is slipping. Distribution, negative divergence, rounding tops. I mean, it's not the end of the world, but it's some near-term weakness. So I believe that some of these are STBTs and IT should be bad for the whole week, I believe.
Okay, IT should be bad for the whole week. You know, another stock that's in focus and has been in focus is Vodafone. Last week was the fundraise news, which has been awaited for a while. But also, are there going to be more investors coming in? So I had the opportunity to speak exclusively with Union Minister Ashwini Vaishnav, and I asked him what he makes of the news that there are investments coming into Vodafone. Listen in to what he said. One of the players, Vodafone, has recently finally gone in for a fundraise. I just wanted to get your outlook on the sector. Do you see now stability coming in? There is, of course, hope for an investor. Anything that you can comment at this point?
So I prefer never to comment on any company which is listed as a matter of policy because of the responsibility, the position of responsibility that I hold at this point of time. But what I can tell you is, after the reforms that were done in telecom sector by our Prime Minister and getting most of the legacy issues behind us now and getting a new Telecom Act in place, at least 8 large investment funds have met me so far, and they want to explore investments in telecom sector in India because the market size is very large, the technological acceptance is very high, our digital India, our India stack basically is so widespread, and that is the gateway to, telecom is the gateway to digital India. So combined all these factors, the investor interest in India is huge. So we will see a lot of investments, we will see a lot of innovations, we'll see new business models coming up, we'll see new technical advances coming up in the coming years.
All right. So, I followed up by asking him whether any of those 8 funds are interested in Vodafone. He couldn't quite answer specifically and didn't, but did say that we'll do all that we have to make the sector attractive to foreign investors. The question, and I'm coming to G. Chokalingam right now, that when you're betting on the telecom space, is Vodafone really a player to look at the space long term, or is this, like people have been thinking for the last several sessions, I would say for the last several months, just, a short-term play?
Neither short-term play nor long-term play. But having said that, if money comes, it is good for the business. It is good for the economy because jobs can be protected. So I wish they get the money and turn around. But the point is that, it's equity base is already, a little more than its revenue base. So if new money comes either in the form of debt or equity, it's not going to reward the shareholders, because if it comes in the form of debt, it's going to add interest cost. If it comes in the form of equity, then the EPS could stay at 1 or 2 paisa for several years. So therefore, I would believe that it is not a good thing for shareholders, but it's good for the business. And also, if you look at the EV to EBITDA ratio, even now with the current equity base and current revenue model, it is extremely costlier than the most profitable or one of the most profitable telecom company, namely Bharti Airtel. So I don't see any fundamental reason either for short term or for long term to buy Vodafone stock.
Yeah, the stock has sort of had a bad week, but over a year has doubled. Today is down 2.5%. Hemen, is this something that you'd consider at all on the charts?
Frankly speaking, the past history isn't very confidence-giving, frankly speaking, Tamanna. It's gone nowhere, and don't think it's going to go anywhere, but I'd like to put a but in place. We are at 14 far away, but if we somehow take out 18.5, slightly unlikely rally to 25 is on the horizon, but only and only about 18.5. So till then, let's hope 13.5 holds. So not very exciting, honestly.
Mr. Chokalingam as well as Hemen, thank you so much for joining in today and giving us your thoughts. Really appreciate your time. But let's start wrapping up the markets for you. And we closed pretty much the way we started, which is very, very flat for the benchmark indices at least. The banks, which were okay, about 1/3% for the banks yet again. So not a bad play for banks and Reliance, and they've and upstream oil, by the way. They've thwarted the weakness in autos and metals in the session admirably today. The mid cap and the small cap indices, and remember the small cap index was in the red when we started the show, about 0.5%. It's actually worsened, 15,068. And frankly, if you just look at what's happened to the market breadth today, that will come up on your screen next. You will see what I'm talking about. It's been this very dismal breadth which is only widened as the day has gone by. So the number of losers, it's close to 1:3 or 1:3.5 in favor of the declines. Not looked a very pretty picture today, the market breadth for sure. Let's get the heat map up and start with the losers first. So Eicher Motors is amongst the stocks that is down in the session about 3%. There's weakness in JSW Steel about 2.5%, weakness in Mahindra and Mahindra. So between Eicher, Mahindra and Mahindra and some others, the auto pack has certainly pulled back in trade. What's done well? One is of course Reliance Industries up just about 1%, nothing, no great shakes, but it's up about 1%. And then the winners include the PSU pack, BP, ONGC, Power Grid, NTPC. Now we've discovered this and we know this. Let's pull up the NSE 500 winners and losers and just see the top draw. BHEL would be right up there, 12.5% higher. There is strength in solar industries. I believe it won some order, unless I'm very wrong. Data Patterns has been the cynosure of all eyes this month. The 1 month returns for Data Patterns is 57%. It's extremely strong show. Oil India, in addition to ONGC, has done well. Tata Investment continues to rise and shine. So that one has had a good run. So these are a few names that have done well. What hasn't done well? Yet again, TV18, Network 18, 5% lower. There is weakness today in Gujarat Fluoro, about 4.5%, 5% lower. Fortis is another 4% lower. Hospital stocks are being taken out quite convincingly. Rainbow Children and Fortis kind of exemplify that. Maybe one of these days we'll try and do a piece on what damage could something like this or a ruling like this cause the fortunes of the healthcare and the hospital companies. Because clearly, if you look at the 7-day chart or a 14-day chart of a Rainbow or a Fortis, you will see what I'm talking about. If you can pull up this 1 month chart for a Fortis Healthcare or a Rainbow Hospitals, 1 month, look at this crash that has come in from the peak for a Rainbow all the way down here. Even for a Fortis, I think it's similar, that it's currently trading here. It's used to trade at about maybe 425, 430. So clearly they are being taken to the cleaners, and maybe for the right reasons. The markets, of course, have shut, and we'll watch out for some of the volume buzzers and how they react in tomorrow's session. But all in all, not a very bad day, but for maybe, just maybe, some improvement in the small caps would have been nice. Thanks so much for tuning in to India Market Close.
Co-presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
Hello. Good morning, ma'am. I'm speaking from XYZ company. Are you looking for a job or a job change?
Have you been receiving unwanted calls from spam numbers? Are you tired of being offered new jobs, insurance schemes, or free health checkups? Well, today we will look at an interesting survey report by Local Circles on pesky calls that received 60,000 responses. Most unwanted calls are related to financial services, 54%, and real estate, 22%. In fact, the report has taken names. 40% mobile subscribers have identified Bajaj Finance as a top offender, HDFC Group as the second biggest pesky caller. The report reveals that 60% of people received 3 or more spam calls on an average day every day, and 92% of people registered on the Do Not Disturb list still get pesky calls. So is being listed on DND working? Clearly not. But the report also recorded a minute relief, as per which 6% people don't get any such phone calls. This relief comes after the TRAI directive to banks, insurance companies, and other commercial entities. TRAI is the Telecom Regulatory Authority of India. In fact,
one of the big issues and challenges facing the participation of women in the workforce is the gender gap in the labor force. Now, this is an issue all over the world, became worse during the pandemic because when jobs were lost, women suffered more than their male counterparts. But there seems to be some good news. Now, according to a report from Moody's, which says, titled Narrowing the Gender Participation Gap, released recently, this space, this difference between the number of men and women in the workforce is reducing. And definitely India has contributed positively. Now, that's an interesting angle because the gap between the number of men and women in India and the participation of women in the Indian labor force has been an endemic issue. Are we seeing this improving, and is the pace good enough? To speak more on this, I'm joined now by Dawn Holland. She's Director of Economic Research at Moody's. Dawn, thank you so much for speaking with us here at NDTV Profit. Absolute pleasure to chat with you. Let's begin by just breaking down this report and what, in your view, is the big takeaway. And this is the way I saw it, at least, that the gap is narrowing. That's good news. From an Indian perspective, still a long way to go, but there has been some improvement. Would that be the right way to see it?
I think you sort of covered it in a nutshell. So the key finding of our report was that since the pandemic, gender gaps in labor force participation had been narrowing across the world. And what was particularly surprising to discover is how really global in nature this phenomenon is. It's, we're seeing it in India, but also, in the US, in Japan, in Turkey, Argentina, Indonesia, Europe. It's truly a global phenomenon with more and more women joining or rejoining the workforce and doing so at a faster pace than men, which is helping to narrow gender gaps in labor force participation. So our sort of key outcome from our modeling work on this was to estimate that the narrowing of gender gaps in labor force participation around the world since 2019 has added about $1.5 trillion to the world economy. And we see a big chunk of that actually coming out of India.
All right, so that's the interesting thing. When you say a big chunk coming out of India, can we quantify it, and what has changed? Now, your report also alludes to this, and we have seen this anecdotally. Work from home, especially in sectors where it could be done, has changed the scene for women who want to come in and participate in the workforce, isn't it? Has that been the big difference?
I think you hit the nail on the head. Absolutely. That's one of the very key factors that we see as driving this this change, this resurgence in female labor force participation rates. There's been a step change in attitudes towards working from home across the world. You see that it's happening in India, but also happening all over the world. And that has opened doors and created opportunities for many women in particular who may have been juggling family, childcare, elderly care responsibilities, and finding it difficult to engage with the labor market if they were required to do a full day of work in an office setting outside of the home. So this has been a really key force that has helped to bring loads of women into the workforce. And we've also seen it's not just allowing people to engage more, but it's also allowed more women to move from sort of part-time positions to full-time positions, particularly in some of the higher wage sectors, which means we're creating not just more jobs, but better quality jobs for women as well.
So, just coming back to the female labor force participation rate in India, government data from October 2023 pegs it at 37%, which is higher, significantly higher than earlier, 4% higher. The aim, of course, is to reach to 50%. Do you see these trends being underlined from your research and data? Where do you think the change is, and how far do we need to go?
So I think so that's aligned very, very closely with the sort of data that we've been working with from international organizations. Yes, so we have seen a significant increase in female labor force participation rates over the last few years in India. We do know, of course, that the gender gaps in India are still very wide, among the highest in the world. So let's not be under any illusion that we've solved the problem yet. But there has been some significant progress on that front. I think I would point perhaps to one important factor is that we've also, over the last decade or couple of decades, actually, seen significant narrowing of gender gaps in higher education in India. So that's been creating this sort of young cohort of highly educated women who are now just beginning to engage with the workforce, which I think sort of paves the way for us to continue to see more rapid progress in narrowing those gaps over the coming years.
So just two questions in the end, Dawn. One is, this is a great trajectory. Trend-wise, it's great. Can it sustain? Because base rates also come into play. This is also post-pandemic, et cetera, et cetera. So have things changed definitively that will ensure that this sustains? And will we now hopefully see also a narrowing in the wage gap now that at least participation has narrowed?
So the wage gap is a second. Sorry. So all right. First question: is this a permanent shift, or we may well see some backsliding? There has been a number of companies. The gap between the number of days that people want to work remotely and the number of days that employers want to offer to work remotely is still about one full day around the world. This is based on global studies, which means that there may be some backtracking in allowing employers allowing hybrid working, which could set things back a bit, which would be really disappointing. It would be great to see some legislation coming in that helped to support continued access for hybrid working where in industries where that it makes sense. In terms of the gender gaps in pay, this is, again, a global story. It is not exclusive to India. We see women and men working in exactly the same positions. Women tend to get paid 15 to 30% less than men for doing exactly the same jobs. This is a long-standing problem that is very difficult to shift. I think the key is transparency in pay scales. We see that companies that have clear salary bands that are attached to specific job roles, clear criteria for determining how each employee falls within those bands, have much narrower gaps in pay. So trying to encourage greater transparency, I think, is key in this area.
All right, so more work to do there. The good news is more women are now coming back into the workforce. So that difference between the number of men and women is reducing. The next step, of course, hopefully, is that they will get paid more equitably. Thank you so much, Dawn, for speaking with us today.
Thank you.
Electoral bonds have been deemed unconstitutional by the 5-judge Supreme Court bench headed by Chief Justice D.Y. Chandrachud. They were first introduced in 2018. An electoral bond is a means to fund a political party in India while maintaining anonymity. These bonds are available in multiple denominations ranging from 1,000 rupees to 1 crore in specified branches of the State Bank of India. This was introduced in the system to maintain transparency in political funding via a banking network and reduce black money. But on the flip side of this intention, questions have been raised on the basis of an important fundamental right of democracy. That's right to information. Is it constitutionally right to keep the source of political funding discreet? Why shouldn't the public know who is funding how much money to different political parties? As per the findings of Political Party Watch, a program under Association for Democratic Reforms, 28,030 electoral bonds worth rupees 16,618 crore were sold between March 2018 and January 2024. The Supreme Court's unanimous decision follows a petition filed in September 2017 challenging the Finance Act 2017, which introduced the electoral bond scheme for the purpose of electoral funding. The Act has also removed the previous limit of 7.5% of the company's average 3-year net profit for political donations. The Supreme Court has asked the following corrective actions to be taken immediately. State Bank of India will need to stop issuing electoral bonds immediately. SBI will have to submit the details of the purchase of electoral bonds and their encashment by political parties since the interim order of the court, which is April 12, 2019, to the Election Commission in 3 weeks by March 6th. The Election Commission will...
Well, power demand in the months of Jan and February is up 5% YOY despite a higher base. Coal stocks are at record high levels to prepare for what could be a grueling summer as well. To talk about all of these preparedness and the demand ahead, Coal Secretary Mr. Amrit Lal Meena is with us. And of course, we weave in the resurgent importance of the coal sector. Meena ji, thank you so much for talking to us. I would love to understand from you, sir. It is now well understood that India's growth cannot be fueled by renewables alone, and conventional power becomes a very important source if we want to track the kind of GDP growth targets that have been laid out and that are desirable. So I would love to understand from you, how do you think about the preparedness of the country on the thermal power side and the availability of resources, namely coal, to be able to meet the demand that might come up?
Ministry of Power has long-term plans. So Ministry of Coal is fully aligned with the requirement of the coal for the thermal power. As per the estimation, we are ready with the roadmap to supply coal for the new capacity that is coming up for new thermal power plant. This year, our production is about 11% higher over last year, the enhanced base of last year. It is likely to touch about 1 billion ton. We have plans for the year 2030. By that time, our production will go up to about 1.4 to 1.5 billion ton. So whatever is requirement of the power sector for meeting the thermal plants need, we will be able to meet that. That is our plan. This year, at the end of thermal power plant, our stock is more than 41 million ton, and the total stock is more than 127 million ton at the moment, and it is on rising trend. We hope to have higher stock by the end of March, so that the requirement of the summer and also the next monsoon is taken care of. I am very happy to share with you that now, because of the close coordination and augmentation of the railway rakes, about 6% extra rakes have been made available during this year. So the supplies to power plants is at higher scale. And we are hopeful that in times to come, we will be able to supply adequate coal to meet the demand of the thermal power plants.
For the last few years, admittedly, the addition of thermal power capacity was not at the highest. I mean, people were tilted towards renewables. I think that is now starting to change a little bit. Do you reckon that all that you outlined to us right now as well will be enough, both in terms of availability of coal and the supply chain issues not being there, to meet the enhanced demand, let's say not in 2024, but maybe starting mid-2025, sir?
Yeah, see, Ministry of Power has plans to create additional 80 gigawatt of the thermal power capacity by 2030.
Right.
And all power plants which are proposed to come up, for them the long-term coal linkage Ministry of Coal is agreeing to as and when the proposals are received. And we are confident that adequate coal will be ensured for all those new capacities which are likely to come up. I will also like to apprise you that now the railway infrastructure augmentation is taking place. Many of the new lines, third line, fourth line are coming up. The Eastern Dedicated Freight Corridor is already operational. The average speed, which used to be 15 km per hour from Dadri to Sonnagar section, is now about 45 km per hour. So all this has added, and we have long-term plan for infrastructure augmentation by having new railway lines from the coal-producing areas. And also the Ministry of Coal is having the first mile connectivity projects which help in faster loading and eco-friendly transportation from mine to the loading point. So on all front work is happening, and I am quite sure that neither logistic constraint would be there, nor the production constraint would be there. There would be adequate coal for the requirement of the thermal power.
Got it. Just one follow-up question on that availability. And I believe coal stocks at power plants are currently at circa 15 days, maybe the highest that we've seen in the nearly 3.5 years. So I believe we are well prepared for the current summer. I was just trying to wonder what could happen once in 2025 and maybe some of the power plants come to the fore. But the added part of my question, sir, is how would the mining process between what Coal India does and the preparedness for Coal India and the permissions thereof versus the non-Coal India private sector coal mining shape up over the course of the next, let's say, 3 to 5 years?
See, first, I would like to tell you that the stock as of today is sufficient for 19 days, not 15 days.
Okay.
It is 19 days requirement worth of coal is available at the thermal power plant. As regards the clearance regime is concerned, see now with the operationalization of captive and commercial mines, more than 50 are already under production. And another more than 50 are under different stages of seeking the clearances. So now the regime of clearances is very well established, both at the level of the state governments and also at the level of central ministries. So in most of the cases, the auction holders and the PSUs are getting clearances broadly within the stipulated time frame. And we have very strong coordination and monitoring mechanism by which every monthly basis, every state issues are discussed and timelines are fixed for resolution. And delay in clearances are not really now an issue in operationalization of coal mines. The system and processes are very well laid down, and whomsoever is taking coal mines in auction, they are able to have the coal mines operationalized generally within the stipulated timeline.
Okay, so in some sense, sir, you're saying that while demand will not be an issue for sure, God willing, the economy grows at a faster clip and demand will not be an issue, but supply side issues, for example, will not hamper, let's say, Coal India's ambitious targets, right? There are beliefs of 85 million, 850 million in FY25, 1.25 billion by in the next 3-4 years, or 4 years, if you will, for Coal India. Supply side issues and supply side bottleneck constraints will not be an issue when it comes to meeting these targets.
Certainly not, because Coal India has long-term plans. They have planned to augment the capacity of existing mines. They have plans to open up new mines, and there is complete detailed micro planning This year, the target of Coal India is 780 million ton. Last year, Coal India achieved 703 million ton. So they will be broadly touching 780 million ton this year. Next year's target would be around 840 million ton. So Coal India will achieve. And then we have a long-term plan for next 3 years and the 5 years. So there is complete detailed micro planning for each and every coal field. And I'm sure there will not be any uncertainty as far as the contribution from CIL is concerned.
Okay, I believe 1.25 billion tons in 3 years. Is that a correct assessment?
See, there are year-wise projections for 24, 25, 25, 26, and then up to 29, 30. Year-wise assessment is there. There are figures. It can be shared separately, but whatever is the requirement of the economy, we have plans of the production. See, whatever coal is reserves is available in country, we are aiming that the country need not import that form of coal. But whatever coal is not available, like the coking coal and the high-grade thermal coal, that will continue, of course, to be imported. This year, you might have seen that the share of imported coal in the total consumption basket has gone down. We come to the blending coal for the thermal power plant, there is dip of about 36% in first 10 months of this year. And this trend is continuing and will continue.
You have mentioned yourself that the coal and lignite gasification projects are important. I believe you've done some roadshows. What has been the response to that? And what would the impact of something like this be if it is as successful as you hope it to be?
After meeting the demand of the coal for the power and other sectors of the economy, now since we are going to have surplus availability of coal in years to come, therefore it's time that we promote coal gasification so that some of the chemicals which are otherwise being imported are manufactured based on this coal gasification. So keeping this in view, government has approved a policy for promotion of coal and lignite gasification. And after that, we have undertaken 3 rounds of the investors meet. The response is quite encouraging. We are seeing a lot of interest from the industry. They want to set up these gasification plants. There are certain PSU-led projects also, and we'll come out with the draft RFP very soon, and thereafter with the final RFP.
Mr. Meena, I just have one final question on this whole import of coal. And is there an internal target about what do you want to reduce the coal imports to within a particular year?
The grade of coal which is available in our country, we intend that by March 26, we should be able to produce adequately for our domestic requirement. In 2019, the share of imported coal in the total consumption basket was about 26%. Last year, 22-23, it went down to about 21%. This year, in the first 10 months, this is further dip, and 19% is the share of the imported coal. In months to come, since our production is ramping up, availability of coal is going up in the market, which is evident from the premium, auction premium on the coal auction. So in months to come, we will see further dip in the import. And by March 26, we should be able to have adequate coal to meet our requirement, domestic requirement. But the grade of coal like the coking and the high-grade coal, which is not available in country, will of course continue to be imported by the different sectors of the industry.
But non-coking coal, you are saying the coal imports will reduce to 0 by March 2026?
See, it depends on the market dynamics, but we will have adequate coal. We will have adequate coal to meet the requirement. But suppose some consumer wants to import because of certain requirement, it's their decision. But we will have adequate availability of coal through ramping up of our production.
Great. Mr. Meena, lovely talking to you. Thank you so much for taking the time out and speaking to us, and all the best with all the initiatives that you are taking.
Thank you very much.
Thank you. And viewers, thanks for tuning in.
The farmers' protests have been making headlines. Indian farmers have demands such as legal guarantee on MSP, pension and debt waiver, no hike in electricity tariff, reinstatement of Land Acquisition Act 2013, and more. But while the protest becomes important from the point of view of elections and politics, it's not just India that has its farmers agitated. The streets of Spain, Belgium, Hungary, and Poland have been roaring with protests by farmers too. Around 1,400 tractors took part in a protest in Poland, and roads were blocked across the country. What do they have a problem with? Rising production costs, falling sale price, stringent regulations. They say that the European Union is not doing enough to stop cheap imports from Ukraine, which is affecting the demand for local produce. They are also not happy with the European Union's Green Deal that's designed to zero out pollution by 2050 because it limits the use of pesticides, which in turn affects yield. In Greece, farmers have demanded lower electricity prices, tax-free diesel, and subsidized animal feed. In France, farmers have been fighting for improved pay and protection from foreign competition. The French government offered 400 million euros, that's $436 million, in various measures in reciprocation to their problems over low earnings, heavy regulation, and unfair competition from abroad. In Germany, farmers are against the government's decision to phase out tax concessions on agricultural diesel. Their argument is that this will lead them to bankruptcy. In Romania, the protests stem from anger about low prices for produce, rising costs, imports of cheap foodstuffs, and constraints imposed by the European Union's drive to fight climate change. In the United Kingdom, farmers are struggling to keep up with weather changes and war-related supply chain disruptions. The whole of Europe seems to have the agricultural sector in pain as climate change becomes a central focus and production prices increase. And no, it doesn't end there. As per Down to Earth, since 2023, farmers have protested in 67% of countries in South America region for a variety of reasons, such as wanting better export exchange rates and reduced taxes amid an extended economic downturn and Argentina's devastating drought, which has severely damaged crops and agricultural output. And look at this data. Farmers' protests have happened in 12 countries in Africa, 11 countries in
Markets end at record high as benchmarks gain for the fourth day in a row, outperforming broader markets. Sectoral indices close mixed. Economists expect slower growth in FY25 to dampen bank credit. Weakness in private consumption, uncertainty over external demand, and incomplete transmission of rate hikes may be key reasons, says a Bloomberg report. The Supreme Court rules MPs and MLAs can't claim immunity against allegations of bribery for casting a vote or making a speech in legislatures, overruling a judgment from 1998 in the PV Narasimha Rao case. The Ministry of Electronics and IT advises AI platforms to obtain explicit approval to use under-testing or unreliable AI models to ensure that their AI model does not permit bias or discrimination. The Delhi government allocates over 16,000 crore rupees to education, more than 500 crore rupees allotted to Delhi Metro in the state budget for FY25. Hello and welcome. You're watching The Reporter on NDTV Profit. I'm your host for the evening, Pallavi Nahata, and as always, the show aims to bring to you market headlines along with national and international headlines. Now, before we can move on with the show, it's time to see how D Street has performed today. My colleague Neeraj Shah quickly joins us for a quick market wrap. Neeraj, over to you.
Well, the markets ended flat today, but it was deceptive because the broader end of the spectrum had a corrective move. And if you look at the market breadth, that didn't look great. So while the Nifty ended flat and the Nifty Bank was up in the green, the Nifty small cap index 0.6% lower and the market breadth not looking good. Small caps 0.6% lower and the advanced decline ratio firmly in favor of the declines. But we'll come to the broad end of the spectrum in the Nifty 500 winners and losers. But first, the Nifty. So this is the market breadth, of course, which looked terrible. Now get the Nifty heat map and show you what moved and what didn't. So the positives first. NTPC, large capex, 3.5% higher for that one. HDFC Life, well, some of the life insurers are up in the session today, so that was a separate set. But PSUs, so NTPC, Power Grid, ONGC, BPCL, good moves there. In fact, it's a good move for upstream companies by and large. I'll show you how Oil India did as well in the session today. What didn't do well though? Eicher Motors, about 3% lower. There was weakness in steel companies on account of that brokerage note, CLSA, I believe. So JSW Steel down 2.5%. There was also some weakness in Tata Steel in the session today. And stocks like M&M, Britannia, LTI, Mindtree also had a bit of a wobble. Tata Steel, as I said, down 1.45% today. Now flip over to the NSE 500, winners and losers, and you'll see what I'm talking about. A lot of stocks came off and continue to come off. So the hospital stocks have an issue now ever since this whole thing about capping of pricing has come. Because if you look at the losers today, Rainbow Health, and somewhere we had Apollo Hospitals as the list of the top losers today. So that was down. Gland Pharma today was down, even though Lotus Labs was up. And the Network 18 TV 18 twins continue to sulk. 3 days on a trot now, ever since the deal has gotten announced. While the street was very excited about it, the stocks have taken a punishment. What's done well? BHEL, strong move. Data Patterns, strong move. Oil India and ONGC, strong move. And stocks like Tata Investment, strong moves as well. Broadly, mid-cap space corrected, but stable overall. And it's a kind of the day that you can take with both hands after the really strong move that we had in Friday's trade.
And from the markets to the economy, economists are expecting slower credit growth in FY25 as they say GDP in the year to moderate to about 6.5% or so. Mimamsa Verma joins us with more. Mimamsa, what are the key reasons for the slowdown?
So a slower growth in India's economy in FY25 is likely to moderate loan growth to 14% in the Indian banking system from the current 17% growth. A Bloomberg poll shows that the GDP growth in FY25 is going to come at 6.4%, sharply lower than the RBI's estimate of 7%. Now, the economists that NDTV Profit spoke to, they are citing weakness in private consumption, uncertainty over external demand, and incomplete transmission of rate hikes to be the reasons for slower disbursals in the coming fiscal year. Moreover, the added push in credit offtake, which came in from the merger of HDFC and HDFC Bank, is also going to fizzle out in FY25. While the RBI data suggests that the lending to NBFCs moderated in January, which was according to the last sectoral deployment of bank credit data that came in on Thursday, the economists are expecting the demand for personal loans is also expected to wane as the pent-up demand in goods and services, which was seen post-COVID, is going to normalize in FY25. So all in all, a potential slowdown in the urban consumption would deter the demand for credit, which we saw in personal loan segment in the last few quarters. On credit to industry, the RBI data shows a deceleration to 7.8% year-on-year in January compared to 8.7% in the same month last year. So uncertainty over external demand, geopolitical risks, and softening of commodity prices may continue to temper corporate credit in the coming months. The only silver lining that economists are betting on is a pickup in private capex in FY25, which could propel bank credit in a meaningful way.
Now, elected representatives cannot claim immunity against allegations of bribery for casting a vote or making a speech in the legislature overruling a previous 1998 judgment in the PV Narasimha Rao case. A unanimous judgment was announced by a 7-judge bench of the Supreme Court. My colleague Varun Gakhar joins us with more details on this verdict. Varun?
Supreme Court, a unanimous 7-judge bench has held that legislators cannot claim immunity for taking bribes because a member indulging in bribery indulges in a criminal act which is not essential for the function of casting a vote or giving a speech in the legislature, the court has held. The court has also said that immunity granted to legislators seeks to sustain an environment in which debate and deliberation takes place within the legislature. This purpose is destroyed when a member is induced to vote or speak in a particular manner because of an act of bribery. The court has also clarified the threshold for holding a person guilty for accepting a bribe. The offence of bribery, the court has held, is agnostic to the performance of the agreed action. The court has went on to explain that it does not matter if the vote is cast in the agreed direction or if the vote is not cast at all. The offence of bribery is complete when the legislator accepts the bribe, the court has explained. Now, the court has also said that corruption and bribery are destructive of the deliberative ideas of the Constitution, and it is not necessary that the action for which the bribe has been taken is actually performed. Now, overturning the 1998 PV Narasimha Rao judgment, the court has said that the ruling resulted in a paradoxical situation where a legislator accepting a bribe is conferred with immunity if it is followed through by a voting in the agreed direction. However, if the bribe is accepted and the vote is not cast in the agreed direction, no immunity would lie as per the 1998 judgment. Now, we don't have the written order as per yet, but as soon as it comes out, we'll get back to you with more details.
Google's Gemini mishap has prompted the Ministry of Electronics and IT to issue an advisory for AI usage, saying platforms need explicit government approval to use under-testing or unreliable AI models. Our colleague Rishabh Bhatnagar joins us with more details. Rishabh?
What we're hearing from the Ministry of Electronics and IT is that there will be an explicit government approval that a lot of these large AI platforms, actually large platforms that deploy models of artificial intelligence, generative AI, a lot of these models will require explicit government approval starting today. This was an advisory dated to these platforms on March 1st. And within 15 days, these platforms are now required to submit a status report to the MeitY on the actions they've taken. So March 16th is when we can expect something from these platforms as well. The biggest takeaway from this advisory is that platforms have been asked to ensure that their AI model / large language model does not permit any sort of bias or discrimination. And also that these under-testing and unreliable AI models be appropriately labeled by these platforms. And just a few minutes ago, we also had an update by the MOS IT who said that this only applies to large platforms and not startups. But again, we're not very clear in terms of what defines startups versus large platforms here. So will it impact an Ola Krutrim? That is yet to be seen. That's still a gray area, and we'll keep tracking that.
Right. RK Swamy opened for subscription today, and JG Chemicals and Gopal Snacks IPOs are to open this week. The three main board IPOs are looking to raise over 1,300 crore rupees collectively. Saloni Kothari joins us with more.
Yes, Pallavi, as you mentioned, another busy week in terms of primary market. RK label, which is RK Swamy, which has opened for subscription today, has already been fully subscribed on the first day itself, which has mainly been led by retail investors and NIIs. Now the price band is about rupees 270 to 288 and crore 288 per share, and the company is planning to raise about rupees 400 odd crores with a mix of fresh issue and for sale. The implied market cap is of about 1,400 crore, and the price to earnings ratio, which determines the valuation of company, is about 46.5x, which is in line with the peers that it has in the listed space. Talking about JG Chemicals as well, which is opening tomorrow, it is priced in the range of rupees 210 to 221, and it has an implied market cap of rupees 800 crore. Now the P is of about 16x, and it's a Kolkata-based zinc oxide manufacturer. Talking about Gopal Snacks IPO, which is a Gujarat-based FMCG company, it is going to open from Wednesday, and the price is ranged at rupees 381 to 401, and it is a complete offer for sale of 650 crore, which means the company will not receive any funds which it raises from the IPO. Now it has an implied market cap of about 5,000 crore, and the price to earnings ratio is of about 44x, which is very at discount compared to its listed peers, which is about 121x.
Thanks a lot for that, Saloni. With that, it's time to slip into a short break, but stay tuned. We have a lot more lined up for you on the other side.
Hello and welcome to NDTV Profit. Today we will talk about tattoos and the worth of this market. The history of tattoos in India can be traced back to prehistoric times when tribal people were captivated by drawings on stone or wood walls. Their attempt to replicate these figures through needles gave birth to the practice of inking skin. Over the course of time, tattoos were embraced by tribals as a mark of bravery, war, religious beliefs, customs, marital status, protection from the male gaze, and so on and so forth. Today, in 2024, tattoos have become a means to express thoughts, individuality, personal experiences, and sentimental designs. The industry is estimated to generate over 20,000 crore rupees per year. What is driving this growth? One of the key drivers behind the growth of the tattoo market is the rising demand for customized and unique designs. Improved technological equipment for making advanced, safer, and painless tattoos have boosted the market. The laser technology for removal or modification of tattoos have also added to the surge. Increased exposure and promotion of tattoo designs on social media have led to widespread influence of tattoo culture on the youth. Take a look at these figures now. As per Fortune Business Insights, the global tattoo market is projected to grow from $2.04 billion in 2023 to $3.93 billion by 2030 at a compound annual growth rate of 9.87%. This is a sharp rise from 3.8% year-on-year growth between 2017 and 2022. As per Custom Market Insights, the diamond jewelry market is expected to grow at a compound annual growth rate of 5.5% by 2032, while the luxury jewelry market at a rate of 8.9%, but the tattoo market is estimated to grow at 9.5%. Is the tattoo business lucrative? According to an article by Opportunity India, tattoo kits are now easily available for less than Rs 10,000, while high-end kits range from Rs 20 to 35,000. Now, in a city like Mumbai, the average cost per inch is Rs 2,000 to 2,500. In Delhi and Bangalore, the cost per inch is between Rs 1,000 to 2,000, and in Goa, it is about Rs 500. We spoke to a couple of tattoo artists in Mumbai and found that at an average, the business earns them a profit of Rs 75,000 to 1 lakh per month. In fact, as per an article by India Today, a person can earn a minimum of
Hello and welcome back. You're watching The Reporter on NDTV Profit. Now, India is forecasting a hotter than normal temperature up until May. This poses major threats to crops as well. As per Mrityunjay Mahapatra, Director General of the IMD, maximum temperatures are likely to be above normal in most parts of the country. What does this mean for the Indian economy going forward? To discuss this, we're joined by GP Sharma of SkyMet. Mr. Sharma, thank you so very much for taking time out for us.
Thank you.
So to start with, I'd just like to understand at this point, what is it looking like to you? Are you at SkyMet also forecasting sort of an early onset of the summers along with higher temperatures through the season?
Pallavi, SkyMet generally we are into the monsoon largely, that's a southwest monsoon, but then we keep a track and we do give some preliminary or the foreshadow on the other seasons as well. Like you rightly said, the pre-monsoon season. You see, we are going through an El Nino year at the moment, okay? and it's all an offshoot of the same phenomena. During the El Nino years, we do see that the heat builds up little early, little more than the normal. Heat wave episodes are more than the normal. Larger parts of the country, they get affected with the extreme heats. So that is in the offing. Though looking at the present condition, it may not look like, because we just had a good spell of snow in the mountains and widespread rain in the plains. It's pleasantly cool at the moment, but then not far away, heat is going to build up shortly. South India they already have extreme temperatures. Even the other day, state of Gujarat had touched the first 40 of the season, but possibly maybe give a lead time of about 2 weeks or so, we start having the heat catching up even the other parts also. Yeah.
Okay, so given what you've said, what is the expectation going forward? Like, for instance, last year, we did see, because of heat waves taking place earlier than one usually sees, we did see agricultural output taking a hit. This time around, is it too early to sort of be able to know what will happen on that front? Any reasons to be concerned?
Yes, rightly you said it's a little too early to preempt all those conditions. See, you talk globally. 2023 is, yes, it is official now, it's the warmest on record, surpassing its earlier record, which we had in 2016. Okay, 2023, it is, if you take the 20th century, it's about 1.18 degrees centigrade above that. Pre-industrial era, it's 1.35 degrees centigrade, which is huge. Okay, so the temperatures, whether it's on account of global warming, climate change, the human-induced climate change, and the other factors contributing, the temperatures are on the rise. It's possibly written on the wall that the temperatures are going to increase and increase. At least in the next about couple of years or so, maybe a decade or so, even if we start the measures now, it will show some effect only after that much time. So we can expect these temperatures to increase. Even January 2024 is the warmest on record. Okay, we have started the new year on an extreme heat note, where in January, like December 23 was the warmest on record out of Decembers. On the same track, even 2024 January is also. So keeping these in mind, we do feel that the heat is going to build up. And as far as the agriculture is concerned, obviously all these parameters, they are very, very closely related, particularly the heat and the humidity. When it is required, it should be there. If it is not required, it has an adverse impact on that. Okay, right at the moment, we have the Rabi crop. It's almost in the final stages. It has started coming also. Now the yield as such reaching the market. We will have some short break before the Kharif season sets in. But then the weather conditions are going to be a little, we can say, fluctuating this year. Why so? Because as I told you earlier, we are in the El Nino year at the moment. It's going on. We have a short break sometime before the onset of the monsoon, because before it turns neutral, and then we go into La Nina. So such vast fluctuations from El Nino to neutral to La Nina in a short span of time, it gives you a variety of weather which fluctuates the parameters, be it the humidity, be it the temperature, largely. It's not very convenient and beneficial for the crops many a times in many of the crops. Okay, yeah.
Okay. All right, sir. With that, we're completely out of time, but thank you so very much for those insights. So we'll be in touch with you over the course of the next few months for more. But as Mr. Sharma pointed out, we're already in a phase where we need to be a little precautious of the incoming summer season. The IMD and private forecasting agencies like the SkyMet expect this year also to be possibly among the hottest, and we're already seeing signs of the onset of an early summer. But now it's time to know what's trending online ahead of the 2024 general elections. BJP has launched their brand new campaign, Modi Ka Parivar. My colleague Drashika Ahivasi joins us with more details about that. Over to you, Drashika.
Yes.
Hi, Drashika.
After Lalu Yadav's jibe at PM Narendra Modi saying that he has no family, the BJP has come out with a coordinated response. Top party leaders including Amit Shah, Rajnath Singh, JP Nadda, Nitin Gadkari have all changed their social media handles and added Modi ka parivar to their names. During a rally, PM Modi had accused opposition party of dynasty politics, and Lalu Yadav responded by saying that the Prime Minister has no family. The remark has given BJP an opportunity to launch a campaign that reminds us of Main Bhi Chaukidar's initiative that was launched by BJP ahead of 2019 general elections. Back then, BJP leaders added Main Bhi Chaukidar to their respective social media handles to respond to Rahul Gandhi's allegations of Chaukidar Chor Hai against PM Modi. The 2019 campaign proved to be a huge success. Will 2024 be a repeat? It remains to be seen.
Thanks, Drashika. Now, Gopal Snacks is set to go public on March 6th with an IPO worth 650 crore rupees. NDTV Profit Sesha visited the company's factory in Rajkot in Gujarat to find out the story of the small entrepreneur who made it big as the company competes with giants like Haldiram.
If you are a Gujarati, you are probably already aware of the brand Gopal Snacks. Founded in 1999 and dubbed as the Gathia King, the company has focused mainly on Gujarat as its core market. It is, however, now looking to expand and is now eyeing a national presence.
Gopal Snacks is the story of a small entrepreneur making it big in a market estimated to be worth 80,000 crore. It competes with giants like Haldiram in the ethnic salty snacks market as well as PepsiCo and ITC in the western snack space.
कंपटीशन जितनी बढ़ती है इतना हमारी स्ट्रेंथ ज़्यादा बढ़ती है और उसकी वजह ये है कि हमारा बैकवर्ड इंटीग्रेशन है और फॉरवर्ड इंटीग्रेशन है तो वो हमारी स्ट्रेंथ है क्योंकि इसमें सभी में जो भी खर्चा बचता है वो हम प्रोडक्ट में डालते हैं और खाने वाले लोगों को कैसे अच्छा और सस्ता मिले उसकी हम एवरी टाइम केयर करते हैं.
With the help of his father, Raj Advani has started plans that will fuel Gopal Snacks' next phase of growth.
We have our portfolio varieties like for an example chips we have, extruded snacks we have, noodles we have. So we promote those products in all the states and we'll go much deeper compared to right now.
While Gopal Snacks has aggressive expansion plans in place, the company is grappling with debt and slow growth after the current promoter's relationship with his elder and erstwhile shareholder brother Praful Chandra Advani soured. To acquire his brother's 26% stake in Gopal Snacks, Bipin raised Rs 540 crore in debt.
And with the IPO proceeds, we intend to repay the debt. A few balance sheet ratios which are very important for investors to know. Asset turnover ratio which is 6.27 times, which is the best in the industry. Despite we have done a future capex investment, already invested in the business. Our ROC, ROE is one of the best in the industry. Now we have a professional sales team hired from various FMCG company and they are driving the sales. So we see a good amount of decent double-digit growth in the next
fiscal?
Next fiscal. The promoter is holding 93.5% of the shares, which is like the entire shareholding is with him.
Yeah.
We recently did a pre-IPO, which is at 4,000 crore market capitalization.
Okay.
Which was one of the transactions because we had to pay some coupon interest of our debt, which we took for buying stock. We did our road shows. We got a good demand. We have seen a good demand coming from the market. We are into discussion with various investors.
If we look at that 4,000 crore valuation, that means a 16% dilution from the promoter's shareholding. Is that correct?
4,000, you cannot take 4,000 as a number because it was one of the transactions that was done almost 4 or 5 months back.
Okay.
So definitely the numbers etc. will be worked out.
As the business scales, it remains to be seen if Gopal Snacks taps into the industry norm of leveraging celebrity power to create a stronger brand recall in the minds of consumers. With camera person Vijay Sartape, Sesha Sen reporting from Rajkot for NDTV Profit.
Breaking news coming in. Tata Motors to spin off business in 2 listed companies. Let's go across to my colleague Tushar Deep Singh for more on this. Tushar?
Yeah, thank you so much, Pallavi, for this. This is actually a big breaking news right after the markets closed, and you can call it the big reset by Tata Motors as it looks into an electrified future. So what has actually happened is Tata Motors is splitting its stock into two listed units, one which will house the commercial vehicles business and the other the passenger vehicle business that includes passenger cars like the Tiago and the Nexon and the Punch, the electric vehicle business, as well as the JLR component of its business. So that's the demerger that they're doing. Both the companies will now be listed. The demerger will be implemented through an NCLT scheme of arrangement. All shareholders will continue to have identical shareholding in both the listed entities. The demerger approval is supposed to take about 12 to 15 months. That's what the company is telling us, has said in an exchange filing. No adverse impact on the staff, customers, and operations due to the demerger. Now, what that essentially means, this actually can be seen as a natural progression of the subsidiarization that happened within Tata Motors 3 years ago. Remember, CV business was separate within the company. The passenger vehicles business was also a separate subsidiary. The electric vehicles was also a separate subsidiary. Now, Tata Motors is taking all the passenger components together into one company, that is a listed company, and the second into CV. So essentially, this is a reset of sorts for Tata Motors. Pallavi.
Okay, so Tushar, like you've mentioned, the demerger process will take about 12 to 15 months. Is that the timeline we're looking at for investors as well?
Yeah, so essentially, this is what we know at this point of time. So investors should look at this timeline itself. So Tata Motors, I'm sure it's aware of what it's going to do in the next 12 to 15 months. The NCLT approvals, how they come in. So investors should be looking at that kind of timeline itself.
Okay, so that's what we have on Tata Motors at this point, but Tushar and us here at NDTV Profit are closely going to be monitoring that new piece of information and bringing to you more updates eventually. With that, that's all we have for you on this edition of The Reporter, but stay tuned to NDTV Profit for more news and updates.
Amul has completed 50 years in India. PM Modi will attend the Silver Jubilee celebrations of the Gujarat Cooperative Milk Marketing Federation, the owner of Amul. At one point of time or the other, we've all grown up with Amul butter or milk for sure. The famous Amul girl created in 1967 is family. We all recognize her. But as the brand grows 50 years old today, do you remember the full form of Amul? It is Anand Milk Union Limited. From producing 250 liters of milk per day since the time Amul was formed back in the mid-90s to today, where Amul has over 36 lakh dairy farmers and produces nearly 300 lakh liters of milk per day, the brand has had a long journey. The story goes way back in time. In the 1940s, dairy farmers were worried. The middlemen exploited their ways of profitable income, and a poor milk production system made their living difficult. Tribhuvan Das Patel and Verghese Kurian identified these issues and helped in the formation of the first milk union called Kaira District Cooperative Milk Producers Union in 1946. The cooperative model gave farmers direct ownership of the dairy industry. The union helped them process, market and sell milk and milk products without the interruption of intermediaries. And it was in 1955 that this union chose a brand name for itself called Amul, which means priceless in Sanskrit. And then in 1973, Amul Dairy, along with 16 other district cooperatives, formed the Gujarat Cooperative Milk Marketing Federation, which has now completed 50 years in India. Amul also started India's white revolution that made our country the world's biggest maker of milk and milk products. The brand follows an umbrella marketing technique which has helped GCMMF prevent association clashes and keep an open door for the patrons to coordinate in creating items. As per a report by Statista, the annual sales turnover of Amul from 2011 to 2023 has consistently risen, recording about 55,000 crore rupees of turnover in 2022-2023 alone. And did you know, Amul has also held a Guinness World Record for having the longest continuous run of any advertising campaign that has ever taken place anywhere in the universe. Amul Doodh Pita Hai India and Utterly Butterly Delicious will always strike a chord. Let us know which famous advertising phrases of Amul do you remember.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career